You, Alicia, and you, Jen, thank you so much. We are kicking off the Bookkeeping-a-thon.
Yay!
An all-day live stream of most common and advanced bookkeeping questions. We're going to be demonstrating solutions on Xero, on QuickBooks Desktop, on QuickBooks Online. We are taking questions live because we are streaming this out to multiple places. In fact, in just a moment, we're going to pause and just check all those places to make sure that this is
make sure it's all working.
Out. And we the sole purpose for us delivering this education today to accountants and bookkeepers across the United States and anywhere else that someone is tuning into social media is for the Racial Justice Center's Building Fund. There have been some amazing programs, in fact, including some one-of-a-kind programs such as Harriet Stream, which have been in existence for a number of years in a beautifully renovated, leased commercial space. And the owner of the company who is running these programs wants some more self-determination as she leads the way towards racial justice and racial healing. And for the Black community, particularly for Black women, but not exclusively for Black women. And she's looking to purchase, build, or renovate a building. So these programs, which are part of Catriceology and the Justice is Love Coalition, can be moved into a building owned by the company. So this is part of a crowdfunding campaign. The education that we're going to deliver today we deliver to the community for free. We're not receiving payment for this. However, if you are watching, we would love for you to click on the GoFundMe link that we're going to share in the threads. You've probably seen it on all of our social media groups and channels. We're running this in hopes to inspire you to click on the GoFundMe link for this crowdfunding campaign and send in a financial gift so the programs for racial justice and racial healing can be moved to a building owned by Catriceology Enterprises and become known as the Racial Justice Center. So I'm really excited to be delivering this as a community, to help a community to thrive. And I'm going to just pause right now and let's check our social media channels, make sure everything is streaming as we think it is.
Yeah, I'm not sure. So everybody, if you are seeing this, forgive me for a minute, but I'm not sure if we are actually streaming. I see that we are live on my YouTube.
Facebook is live.
Your Facebook is live, mine are not. So if I don't see mine, I'll go on and share yours.
Sounds good.
I'm not seeing them on mine.
I'm refreshing all of my destinations also. I don't yet see a live stream coming through.
You do or you don't?
Not yet.
Not yet. But Jen, you do?
Mm-hmm.
And where is it? On your personal Facebook page?
Yeah, if I go to my personal Facebook, it's right there. It's 2 minutes in, 3.09 minutes or whatever. 3 minutes.
I'm going to your Facebook page then.
Don't ask me how that one worked when the other stuff didn't, but
well, you're winning on that.
I'm not going to ask questions.
Yeah, I see it. There it is. So I'm going to grab that link, copy link.
I'm going to go do the same thing because I'm not seeing it on mine. I see
Sounds
yours,
good.
Jen.
I'm not going to change anything. Don't want to break it.
Okay.
Let's see. Something went wrong. We're working on getting it fixed as soon as we can. Okay, going to try that again. Okay, hang on. Now I've got it live on my page. It's going to take me a minute to get this on to all the pages. And then we are looking forward to sharing solutions to a lot of bookkeeping questions. We're going to do lots of screen shares today. We're keeping an eye on threads. So I know that we have at least someone so far in the live stream. You can feel free to post your comments and questions, and we would like to address those today. Okay. copy and paste. I'm just picking.
Okay, I got my first share out.
Oh, good. By going through my page, I can get this into a bunch of groups at once.
I'm going to see if I can do the same thing on LinkedIn.
Let's see if that's working.
A second one up. Hey, everybody. Thanks for your patience while we spread the word.
Yeah.
All right, now I want to go see if it's in 2 places everywhere.
Okay, we're into Excel Accelerated.
All right, I got a message that says this content isn't available right now. Jen,
Yeah.
can you make sure, Jen, that yours is set for sharing?
Yep, absolutely.
No wonder why mine isn't actually working.
All right, try now.
Yes, that is now working. Sweet.
I love it when the fix is an easy one, right?
Yeah, really. Okay.
Okay.
There's the second stream. And
In
page.
the Accounts Coffee House.
Sweet. All right. Good.
I still have more groups to do. Hang on. I'm posting it in Accounting Firm Leadership.
So I was hoping to use that thing where it shows the comments, but because we had to share it out. Wait. Sorry.
Media groups and channels.
Made a loop.
We're running this in hopes to inspire you to click on the GoFundMe link for this crowdfunding campaign and send in a financial gift. So
okay, now you're gonna have to mute tabs.
Keep trying to toggle between my pages, but the mute button is getting me.
All right, so I've got all my pages up, although it's not going to be able to use my restream thing to monitor the comments. But okay. So thank you everybody for being patient with us while we while we dial in this technology. We're using this really cool tool called Restream, where it allows us to stream in multiple places and we can all stream. And so right now we're getting it all set up. So pretty much wherever you go on Facebook today, you're going to see us. But we would absolutely love it if everybody who sees us today would ask us questions to guide the conversation. Is a bookkeeping-a-thon, which also means that the more you contribute to the Racial Justice Center, the longer you'll keep us on. If you want to see how long you can make us talk, the more money you contribute, the longer we will be here. We have a little spreadsheet going on that shows us how long we are going to be here for, and as long as it keeps filling up, we will keep talking. For the bookkeeping-a-thon today, it's your questions about bookkeeping in general. It's your questions about QuickBooks. It's your questions about Xero. We can do screen shares. We can do trainings. Some of it will be like software training, and some of it will be industry conversation as well. And Jamie, you spoke a little bit about the Racial Justice Center, and this is not your first a-thon for fundraising for them. You also did an Excel-a-thon a few months ago. And so like, so obviously this is an issue that you're extremely passionate about. And so what's inspired you to take action?
Wow, Alicia, thank you so much for asking. One of the things that the three of us have in common is that we want the world to be a just and equitable place. And we want the world to be a meritocracy. And it has come as a surprise to all of us as white women to find out that the meritocracy that we thought we lived in does not, in fact, exist for everyone. We abhor artificial barriers, and racism is an artificial barrier to a person enjoying the rewards of their own efforts. And racism it creates unmerited and unearned privilege on our part at the expense of people who don't receive it. And it's bigger than one person, it's systemic. And when I learned that just like being nice to everybody is not actually how you solve racism, I realized that there was so much more to learn, that I was proceeding on my own good judgment, which turned out to be terrible judgment, because I live in the United States, and most of the United States is centered around people who look like me, and I thought that the world was much different from what it was. And when I realized that I was living in an unreality that at the expense of people of color, especially Black people, that's not a situation that I could tolerate anymore. And so I started learning on a formalized basis from Black leaders of color, or leaders of color, especially Black women, who have created careers in the field of anti-racism. And I received training that was specifically for white women, in which I learned even more about how the world that I grew up in and the way that I learned to think actually centers whiteness at the expense of Black and brown folks. And I just continued to deepen my education, to learn to follow, to listen to Black women and to people of color, to believe them. And then I joined the Socially Conscious Women's Collective, which is created and led by anti-racism author, speaker, and educator Catrice Jackson. And my learning over the past year plus has just really, really deepened. And I've learned that anti-racism is a journey that's going to last the rest of my life. I will never get there. And as much as I can come to understand with certain parts of my brain what people of color, especially intersectionally Black women, live on a regular basis, I am at risk of causing more harm at any moment if I'm not diligent. And so I really got that this is a journey for the rest of my life. And I just can't tolerate a world in which I'm causing more harm. And so that's what brings me to the Bookkeeping-a-thon today, is that Catrice has created these amazing programs for racial justice and for racial healing. She wants them in a permanent home, so she has more control and more say over what happens there instead of a leased space. And I thought, if there's a way that I can combine my professional knowledge with my desire to see the world be a just and equitable place, let's do it. Mm-hmm. And I'm over the moon that you and Jen have decided to join me today. In fact, Jen joined me for a couple of hours in my last a-thon, in my Excel-a-thon, and we had a blast. And it was, oh, Jen, I can't hear you.
Yeah, I didn't know what I was getting myself into, but I love it.
It was, it was powerful.
With both feet, like she is all in. And with these kind of events, I absolutely love that she's so committed to achieving an impact with them.
Mm-hmm. Thank you. And thank you for being part of this. And just what kept motivating me during that Excel-a-thon was continuing to see the financial gifts go into that GoFundMe, which we're keeping an eye on today. We will be here. We're keeping an eye on those numbers. The more money that's sent in to the GoFundMe for the Racial Justice Center, the more high value bookkeeping solutions we will provide today. So Alicia, thank you so much for that question to kick us off. I also want to give a quick shout out, and we'll give multiple shout outs throughout the day. I want to give a quick shout out to our two sponsors, Practice Ignition and Zero. Let me tell you, these folks did not hesitate when to become sponsors of this event. When I told them what we were doing, why we were doing it, I told them about the Racial Justice Center's building fund, they said, where do I sign? Like, sign us up. We love what you're doing. We love the cause. And we're here working every day to advance the accounting profession. And we're very, very glad that Practice Ignition and Zero have decided to sponsor this event. So definitely show them lots of love, and show your love to the Racial Justice Center Building Fund with your dollars. You can click on the GoFundMe link that is in the live stream. And Jen, since I think a lot of this is going from your page, can you make sure the GoFundMe link is in your live stream, like the original share, so it's in all the others? Thanks. Absolutely. All right, beautiful. So I'm going to quickly check the places where we're streaming in case any questions have come in. But I do have a starting list of questions that have come in. They're both, some of the questions that have been asked are common bookkeeping questions that I know that will help a lot of people watching. Some are much more advanced, and we're going to dive into all of them. All right. So one of the questions I have here, a bank account that was closed years ago is still showing a balance in QuickBooks Online. How do I fix that? So this is a QBO question. Alicia, I know that you're a big fan of QBO. Do you want to log into a demo file or a sample company file and share your screen, show some techniques?
Okay. Well, so yeah, let me go ahead and get into a sample file. So if an account has been closed, but it's still showing a balance, my first question for that is are you still connected to the banking feed, or is it that you're not connected to the banking feed and you're just seeing it in the chart of accounts and there's a balance there? Because when you inactivate a balance sheet account in QuickBooks Online, if you didn't zero it out first, what it actually does is moves the balance to opening balance equity. So that right there tells me, okay, the account is still active in QuickBooks. So the next corollary piece of that is, well, where'd the money go? So when they closed the account, that's the first thing that you have to trace. And that's not even a QuickBooks question. That's more of a bookkeeping question, that when an account closes, you have either withdrawn the money and put it in your pocket, or you have transferred it to another account. So if you're properly reconciling your accounts every month, then you should kind of know, or at least be able to figure out where that money went. So that's the very, very first thing to do, is just do your due diligence and find the history and see this amount went to the savings account, and this amount was moved to the operating checking account, and this amount was moved to this whole other bank, and this amount, well, there's only $300. So the owner's like, oh, I'll just, take the staff out to dinner. Like, where'd the money go? And so that's the reality of that question is, just finding out the history. It's not even a QuickBooks thing. It actually, in this case, has nothing to do with your software. It's just finding out where it went. If you think that you've already transferred the money out, then you have a clerical error, because there's a balance. So that's my advice for that one is, find out where that balance is. If there was another transaction that was supposed to represent this, then it wasn't created correctly, and you have to make sure that it's the transfers on both accounts properly. Once it's to zero, you'll see both zero in the register. You'll see zero in the banking feed. Then you can disconnect the banking feed. You can then inactivate the account. Usually, I don't inactivate account until it's in the prior year. So I wait until year end before inactivating any accounts. once you have inactivated an account, it still shows in all your reports. So you could inactivate it immediately. It's totally fine. It'll just say, bank account deleted in your reports. And it's fine that it says deleted. It just means that it's hidden, it's inactivated, but you can still see it on the prior reports.
I will add to that,
Beautiful.
one of the challenges we have with accounts that get inactivated or changed is if you have anything set up in your mapping, like for instance to payroll, and you have a payroll mapping set up to that old account and you don't update that, and your payroll runs, it's going to hit that account. And you cannot go back and change it if you're on e-file. So you will end up with scenarios if you have an account that is mapped specifically through a module in QuickBooks that is blocked from edit access after the fact. Sales tax and payroll are the two most obvious offenders in this case.
Yeah.
Entries in those modules and you inactivate the account, but you don't change the mapping that is set up in those modules, it's still going to map to the inactive account. It's not going to know that you want to go into another account unless you go in and change those settings. So one of the biggest reasons that I see this particular error show up is because of that. It isn't always necessarily because you closed an account and you moved the money to another account. It's because you decided maybe you still have an account, or you closed it and you moved to another account, but you didn't retain or change the mapping when you did that adjustment, and somehow it didn't get noticed when you were updating the books for the coding on that account. So you do need to go into those payroll settings, and there's actually 2 places in QuickBooks that have payroll settings. You have to update it in both places. If you don't, you'll end up with little stinkers like that.
Yeah.
So that's the nice way of putting it, because this is a G-rated show.
And it looks like we have a follow-up question that has come in. Alicia, do you see it?
I do. Before that one comes in, I wanted to add one more place. And Jen, I think your video is frozen.
All right, let me close it. I'll start again.
Okay. So what Jen just said about making sure that all your integrations are now pulling from the new accounts, it's also really important that you make sure that all of your integrations from other places outside it are also updated. Right now, I'm dealing with the fact that my retirement plan is, I used to have my operating checking account and then my tax and payroll checking account. And I recently signed up for the QuickBooks Cash payroll, the QuickBooks Cash account inside QuickBooks. And I could totally digress and talk about that one as well. But I started using QuickBooks Cash as my payroll bank account, and I connected my QuickBooks Payments Merchant Services. So all of my customer payments were coming into it, and then it's kind of my dedicated payroll account out. But my retirement account is mapped to that other bank account that I now want to close. And I have been going through hell. The interface where I do my simple IRA deposits has no controls whatsoever for me. And so I had to go figure out who my broker was who set it up years ago and contact my broker and get a notarized thing. And so it's still drawing out of that account until I get all this paperwork done. So I have to keep transferring money into this empty bank account just to handle the retirement account. So make sure that all the places that are auto drawing for, your annual subscriptions, those could keep drawing out of closed accounts too. So
thank you. Oh God. I mean, you're talking about the movement of cash. You're not even talking about right? I mean, not even the bookkeeping entries. Yeah. Interestingly, we got this great follow-up question from Nasir, which is, it really draws a distinction between whether or not we have the scope of service or the information available, frankly, to go back in time and say, look, we have a closed account, but in QBO there's a balance. How do we fix it? If we have the scope of service and the information available, we can go back and look at those transactions and fix it. However, if the scope of service does not include that kind of, going back years ago, what do we do then? What's the bookkeeping entry? So I love this question. If a checking account has never been reconciled since 2018, if the client asks you to reconcile January 2021 through October 2021, and there's a difference as of 1/1/2021, and there's a difference of $1,000, how can it be adjusted? So I'm going to give you an accounting answer, and then Alicia, if you can demo this in QBO, that would be fantastic. The accounting answer is, so first I look at materiality. And in my opinion, $1,000 is not a reason to go back and refile a tax return for a closed period. So either I show I make an entry dated January 1st, 2021, and that's either a deposit or an expense. You can do it with a journal entry. I'm not a huge fan of journal entries in the bank account. But you can record, right, a deposit or an expense, and put that deposit or expense between the bank account and an account on the profit and loss that makes sense. If it's a deposit, you're going to record it to an income account. If it's an expense, you're going to record it to an expense account that, that's, you don't know what the 1,000 is attributable to in a prior period. So you pick one that's not going to be materially thrown out of whack when you look at the current year's financials. You're not going to look at this one account balance and say, wow, that's tremendously different from what I thought it was going to be. Why is that? You don't want to throw off the decisions that someone's going to make when they look at the financials. So that's my accounting answer. Alicia, can you show us the clicks?
Well, so I know that you're asking for a demo, but I'm not sure exactly what I would demonstrate on this one. But I have more to add to this question here. So Nasir, the thing is that you can't really reconcile a current year if you haven't reconciled the past years. But like Jamie said, if it's not in your scope, there's nothing that you can really do about it except shrug it off. But the problem with not reconciling the previous years is that $1,000 might not just be one transaction that you have to pick a place to put it. That transaction could be $10,000 worth of income and a missing $10,000 of income and a missing $9,000 owner draw. Like, it could have bigger repercussions than just $1,000. So, but if your client isn't willing to pay for it and they just want to plug it, it's not material enough, like Jamie said, to argue the point. And so, deciding what you want to do with that $1,000 is, is it, like she said, is it income? Is it expense? Usually I go to owner draw is my personal default for where I'll put those discrepancies, because if the owner isn't going to account for what really happened in actuality, then it's their personal decision. So I make it their personal money. So I'll make it $1,000 owner draw or $1,000 owner contribution. And
I will typically do the same in that case, even if the amount is small, just because, worst case scenario, if they get audited, we can show that we did our due diligence to the best of our capacity. So you've got to be able to show that. You have to actually ask the question, what is this $1,000 difference? And if they cannot answer it, then in my opinion, as the bookkeeper, the safest treatment of that is to dump it into owner draws, because worst case scenario, they will end up overpaying their taxes as a result of that. What's the worst thing the IRS is going to do? Say, oops, you're bad, here's a small refund? Like, that's the worst, that's the worst consequence of that.
Right.
So I prefer to hit owner draws in that case if it is an expense. Now, if it's a deposit, that's a little bit different. And like Jamie said, this is all about materiality. If you've got a $1,000 adjustment that you need to make on an account that only ever has interest on it, there's a problem that cannot be resolved with this particular technique. So it really is it's not just materiality on the total numbers going through this account. It's also what is happening with this account that you're trying to reconcile. What's the history with this account you're trying to reconcile? It doesn't make sense that there would be a $1,000 deviation, or is something really wrong? Because you may need to ask more questions and say, look, we're going to have to do a small project out of scope, additional fee, just to get this account sorted. Because the reality is that it's possible that that entry can cause more problems later. The other thing I'd like to point out is that anytime you've got a discrepancy in reconciliations, like Alicia said, it is not just one problem. If you've ever heard of the term double entry accounting, any entry that's wrong has at least one other equal wrong entry.
Right. Okay. So one error is two.
It's not just one error. This has at least one other error that is creating this, because everything that happens has two sides to it. So you might have $2,000 errors, or you might have $1,000 errors and $1,001 errors. But either way, it requires an
Ooh.
additional research. And you may have to, in this case, depending on the materiality of that balance, and if the customer, your client is okay with absorbing the impact of that $1,000 on owner draws, I would put that decision in front of them and document what that decision was and the why.
Mhm.
Beautiful. And Nasir is asking a really smart follow-up question. And it sounds like an approach similar to what you and Alicia were just talking about. It says, but I debited retained earnings and credited the checking account. So it sounds like the checking account needed to be reduced to make that difference go away. I'm not a huge fan of debiting retained earnings, but you two were talking about debiting owner's draw, which is in the same part of it's the same part of the balance sheet, right? It's the same part of the financials. I hesitate to make entries directly to retained earnings. If you do need to do that, notify the tax preparer, so then they can make an accommodation in the tax return. My approach is to have it hit the P&L because it didn't hit the P&L in a prior year when it should have. Jen and Alicia's approach is to have it go through owner draw. That also has merit. So, my response to that is if you want to go through retained earnings, then go through owner draw instead, or depending on the entity type, it might not be called owner draw. It might be called owner distribution or member draw or member, or partner distribution or something of that nature. But yeah, I wouldn't go to retained earnings directly.
So Nasir, the thing with that is that retained earnings is where it's going to wind up in the long run, but you want to put it to owner draw first, and then at your year end when you close out your equity. And closing out equity isn't something that most beginning bookkeepers even know is a thing. Not saying that you're a beginning bookkeeper, but it's something that a lot of people don't even know to do. But at the end of the year, depending on your company formation, there's different approaches to it. But what I do for most of my small businesses is I look at what their owner distributions were. And at the on January 1st, I move that balance to retained earnings. And I do the same thing for contribution backwards the other way. So eventually it does hit retained earnings. So your approach isn't technically incorrect, but it doesn't account for the actual flow of money for the activity for the year, and it changes the accountant's records because you haven't taken that first step. So instead of going direct to retained earnings, hit equity first. Then when you do your year end, it'll get wrapped up to go to retained earnings at the end.
So let's do, I have a sample file up on my screen. Let's just do a quick, now that we know that we're crediting cash, let's do a quick demo of that. Alicia, help me know what to do to share my screen.
Circle in the bottom center that has a screen with a red line through it.
Yes.
That's your screen share.
Okay. Aha. Excellent. Screen 1, screen 2. Can you see my screen?
Now everybody can.
Yep.
Excellent. Craig's Design and Landscaping. Okay. So this is a sample file. I'm not outing Craig. And I'm just going to click on New here. And in the Vendors section, I'm going to create an expense. And we have no idea who was paid. So, you can do one of two things. You can leave it blank. Or if you have someone in your vendor list that's not an actual person, but in essence, a series of characters, so you can run a report like, who are all the people that we didn't know, but we create an entry, like unknown, right? Like you can, unknown. You can have, in general, I prefer to have a field because then you can run a report by that field rather than just leave it blank. You can't run a report by what's blank, but you can run a report by, well, hey, what were all our unknowns? Payment date, so that would be 1/1/21. And the category, let's look at what's in the sample file for equity. There we go. Just opening balance, equity, and retained earnings. So we need to add an equity account, and we're going to call it owner draw. Add owner draw. It's an equity account.
It's still so bizarre to me that the QuickBooks sample file doesn't have owner equity as two default accounts.
Right, yeah. Okay.
There isn't anybody who
and
doesn't need them.
Just, fine, whatever, today. Fine. I'm not, can I save this without entering that in? 0?
What's that? Yeah, you
I
can
don't-
leave that blank. That's fine.
Good. Save and close. Okay, now here we put our description. To adjust 2021 opening balance of bank account. And here we have our $1,000. We save and close. And then when you do a reconciliation for that bank account, you check off that entry. So the clicks are accounting, and we're going to reconcile. And you know, I didn't look at the bank account. Did I choose the right one? We're going to do it. So you're going to actually do a 1/1/21 reconciliation. So let's say the opening balance that you need to reconcile to is 4, 5, 6, 7, 8, 9. The ending date is just 1/1/2021. And you start reconciling. And here's that payment of $1,000. You check it off, and you'll see that the difference becomes 0. And then from that point on, you can do your 2021 reconciliations as they should be.
Mm-hmm.
Thank you for that quality question.
Yeah, that's awesome.
The other
And-
alternative, by the way, on that same screen that you were just on, is you can do an interim reconciliation, just that one reconciliation for that
Yes.
one item dated 1/1, and then you pick up the next reconciliation on 1/31/21 that picks up the actual January activity.
Yes.
I tend to deviate, or I tend to defer to that technique because this transaction is not a true reconciled expense it deviates from the norm. So I don't like to include an anomaly in my standard process.
Yes.
So in this case, I would actually have 2 reconciliations that are dated in the month of January 2021, one of which only has one little transaction in it, and it's just to get me that opening balance right.
Right. And I used to include it in the next upcoming, and it was actually maybe 3 months ago where I decided to just repeat my previous reconciliation to tie up any loose ends before starting the next one. I used to say, oh, just start your next reconciliation. It'll be there for years and years and years. And just recently I was like, I don't think I want to do that anymore. I want to just re-reconcile. Just repeat the most recent reconciliation, pick up all those strays, and then go.
Exactly. I find it to be easier, especially because the clients I work with tend to be smaller business owners in the 0 to million range. That's like my sandbox is, getting you through that first dollar you earn to that first $1 million. I love that space. But unfortunately, if in that space, it also includes a lot of hands-on training, a lot of the customers or the clients doing their own books in some cases. So what I decided, the reason I chose to do that was because the familiarity they develop in viewing a reconciliation screen and knowing that their opening balance is right and that their ending balance is right and that they understand every transaction that happened is so valuable and is so much more insightful for the client to do this themselves at the early stages of their development, that having an anomaly in there interrupts their ability to learn the right way because they start to get used to anomalies being the norm.
Yeah.
It shouldn't be. I should be the one doing the anomaly reconciliations, not the client. The client should do the regular ones. You need to know those 50 transactions, what they are, inside and out, up ways and down ways, and everything about them. But the anomaly, let me handle that. So that tends to be the direction I go with.
Well said. This was fantastic. This was a great first question. I wanted to give a huge thanks to our sponsors, Xero and Practice Ignition. And I want to tell our viewers a little bit about each one, and then I'm going to tell you a little bit about the Racial Justice Center, and we'll move into our next question. I have a message for you from Xero and one from Practice Ignition. From Xero, we've got Xero's cloud-based accounting software has been recognized globally as a leader in the market by a number of business software review platforms. Track your business on the go and be confident in your numbers wherever you are, with greater control leading you to better decisions. Keep records tidy and make compliance a breeze with Xero. I'm smiling because Xero is one of my favorite accounting systems, and this is just true. I know that this message came from Xero, and it sounds like a little bit corporate-y, but this is my life. This is my daily experience of working with Xero and serving clients in Xero. What, Alicia?
So is your practice mostly Xero, or do you do QuickBooks also? Or
I would say our practice is mostly Xero. We have clients on QuickBooks Desktop. We have clients on QuickBooks Online. And in a lot of situations, and in some situations, those really are the more appropriate platforms. And in a lot of other situations, we find the advantages of Xero are just tremendous. Between the two tracking categories, the in-software uploads. In fact, I have a question about that, about those uploads. Can't wait to get into that. The fact that it's like reconcile as you go and you don't have to do a whole month-end process. I mean, the time savings in there increase capacity like crazy. And I also like the reporting better. Most of it, most of the reporting.
Later on, that's actually probably my question to you would be, like I took a look at Xero early on. I made my own account, and my intention was, well, let me keep my personal in Xero so that I can learn how to use Xero. But at that point, I was like, okay, wait, now I'm working in two systems. And so I put it all back into QBO. But I know that people love Xero, and I know that there's things that it does better than QBO. Okay, into it, you didn't hear me say that, but I know some things, they all have their strengths and weaknesses.
Yes, they do. They do.
But so I'll be curious later on. That's my question on your list is, what are the things that you like in Xero better than QBO?
I will add that to my list, Alicia.
Add that to your list. We'll hit that one around 4 o'clock or so.
Hold on a minute here. Let's add it in. What are the things that you, Jamie, like better in Xero than in QBO? Great. And I see that a great question has come in from Richard. So after I share just a little bit more about our second sponsor and the purpose of today's bookkeeping-a-thon, I can't wait to answer that fantastic question from Richard. Oh my God. This question from you, Richard, is so up my alley that I feel like you're a plant. Like, is this for real? Like, we don't even know each other, but this is great. I can't wait to answer your question. So I want to thank our second sponsor of today's bookkeeping-a-thon, and that is Practice Ignition. Like Xero, they did not hesitate to jump at the chance to support the accounting profession and put racial justice front and center, since this is a bookkeeping-a-thon to raise money for the Racial Justice Center Building Fund. And this is our message from Practice Ignition. They say, win clients, get paid every time. I'm going to interrupt their official message to tell you this is the sole reason why our firm moved from Microsoft Word for our proposals, which looks very nice, to Practice Ignition, because we didn't want this awkward pause between, well, they signed, but they didn't pay yet. What do we do? Who's expecting what? Or they paid, but they haven't signed yet. What do we do? Who's expecting what? It got awkward. It became like more time that we needed to spend having those conversations, saying, yes, please do this. You paid, thank you. Please sign the contract. Or you signed, thank you. Please now send in the payment. Here's how. It was a waste of time, and sometimes it was awkward. And we said, there has to be something out there that exists such that the client signs our contract and money automatically starts to move. And that is what we found in Practice Ignition. They also say, and rightly so, run your business like clockwork with automated proposals and payments in one convenient client engagement and commerce platform, so you can focus on what matters, your clients. Yes, this is a true and authentic message. This is my day-to-day experience with Practice Ignition. Plus, the co-owner of my firm, hooked up Practice Ignition with Slack. So he gets notified every time like a proposal is won and money's moving.
Oh, that's cool.
I know. All right. One more message. I want to remind everyone why we're here today and what I'm inviting you to do. The reason why we're here, live streaming all day, providing answers to your bookkeeping questions, the common ones, the advanced ones, doing demos in Xero, QuickBooks Online, and QuickBooks. We're here to raise money for the Racial Justice Center, the Building Fund. There are a number of programs for racial justice and racial healing being offered right now, such as Harriet's Dream. These are offered for Black women and for the Black community in the United States, and they've renovated a leased space, but there's nothing that says that helps you have control over your own programs like owning a building. And so the purpose of this crowdfunding campaign is to raise money to either purchase land and build or to purchase an existing building and renovate. And I'd like to invite all the people viewing to click on the GoFundMe to move some money into this campaign, make a financial gift. You can click on the GoFundMe, click donate now, enter in whatever amount you'd like to send in, if it's $25, if it's $1,000. JP, thank you so much for commenting your enthusiasm and your love for supporting racial justice. It would help me to be accountable if after you entered in your information, you scroll down just a little bit more, and in the section that says donation details referred by, if you could select my name, Jamie Campbell, it will help us to track. It will help me to be accountable to Catrice Jackson, who is leading this campaign. It will also help the Bookkeeping-a-thon be longer because we are watching, and the more money comes in, the more bookkeeping solutions we will provide today. So thank you in advance for clicking on that GoFundMe link and moving some financial gifts to support racial justice in the United States. Let's answer that next question that has come in from Richard. How does Xero work for nonprofit accounting specifically? Boom, boom, boom. And he also names one of these specific areas that's really specific to nonprofits, which is tracking restricted funds. Another example of being specific to nonprofits, of course, is functional expenses. Another one is grants. So I'm happy to speak on that, but Jen, I know that you also use Xero for a nonprofit. Is that something that you'd like to speak about, and then I'll chime in, or do you want me to start?
So I think you are absolutely the Xero expert. There's no question that among the three of us, you know Xero far better than any of us. However, I will say one of the most notable things that kind of popped up for me since I started using Xero is they had this little alert that popped up when I logged in one day that said nonprofits have a reduced subscription price or something along those lines. Basically, Xero offers a discount to nonprofits. I don't remember ever seeing that from QuickBooks. It's possible they have it, but they haven't advertised it and they haven't pushed it out there and they haven't promoted that like Xero has. So as an advocate for nonprofits, if you're looking at either option, I would defer to Xero. I think that they've put a little bit more effort on the table to make it a software program that really does merit going into that program for a nonprofit, not only because of the structure they have, like for instance, the being able to track restricted funds. And this is the stuff that I know Jamie can talk about at length. But more importantly for me as the accountant, when I have a client come to me and say, which program do we want to use? We're on an outdated system, for instance, we need to move into a better program, or we just can't get analytics from the system we have. What's another better program? If it is a nonprofit, that one experience for me of seeing that little pop-up that said, hey, by the way, did you know that nonprofits get a discount, a special treatment? That stuck with me. And as an accountant who's giving advice to clients on where to go, that means that I'm going to consider them first.
Thank you for sharing that, Jen. And as far as I know, QuickBooks Desktop does not have a special nonprofit rate, but QuickBooks Online does. However, you're right, they don't promote it, and a lot of people don't know about it. As recently as this morning, I read that an accountant was feeling frustrated because they serve a nonprofit that was converting from QuickBooks Desktop to QuickBooks Online. And they said, but oh my gosh, $80 a month. Like, does it really have to be this way? And that person didn't know that you can go onto a website called TechSoup, techsoup.org, techsoup.org. And what happens is Intuit like donates licenses to TechSoup. And then TechSoup charges an administrative fee of, I don't know, something like $75 or $150 a year that goes to TechSoup to help them maintain their operations. So in essence, somebody can go and get QBO for whatever it is per year, like $75 or $150 a year. If they're a nonprofit, show the proof of tax exempt status, blah, blah, blah. But a lot of people don't know this. Even people in the nonprofit sector don't know this. Intuit has not done a terrific job of getting the word out. It's really accountants who are doing the heavy lifting there. Whereas, like you said, you log into Xero, there it is. So, and that's 25% off, by the way. And along those lines, Xero has a lot better deals that I've seen coming from Intuit. We just got a new nonprofit client with both an operating nonprofit and a foundation, 50% off for 6 months. That beats the nonprofit rate. So in our project management system, we actually created a task for 6 months from now to then sign them up for the nonprofit rate 25% off after the current promotion is over. I know, right? So as far as pricing goes, Xero has some pretty good deals. It helps to have a direct line to a Xero rep. Mine is Brian Gerson, and if anyone wants his contact information, definitely let me know, and I will be more than happy to make an introduction.
I will add one more thing to this, if you don't
Please.
mind, from the perspective of history here. If you are on the fence about which company to go with, and I understand that this is opinion and only, but Intuit raises their prices a lot, and there's really very little you can do about it. And when they push it out and they tell you what date it's going to update, you either accept it or you leave. Xero has not done that, or at least they have not done that nearly with the same aggressiveness that Intuit has. Intuit has been incredibly aggressive with their pricing, and they're incredibly aggressive with pushing updated or upgraded files with features you do not need. So I have a number of clients that have come to me and they are currently on QuickBooks Advanced, never needed it, never used any of the features that came with Advanced, but now they're paying $180 a month because they kept getting these ads from QuickBooks saying, you've got to upgrade. Do you want to upgrade? Look at all these features. Look at all this great stuff. And they do it because they don't have an accountant saying, stop. You do not need this. And the problem is once you get into the advanced version, it's really hard to get back down without losing some content. So they make it very challenging. Intuit has built their system around those fees. Unfortunately, from the accounting perspective, it does sometimes feel like they built their company on our backs. So we have a little bit of a history going on with a lot of accountants where we're a little unhappy with Intuit in many respects. But we don't have that same vibe with Xero. And as an accountant working with them, that means a lot to me.
Their fee increases don't come as frequently, and they're small. Like they send out tons of communications and they're like, we're so sorry, we hope you stay with us, so please, please, please. And it's increased by $2 a month.
Yep. That's doable. That's doable.
So let me show Richard, let me show you the answers that you were talking about. And I'm going to do this with a live demo. And so let me click to share my screen. And hold on a second. Hold on. I have too many browser windows open. Where is everyone? Hold on. Okay. I'll be ready to share my screen in a second. Share screen. Share that screen. Okay. You can see my demo company in Xero.
Not
we can now.
Yes.
Looks like it takes it a couple of seconds to load.
Got it. Okay. So first of all, in this demo company, Richard, I'm going to show you how to add to the chart of accounts I'm going to add net assets with donor restriction, and I'm going to change retained earnings to net assets without donor restriction. And I'll show you an example. We'll take it step by step. So chart of accounts, and I'm adding an account. I'm going to call it's an equity account. This is one of the things that, of course, makes nonprofit accounting different from commercial accounting. Code, whatever. I don't know, whatever. And that is net assets with donor restriction. By the way, you see how it tells you that the account number is available? Other systems that I could tell you about don't do that. And then you save it, and then you find out later that it's not available. I have to go back in and fix it. Okay, so net assets with donor restriction. I'm going to click save. Then I'm going to go back into the chart of accounts, look for where they've got retained earnings, and change that to net assets without donor restriction. Net assets without donor restriction. Okay. I don't need a note telling me do not use because we're about to do a little override. All right. The next thing is tracking categories. So if you're used to the Intuit world, you want to hear me say the class field. And now you're saying, oh, class. In Xero calls these tracking categories, and there are 2 of them. So let's go to those. And it's not here in this menu, which is customizable, by the way. So I'm going to click on Advanced. I'm going to go to my tracking categories, and I'll show you an example of, I don't know, let's call it a program that's grant funded. So I'm looking for my tracking categories. Here they are. By the way, if I feel like adding it to my favorites menu, I'll just click that star. And let's say I don't want fixed assets on my shortcuts menu. So here we go. I'm going to go with tracking categories and watch how my menu changed, by the way. Fixed assets is gone. Tracking categories are in. There are two tracking categories available. One has been named. You can also name your own tracking category in Xero. And since we're in the nonprofit world, let's add one. Let's add a new field. Let's call it functional expenses. And let's call these administrative, programs, and fundraising. Save. Look at that. We have one quote unquote class, and these are the things that you can choose from, and another class, and this is what you can choose from. And I want to show you something else before I then show you a transaction or 2 transactions, income and expense. I'm going to add another option within functional expenses that says programs, and let's call it like ABC program. And this is a special program that's grant funded. So in order to flip to the future, we're going to be running reports, 2 types of reports for the ABC program. One, the income statement. We're going to want to see the income and expenses for this program. And 2, we're going to want to see the restrictions and release of restrictions for this program. Maybe it could be a funder, like someone donated $50,000 for the XYZ program. It's restricted to that program. So let's demo a couple of transactions right now. So let's record some income. Let's say an invoice to donor name 1. Add them as a new contact. And we'll just put in today's date, whatever. And up here in the description area, we'll say to record ABC program funding. Quantity of 1, unit price, again, let's say $50,000. And let's say it's not sales because this is a not-for-profit. So let's just add a new account right now. Let's call it an income account. and let's call it 4,000, and let's call it individual contributions. There's no tax on sales, tax exempt. Clicking save. And look, the two class tracking categories that we have are here in the transaction. Region. Let's say this program only occurs in the North region. Look at this right here. Everything that we just entered, ABC program. Now, what I do next is I add 2 line items here. One, another $50,000 to net assets with donor restriction. To record restriction on ABC program funding. And I do go ahead and I add the region and I add the functional expense area. Then copy, paste one, negative 50,000. And I record this to net assets without donor restriction, ABC. I approve the invoice. So my short answer is I record the income and the restriction all at once, and I tag this for the specific program. Then I'm going to show you one example on the expense side, and I'll show you the 2 reports that become possible with this. All right, so that's the income recorded. Let's record an expense. Let's say it's a spend money transaction, which comes from a bank account. The checking account. We spend money on that. So there are great ABC furniture. An integral part of how we steward that $50,000 for this program. So let's say on December 8th, we spend $10,000 with ABC furniture. The expense account is whatever expense account we would ordinarily use. So whatever's in here, that would loosely find office expenses. Region, North, functional expense area, ABC program. Now, if this were part of just unrestricted funds, we would call it a day and we would put maybe furniture. Or maybe it's stuff that we have to capitalize, whatever. I don't want to overcomplicate this. However, since we're spending down restricted funds, you add 2 line items to release restriction. One, $10,000, and we're debiting net assets with donor restriction, North ABC program. Copy, paste, North, here, negative $10,000. Net assets without donor restriction. ABC program. And then, you can attach whatever documentation. So I'm going to click save. Oh, wait, I didn't put negative 10,000, right? I didn't. Good. Unit price cannot be 0 or empty. That's because I put that in wrong. Okay, negative 10,000. So our overall is 10,000. I'm going to show you 2 reports. One on the net asset side. How can we show by restriction the remaining balance? And 2, how can we run an income statement for this? So we can run an account transactions report, which is the 0 terminology for a ledger detail for any account or accounts. Net assets with donor restriction, let's say for the month of December, and we can have our debits and credits. Let's have our functional expenses. I don't care about that. I don't care about that or that. That's fine. We don't need our gross if we have our debit and credit there. That's fine. I'm going to click update. Look at this. We have our credit of 50K, our debit of 10K. And if there were other fund restrictions in here, all we would have to do is put on another filter for functional expenses and say, show me the ABC program. There could be 100 different, restricted funds running through here. We can put on a filter and only see these and see, aha, there's a balance of 40K. Or you can keep the filter off, export this to Excel, and give yourself a pivot table 3 seconds later showing what are the balances of all of our restricted donations by fund restriction. How much is left on each one? So that's my answer to the reporting question. And then let's go over to the income statement saying, all right, so that's our balance. But on the income statement side, how can we show people or know internally how we have stewarded those funds? Well, here's how. You run an income statement. Let's make sure the date range includes the range that we're going for. It does. So this is your basic income statement. Let's pretend that it all has, nonprofit nomenclature. You can run a filter for functional expenses. I just wanted to see an income statement for the ABC program. Apply that filter, click update. There you go. 50 in, 10 out. There's your income statement. You can send this to funders. This is great for external compliance purposes. I've seen more than one funder, request this information. Then the accounting department has to hustle and be like, all right, let's get our information together. And they have to spend a bunch of time doing click, click, click and exporting and, and tagging and adding up and forget it. This is a couple of clicks and we're done. Print it to PDF and email it to somebody. So that's my long answer, but my detailed answer to that question. What you saw today was restricted funds, how to restrict money that's come in, how to release those restrictions, how to run a report to track those restrictions and restriction releases, which, by the way, as a former auditor, just bless you. As well, how to record, how to report on that, and keep an eye on the income statement, and being able to see how more specifically did we spend that money, which is great for external compliance as well as for internal management. Richard, thank you so much for asking that question. I'm really looking forward to more questions as they arise. And Shelley, I wanted to say thank you so much for your enthusiasm and your hearts for this education and for moving money for racial justice. Thank you so much. And by all means, please feel free to share this link anywhere you can. We are running this bookkeeping-a-thon as long, we are ready to go all day and into the evening, as long as money is coming in to the GoFundMe for the Racial Justice Center's building fund. We want to see how long we can go here. And I'm updating the GoFundMe right now. Oh my gosh, that's so fantastic. We see some additional funds coming in. Thank you so much. We really appreciate your advancement of the accounting profession today, and from the bottom of our hearts, moving money for racial justice. Thank you so much. All right, I'm going to check all the places where we're streaming to see if we have additional questions being posted. I know that we have quite a list. What, Alicia?
Sure. Well, so while you're checking your list, I wanted to share a little bit about why I wanted to participate with this. That racial justice is obviously so incredibly important right now. Not right now; it always has been, and I really like that there's been a mental shift where with the Black Lives Matter did a whole lot of good to bring it to the forefront. One of the things that we're finding in the accounting industry is not even about race, just about how the industry has developed, that we're beginning to age out, that the average age of bookkeepers and accountants is I think it's over 50, and there's not a lot of young people coming into the industry, much less the racial balance. And in Portland, I live in Portland, Oregon, It's a very, very white city. And I belong to two different networking groups, and we only have two, I think, people of color in the groups. And so I was like, wait, okay, we got two different issues going on at the same time. Let's dovetail them together. And so I did a fundraiser last year to create a scholarship program for BIPOC bookkeepers in the Portland area. And so we raised $1,300. And so I've been putting the word out there to as many different organizations as I can, whether it's Black business incubators or uh, like just accounting groups, like everywhere. And I have not been able to find any local Black bookkeepers to share these opportunities with. And so we've been doing this big inquiry in our Woodard group of, okay, like where are the barriers to entry? Is this something that is actually like people are looking for? Is, am I solving a problem that doesn't exist? Like what are the barriers? And so I've been at this point of like wanting to actually incubate a young person of color to bring them into the industry. And so since I have hit a dead end with like trying to find Black bookkeepers in Portland, like Google has, I found a couple BIPOC people who we've invited in, but I also want to keep it local. Like I want this in Portland. I know lots of Black bookkeepers out there all over the country, but I really want to develop my own city. And so we're trying to keep the funds local. So I'm now at the point of reaching out to Portland Community College and Portland State University and going to their accounting programs and actually saying, like, can we talk to your students? Can we, or maybe even go to the high schools to career days so that we can talk about the industry and really bring up the population, because we have so many new Black businesses that are starting that it would be really nice to have Black bookkeepers for the Black businesses. Not that that matters what color anybody is for that, but really just elevating the whole community and making a level playing field, because Portland sure doesn't have one historically. And so when you came up with this idea, it's like, it's near and dear to my heart because I've already been working on this problem here in town and like hitting my own ceilings. So
yeah, Alicia, thank you so much for sharing from your heart. And I really appreciate that. And one of the things that part of the theme and what you're talking about here is one of the core reasons why the Racial Justice Center is so important, because it is so hard. Catrice Jackson has provided this education to me, or else I wouldn't have known. But to be, I mean, we're women in a male-dominated industry, so we're aware of it, even if it's just the tiniest sliver of the tiniest sliver of what bookkeepers of color and accountants of color go through every day, that we can never even understand the rest of it. But this tiny part that we can relate to, all the barriers that we've come up with, that we've come up against, the gaslighting, the disbelief, the not being heard the first time when we give our professional advice, and all of those barriers, which are part of why all three of us own or co-own our own businesses today, because we're surrounded in an industry by, we don't want to think of them as our enemy, but when we're not paid as much, when we are not listened to as swiftly, when we're looked at more for what we look like than how we think like, we can relate just a tiny bit, the microaggressions, on occasion the macroaggressions. And this is why the Racial Justice Center is so important, because it's important that in an area in which oppression still exists and is perpetuated on a daily basis, people who still experience that oppression need to be in spaces led by people in that same area of oppression. Women love to be in women-led spaces. And, like you said earlier, you want to do your part in making sure that there are opportunities and no barriers to bookkeepers of color, accountants of color, et cetera. And it's not a matter of like segregation. You said, like in Black-owned businesses. No, it's a matter of safety. It's a matter of, right? Like, and I didn't know this until my education with Catrice Jackson in the Socially Conscious Women's Collective, like shared that, until she shared that information with me. It's just, it's about creating an environment of safety, an environment in which like right now, the three of us, we're right. Like no matter what, we can just focus on the accounting. We can just focus on QuickBooks Online and Zero and the questions, and there aren't going to be any harmful statements to each other. It's just we can relax a little bit or a lot. And so I want to thank you so much for sharing that. And let's go to our next question. All right, I see here, let's see. This one, a specific accounting system isn't mentioned here, so we can talk about any of the three, do demos. The question is, should we connect Stripe to the accounting system? Who wants to take that one first?
Should we connect Stripe to an accounting system?
Yeah.
I'd love to.
Go for it. Go for it.
I actually just yesterday taught a class on e-commerce and integrating merchant services with your QuickBooks. And so the thing with Stripe and you said Stripe, right?
Yeah.
Not Stripe, but Stripe. Okay, yeah. So the thing with Stripe that makes it really hard is that it's a funding gateway. It's not the shopping cart software. It's not the e-commerce platform. It's not the marketplace. It's a funding source. And so when you're looking at connecting it to QuickBooks, you kind of need to step back a little bit and figure out, is it the shopping cart and the purchasing experience that needs to be connected to QuickBooks, or is it the Stripe itself? And I actually have Stripe is the payment processor for my my OWLs, my online web-based learning system. That's my training platform where I teach people to use QuickBooks. And there's no integration between my training center and my QuickBooks, but I want to be able to see who are taking classes and what classes they purchase and all of that. And so we have used FlexBooks in order to integrate from Stripe because we have to skip the learning platform whatsoever. And so I did choose to bring in the individual transactions and categorize them. And so we're using FlexBooks to bring in those Stripe. And what FlexBooks also does is then handle the fees as well and takes out the fees. But I wouldn't recommend that solution to everybody because I am bringing in the individual transactions. And so much of the time, if you are running an e-commerce platform, if you've already got the data up in your POS system or in your Shopify or whatever your e-commerce platform is, where you can see what your sales are and you can get the reports that you need to know how you're doing, don't import your individual transactions. You want to do it as a daily sales summary instead. And so whether it's a daily sales summary, a weekly sales summary, or a monthly sales summary, there's different apps out there that will create those for you out of your Stripe data or out of your e-commerce platform itself. And then by bringing that in, the biggest thing is the capturing of fees, because what neophytes will do is they'll see the money hit their checking account. They won't bother with an integration, and then they'll just code the money in the checking account to sales, and they're losing that portion of sales that got deducted for fees, and they just think that the amount that's there is how much they made. And the truth is that you're short your sales and you're short your deductible expense for your fees. And some people say, well, that's a wash. Maybe it doesn't matter because the end number is the same, but it does. Like, what if you want to go get a bank loan? You're going to want to show the maximum amount of income that you have been bringing in and the fee itself. And so, and you want to see how much sales you really had, not the net of the sales after the fees. So Stripe in particular is tricky.
Can I add to that? the
Go ahead.
merchant services, one of the areas that I find most often overlooked is merchant service fees and the percentage of your sales. And it's
Mhm.
really hard to run those numbers if you're not capturing the merchant fees in your file.
Mm-hmm.
So yes, you can harvest those numbers from your point of sale system, but either way, I absolutely would push for looking at your merchant fees over time, because one of the little squirrels that gets through, one of the little gremlins that gets through, excuse me, is when merchant service providers increase their fees, they don't really have to make a whole effort to let you know that. In many cases, it's just a little statement, like a little phrase on the statement. And unless you're reading your statement and you're really looking through all those phrases and all of the terminology that's on, how many of us look at our merchant service statement, really? Unless you're looking at that, you may not notice that your fee just went from 2.2 to 2.8. And unless you're capturing your merchant service fee somewhere and looking at those trends over time, you may not notice that until it's been months and you've been overpaying on that whole time. So capturing the merchant fees has multiple benefits, and I'm a big fan of capturing those in QuickBooks. And definitely, like Alicia said, it's a really good way to verify that you've got all of your sales and all of your merchant service fees in your software where they should really be. But as she said, if you do individual transactions, it's really going to allow for more opportunity for sync errors.
Mhm.
So the batch entries are nice.
Yeah.
Beautiful.
Great question.
I'd like to add another strategic view of this question, which is I love to run common size income statements so we can see all the activities of the business as a percent of gross revenues. Compare that to norms, or compare that to the suggested set of percentages for the major sections of categories like margins, suggested based on our particular goals for this particular business. And those get thrown off by a couple of percentage points if the whole thing is net. So like Alicia was saying, if we're capturing our net but not the gross and the merchant service fees, all of the other percentages also get thrown off, and you're missing whatever percent you're paying on merchant service fees, which also, by the way, puts you not in a position to see how much you're paying on merchant service fees. So when someone comes along and says, hey, we're offering a great deal on merchant service fees, 2.75%. Wow, you say, that's great, sign me up. Okay, but if you had your income statement, you'd know that you're paying 2.5% now. So splitting out those gross and net have both a cash value and a strategic value. I've seen a lot of companies that don't know their margins. And how can you make decisions about the cash health of your organization if you don't know what your margins are, your gross margins in particular? So, Great. Anybody else want to comment on should I integrate Stripe with my accounting system? Before we go on. Actually, I want to add something, but I want to open the floor and find out if either of you have anything to add first.
Only thing I would add to that is I mean, I understand this is awful, but it depends, because I know, I'm sorry. If you have an inventory-based company, that answer is going to be different than if you are a service-based company.
That's a great point.
So let me just put that caveat out there, because the bookkeeping treatment really depends on the type of company you have. If you've got hundreds of inventory transactions coming through, absolutely batch entry that. Do not try to do individual entries. You'll just end up with an inventory nightmare that is never going to get resolved and you're never going to be happy. Right. So don't do that. But if you have a service-based business and you have maybe, 10 a month, and you really do want your QuickBooks file to reflect the detailed sales that is also reflected in Stripe, then it's not a big deal to do this individually. It really depends on what your business is, how much volume you have, and how much detail you want in your QuickBooks file. For some people, they really do rely on that detail being in QuickBooks, in which case it's perfectly fine to port in individual transactions. Just understand, the more individual line items that come in, the more chances you have for an error to happen. And that's more fixing and troubleshooting after the fact. So it is important, if you're going to be importing transaction line items like that, you do have support from an accountant or a bookkeeper that knows the program, because when you run into an issue and you don't know how to fix it, everything's going to stop for you, and everything after that point can't be trusted. So have a backup, have somebody in your back pocket. I actually just got an email from a client last week. Same deal. I haven't talked to him in a year. He emailed me a quick little problem. I signed into his file, fixed it in less than an hour, sent him the fix, and he was happy. Even if you have somebody in your back pocket to do that, always have that person, because errors are not easy to fix. And unless you know the program, even if you knew it 2 years ago, it's changed so much in that time. You really do need someone who is adept at the program today, who does it every day as part of their life.
Thank you, Jen. So true. I want to share a couple of extra things about this concept of whether or not Stripe should be connected directly to the accounting system. We took on a new client about a year ago who they sell digital products, and it's a high volume company. You can take like a $5 million company, and you can have, they might have 20 clients if it's professional services, or they might have thousands upon thousands of people paying $19.95 a month. It could, right? And this business model is high quantity, low dollar value. So picture a $5 million company selling everything through Stripe for relatively low fees, not $10,000 a month, $20,000 a month, but like a few $100s a month, et cetera. So there's significant volume of transactions. When we became their accounting department, one of the things that we did was the first thing that Alicia spoke of, is that we took those transactions from Stripe, we downloaded them into a CSV format. We programmed a macro actually to, we summarized the data like in a pivot table. We did some things to link, to look for clues in the text to tell us what general ledger account it should go to, which type of income account. Oh, that's a merchant service fee, blah, blah, blah. We summarized that in a pivot table and programmed a macro to lay out the data in such a way that we could easily upload it to the accounting system, which in this case was Xero.
Mm-hmm.
And so we did that using that method that Alicia spoke of, that on a daily basis, we have a daily sales summary. And that we upload into Xero, and we do this by creating a Stripe bank account. It's the bank account type called Stripe, and that's where we record the income. That's where we record the merchant service fees. That's where we record the refunds, if any. All of those debits and credits go against that Stripe bank type account. And whenever there's a Stripe payout, we record it as a transfer from the Stripe bank account into the checking account. I am a rabid fan of this approach for a high volume e-commerce organization. You don't need to weigh down the back end database of the file. If, like Alicia said, if that data is available elsewhere, summarize that sucker. And it's, it's so easy to upload. And so since we're doing not only, answering the questions from an accounting standpoint, but also doing a demo of how different pieces of software work, I would love to show our audience how to upload transactions into Xero, and with the setting of, say it's summarize transactions from Stripe, for example. So let me do that. Let me get ready to share my screen. Hang on a second. Clicking here, clicking there, moving this over. And you all can see my demo file for Xero?
Yep, we can.
That is great. I'm going to go to the chart of accounts, which is in the accounting menu. I'm going to add a bank account called Stripe. So I'm going to click Add Bank Account. So I'm not going to search for my, look, like it's even in here, but I'm not going to do that because I'm making up a fake Stripe account. So I don't know. Maybe I have to.
You're
But
probably
maybe I
okay
can
to
still
use
put
it.
in like 0000 bank account number or something. I don't want to sign in. Hold on.
Oh, that's almost a Stripe integration. That's not just a Stripe bank account.
Right. Yeah. Well, that's the way it is in Zero. But no, I don't want to sign in right now. Okay. Hold on.
Well, there's a tick in that question that I had earlier about what does Zero do that QuickBooks doesn't. There is no direct Stripe integration with QuickBooks. You have to use a third-party app.
Got it. Okay. So hold on. I don't want to choose Stripe then. I want to choose something that doesn't have like, what do you do when it's not here? Search for your bank. ABC Bank. Please make it not be. There we go. Okay. All right. Add an account to manually import statements into Zero. I'm going to call it Stripe, but here we go. Stripe, copy, paste, bunch of zeros, account type, whatever, other. More zeros. Great. Save. Okay, I knew there was a way to do it. Oh, that was this. Hold on. Code 110, let's say. Your bank. Stripe. Oh, oops, sorry, I just clicked stop sharing. Hang on. Stripe. Save. Great. Here we have Stripe 110. So when we go to the in Zero, the dashboard, among other things, contains the bank feeds. Look, there it is, Stripe. So if we don't want a direct integration because it's a high quantity business model and we're doing like a daily summary, what you want to do is download the transactions from Stripe, do some things in there to get them into the daily summary layout and the calculation, and then import it into Stripe. So I'll show you how to do that right now. You click import a bank statement to get started. And here's also the same screen. One of the things that I love about Zero is the in-software uploads. You don't have to have a third party. I know that in QuickBooks Desktop, for certain transactions and for certain transaction types, like credit card transactions with a single expense account, you can have, if you have the accountant's version at least, batch enter. You don't have to go to a third party. But in a lot of different situations, you do need to go to a third-party app, and that's not so in Zero. Everything is internal. They even give you a CSV template to download so you can see how the data needs to be laid out for a quick and easy upload. And one of the other things I like about this is that we're uploading to the bank feed area. We're not uploading directly into the general ledger. This is an advantage because you don't have to duplicate the bank feed or the bank rules outside of the system. And that's a big deal. You also don't have to worry about the vendors in the spreadsheet being the same as they are in the accounting system, the way that you do with QuickBooks. So date, I'm just going to generate some random data. 1/1/2021, and let's increment. And let's show like daily sales for the month of January. The amount, I'm just going to generate some random amounts here. So hang on a second while I do that. And in fact, between $10 and $100, let's just generate some random numbers here. And let's say we don't even have the other stuff. Like maybe we have a description or whatever, but it doesn't matter. And then let's make this one at the end negative. Let's say that's a merchant service fee. It's a merchant service fee. So I'm going to save this. This is our CSV. So when you pull your CSV from Stripe, add everything up and say, all right, these are my daily sales. Or you might even say, all right, copy, paste. I'm going to generate some more random numbers. And these will be like the merchant service fees from every day. So hang on a second. Negative ran between 1 and 10. Fine. And I think this needs to be in this format with the negative instead of the parentheses. All right, fine. So you summarize your daily sales, and this is what you get. You get income, you get merchant service fees. I'm going to save this, and we're going to import it into the bank feed area in Xero. And here's how. Click Browse. Here it is, Statement Import Template in our CSV. I'm clicking Open. I click Import. And the first time I import anything into this account, I am asked to match these to the correct field. So Xero puts them in the right place. Date, transaction date. Yeah, I'm happy with that. Amount, transaction amount. I'm happy with that. The others I don't care about, but you get the point. I could choose something here. Reference, check number. What if I'm using the check number field to map to functional expenses if I wanted to? I could do that. Don't import the first line because they are column headings. Yes, that is correct. Okay. So I'm clicking Save. This was a one-time step, really. Look at this. It checks for duplicates. Bless you. I'm clicking OK. And these are all now as if these were hooked up to Stripe, but I'm only getting those daily sales. So at this point, if I have bank feed rules set up for Stripe, these things would just light up green like nobody's business. And I'd be sitting here clicking OK, 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 and then go right into the accounting system. So if I were to say here, like Stripe, and let's call this sales, like if it's I'm just making this up for demo purposes. If it's positive, put it to sales. And it's all of our sales are east side and they're all programmed, whatever. I'm making something up here. All you do is click OK, and it's now in the accounting system and reconciled all at once. And so, although we could go into more details, I don't want to belabor it, but I just want to show everyone how easy it is that when you summarize a high quantity of daily sales from Stripe, you upload it to the bank feed area, you can create some rules and just click OK. You've now got your data entry handled and the account is reconciled all at the same time. If it turns out that one of these is a transfer to the banking account, like let's say this is like a lot more money than $9, and you see that it's a transfer, you record the transfer into the checking account. Click OK. It's done and it's reconciled. Does anybody have any comments or questions on that?
Yeah, I do. So if this is high volume, this is still entering in the individual transactions.
No, this is entering in the daily summary. January 6th income side, January 6th expense side, January 5th income side. Yeah. So let's pretend the CSV import was already summarized from the thousands of transactions we got from Stripe in the CSV download from Stripe.
Okay, good. Thank you for that clarity.
Absolutely. Any other comments or questions about this in Xero?
Oh, I think that's good.
Great. And I'm going to check the threads also to see if any comments or questions have been sent our way about this or about anything else.
Well, as a corollary question about it, or one of the things that I've been playing with is that it's not Stripe, it's Square, but QuickBooks has a brand new Square integration that not a lot of people have turned on and used, and I would be more than happy to demo that.
Oh, by all means, yes. Take it away, Alicia.
Let me go ahead and get that set up. So the thing with with this topic is that Square is either going to be imported for people through, typically it's their POS system, like the restaurants or the coffee shops who have the Square terminals set up. And that's most of the time where Square is coming from, but not all the time, obviously. And so as a result, you wind up in high volume environments. This new Square integration, okay, before I even get to the integration, the problem with Square that people were having, like I mentioned earlier, is that the Square, when they put the money in your bank account, they deduct the fees automatically. So if you weren't paying attention, you would think that that was your revenue, and it's not. It's your revenue minus your fees. So the new integration, let me go ahead and share my screen with you. Oh, perfect timing. And while I'm talking, let me do an introduction here before I get onto my topic. Sorry to divert. This is my husband, Jamie. This is our other Jamie. Let me go ahead and make me the focal point here. And so
I'm Jamie too.
And Jamie is the other half of Royal Wise Solutions. He's my husband and my business partner. And so where I do the QuickBooks training, he does all of our Apple training as well. So he's an Apple specialist teaching Macs, iPhones, iPads, watches, all of that stuff. And so the same way that I do live webinars and create training videos for QuickBooks training, he does it for Apple training.
And here's my $5 for the minute she's using up. Keep talking. You're doing good. You're doing
I'll
great.
make sure I get this donation into the system.
Big supporter.
That's awesome. Yeah. So Jamie's my support up here while I'm on this marathon today. He'll be popping in through the day to make sure that I'm fed and watered. And
we'll be bringing lunch. Absolutely. So my question, I know we pitched, but I'll give you another $5 if I have to. I'm happy to do that. So when the fees come out, it doesn't match your invoice because I'm not a financial guy. I'm in the field working with clients and stuff. And then I make a sales receipt or I make an invoice. And if I run the credit card and they take the fees out, then all of a sudden what hits the bank doesn't match what I put on my invoice. And that blows it up for me. Later, I'm like, well, what do I have to do? Like redo my invoice. So how do you fix what?
That's exactly the stuff that we're talking about right now.
Oh my God, that's so good. Okay. Yeah. So they fix that in Square?
So with Square, I'm going to show how the integration takes the fees out automatically.
Yay! Okay, I'm gonna watch from outside. But thanks for letting me come say hi, everybody.
Thanks, Jamie.
Okay, so I'm going to go ahead and share my screen. Find the right one. Okay, can you see my screen?
Yes.
Yes. Okay, good. All right. All right. So with the Square integration, where you find it is actually someplace new. When you go to banking, there's a new section here for app transactions. And so this app transaction section has right now 2 new apps. It has Amazon for Business and it has a Square integration. Unfortunately, you can only use one or the other. You can't turn on both. So I'm hoping that eventually this is kind of version 1.0 and we can expand it out. Digressing a little bit, that Amazon for Business integration is fantastic. I love it. So, one of the banes of existence for bookkeepers is Amazon, and you don't know if it's furniture or office supplies or, personal. And so when you're doing the bookkeeping, you have to go get their Amazon login or have them write it out for you or jump through some sort of hoop. So I have been, I've switched my Amazon Prime to Amazon for Business, and it's absolutely worth the extra fees because the Amazon integration just brings up a list of all of your sales and all of your payment methods. And so anything that was done on my personal credit card, I can just exclude. And anything that's done on my business card, it actually shows you what you bought. And then you can just sit there and code it right away. So that's the Amazon for Business. It's fantastic. I highly recommend everybody sets it up for themselves because it's cool. Unless you have Square, in which case you're going to want this Square integration that I'm going to show you. So the Square integration, I have this one set up right now. And so there are two different approaches that you can take with the settings. You can either do a transaction summary, or you can bring in the actual transactions themselves. And so this is going back to that conversation that we were having about your volume. If you're low volume and you want to capture the item sold and the person that you sold it to, you could do that. But most of the time with Square, you're looking at higher volume, and you can go log into your Square and see exactly what's sold and get your category summaries. So it's not worth replicating in your QuickBooks. So that's why I do have this set up to be a summary transaction and not individual transactions. It gives you the option, if you want, to track your actual product sold or not. So you could just have it come in and say Square sales and then map your Square sales to your appropriate income account. Or you can actually have it synchronized to your item names. So that's what I have going on right here. You'll notice that I am taking advantage of that clearing account that you were talking about earlier. So the same way that you had made a Stripe clearing, I have a Square clearing. You don't have to with this integration. You can go straight to checking, but I have my reason. So, so I do have it in here. Then you also, on the items tab, there's the generic Square item, so that you map that to your QuickBooks for what you want it to be. You can have it assigned to a specific customer. And again, I like, when I'm doing these integrations, just putting it to like online sales customer or Square customer or Stripe customer, instead of bringing in the customer names, because what that does is it gives you one location where you can go to find all of the transactions super easy by just going to that Square customer. So that's why I have that set up that way. And then here's where you can do the mapping of all the other things that your Square POS tracks for you: sales of gift cards, tips, discounts, shipping, and merchant fees. So this is where you go in to do all of the mapping for this Square. And again, that's right here under app settings up there. Now, let me refresh this. Okay, so here you can see that it's bringing in, whoops, I refreshed it. Now I have to wait for it. Okay. You can see here that I have my daily sales summaries. And here, like this day had one, this day had one, this day had 420 transactions. I don't want to add 420 individual transactions to my QuickBooks on one day, because my reports will get bogged down and time out and I won't be happy. So that's why this is such a great way of doing it. Now, when I click on it, it will now show me what those 420 transactions were made of. 211 of them were one Square item, 2 were this Square item, 204 were that Square item. It's still just going to Square items, but it is remembering what came in from Square. And now what you can do on these is you can click on it. And here's the part that's super cool and innovative and looking forward to using extensively, is you can see what the item was that was in your Square POS system, and you can map it to the appropriate product or service inside your QuickBooks. So ideally, you want the names to be exactly the same. This is a fake file, so I'm just picking stuff at random for where I'm going to put these. But now I can map it to the individual product or service that I want it to mark as being sold. And so I would go through this and finish that whole mapping. And then when I import the transaction, it will actually import the items as well. And so I could just go ahead and click add. The one thing it's not doing right yet is remembering this mapping. So that's like, it's killing me. It's like my fingernails on a chalkboard until they get this developed. But of course, I went in and I put in feedback that it is still on a transaction by transaction basis. So you still have to sit here and actually repeatedly pick those items and do it on every single transaction. I'm waiting for the day when we map it one time and then it just pulls in, but this is version 1.0. It's not going to be perfect out of the box. I'm sure they're going to be able to solve this, especially if we all go up and add feedback and say, hey, good start, but not quite dialed in yet. But even my client who still has to sit here and click on every single one of these is still stoked because he was exporting out of Square's website to a spreadsheet and manually doing a lookup table to map all of these. And he says that even though he still has to every day go in and manually map these, it's still much, much, much faster than what he was doing before.
Mm.
And so once you finish with one of these transactions and you add it, what it will look like is a sales receipt like this. And so it will bring in all of the sales, and then it will also subtract the fees as well. So you'll see that this particular one that I clicked on doesn't have it, unfortunately. But when you go in and see the deposit, you will also see the fee deductions as well. So you see the full money made by department or product. You see the full money that it should have been, and then the end of the sales receipt will be the part that actually got deposited into the bank, which when you then go look at your banking will have an instant match, and you can just go match, 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 match. So I think it's a great, great, great first start. Looking forward to version 2.0, but it's still a really welcome new app.
So you said instant, and I just wanted you to know that's my love language.
Anything that's instant. Yeah. While I have this up, I also want to show that there is also now an Etsy integration. Intuit is now making multiple integrations with all different kinds of shopping carts. And so the thing with Etsy that's pretty cool, it's different. It doesn't work exactly like all the other ones do. What the Etsy one does is it brings in your sales receipt for your full price of your sale. And then it has a separate transaction for your listing fees, your Etsy shop fees, your shipping fees. And so it puts them all, it manages them like this instead, which is a little different, but it works. And so for Etsy sellers, now you don't have to figure out how you're going to get it all into the system. It just works.
Nice.
Yeah.
Nice. That is fantastic. Thank you. I didn't know about these other integrations. I mean, Square, Amazon, Etsy.
Mm-hmm.
Thank you.
Yeah, absolutely. There's a whole lot of development going on. You can tell that they're all done by different teams because they all work very slightly differently. But the end result is that we have new and better ways of instant.
Yeah. And you know what? This like drives a lot of the work that I do every day, at least from a technical standpoint. But I don't know. It's not just a technical standpoint. It drives me philosophically. I strongly believe that in this industry, humans shouldn't be doing things that computers can do.
Mm-hmm.
Because companies, they inhibit their own earnings because there's a lower market rate on things that a human does that a computer can do. There's just, people will pay less for it. And so if humans who are uniquely suited to build relationship, exercise judgment, have intuition, express compassion, spend time doing something that duplicates what a computer can do, especially a computer program that's, widely available, there's only so much they can charge, which means there's only so much money they can make. And I also don't like the idea of business owners, especially, in the context of this bookkeeping-a-thon for the Racial Justice Center. I don't like the idea of business owners, especially people who have gone into business to create generational wealth, especially if their ability to do so has been systemically and institutionally denied to them, have to pay for human labor for something that a computer can do, instead of paying, a little bit of money for the app and a lot of money for something that a human is uniquely capable of doing. And because of this conviction, I'm a huge fan of automating everything that doesn't require intuition, professional judgment, compassion, building and maintaining relationships. Automate the hell out of it. Automate as much as possible, because it elevates all of us and helps us to build wealth, which is especially meaningful to people of color in this country, and especially Black people. And so I'm not here saying like something ridiculous like Black people need to automate. I'm just saying this is one of the things that has us continually focused on automating as much as possible, is that when we, both for our own firm's team and for our client base, just to do everything that we can to help them build wealth, whether it's personal wealth, wealth for the communities impacted by their organizations, et cetera. So I love this, and that's why I don't think technology, and I know you two agree with me on this point, technology is not an intrinsic good. It's the people whose lives are impacted by it. So let's use it, for a human good.
Yeah. Well, we have all this intellectual capital and all of this social capital, and to have to waste our time coding transactions with it, when I talk to business owners, for example, who like, oh, I can't afford a bookkeeper. I don't, I don't have that money to do it. I'll just do it myself. Well, it's like, okay, so if it's going to take you 3 hours to code transactions, is that the best way for you to build your business? That doesn't help you build your business at all. It's a worthwhile investment to pay somebody else to do it, because they're going to use the automation so that nobody has to do it. And then they can provide their intellectual capital to help you grow your business.
Yes.
So by hiring a bookkeeper, you're saving yourself time and gaining a whole wealth of guidance to make your project and your passion soar.
Thank you, Alicia. So beautifully worded. And I'm so delighted that another question has come in. And before we address that, and I think we're all going to have something really meaningful to share here, I want to give our next shout out to our two sponsors today. Those are Practice Ignition and Zero. And I reached out to them in the first place because I'm a huge fan of their programs. And I reached out to Practice Ignition first, actually, because I'm one of their top 50 women in accounting. And I know that equity is very, very important to them. And this Bookkeeping-a-thon is for the purpose of raising money for the Racial Justice Center Building Fund, and to continue to advance racial healing and racial justice in the United States, which still there is just so much more work to do. And Practice Ignition just jumped at the chance to put their money where their heart is and to sponsor today's Bookkeeping-a-thon. What Practice Ignition is, and we use this in our firm, it's an app that brings together both proposals and payments. Their official statement is, which is so true, this is so true, when clients get paid every time. Run your business like clockwork with automated proposals and payments in one convenient client engagement and commerce platform, so you can focus on what matters, your client. This is true. This is not like corporate marketing speak. This is my day-to-day experience with Practice Ignition. Before I started using it, we would write engagement letters, send them out. We would send out payment links using a separate platform. One of them got executed before the other. And then there's that very awkward time. Like, okay, they signed, but they didn't pay yet. So we're not doing anything yet. But do they know that we're not doing anything yet until they pay? And then you're like, refresh. Did they pay yet? It's awkward. And then you have to have the conversations with them. Hey, I saw that you signed, but you didn't pay yet. So A, it's awkward. And B, we're spending time on this. What did we just talk about? Automate everything that can be automated. And once I had somebody pay, but they didn't sign yet. That was awkward. And with Practice Ignition, when we switched from Microsoft Word, like Times New Roman 11, Microsoft Word, and a separate payment platform over to Practice Ignition, they sign, they pay, it's automatic. And all the monthly payments for recurring clients are automatic. And this is, it did make a significant difference. No awkward conversations, no weird expectations like, well, be paid. I thought you'd be providing services. I'm looking forward to doing so. That's why we sent you an engagement letter. Can you sign that? It's a legally binding contract. So that's a bit about Practice Ignition. I'm just going to share a little bit about our second sponsor and then jump right into our next question. Our second sponsor is Xero. Again, we invited them to sponsor this campaign because we're already huge fans of Xero, and they want me to let everyone know that Xero's cloud-based accounting software has been recognized globally as a leader in the market by a number of business software review platforms. Track your business on the go and be confident in your numbers wherever you are, with greater control leading you to better decisions. Keep records tidy and make compliance a breeze with Xero. Since, by the way, someone asked me about using Xero for nonprofits. When I say make compliance a breeze, I mean, a couple of days ago, one of our nonprofit clients said, oh my gosh, OMG, send up the alert. One of our big funders is asking for a report of just our revenue and expenses for what they funded us. Our client had that report like 3 minutes later. It's done. It's done. Like it's in there. All you have to do is click, click, click and pull it out. Here you go. Yes, the client said, you're the best. They sent it off to the funder. Funder's happy. Everybody's happy. Let's take our next question.
Okay. I just found that I have this feature here. I think I might be able to show the question on screen. Oh, check that.
Cool.
Well, it's cut off, but it's on there.
That's awesome. All right. So this question, as everybody now knows, is coming from JP, who says, I have a question that is about bookkeeping and accounting generally, but not a technical question. That's okay. I'm glad you asked. I have had 2 experiences with licensed financial professionals who were negligent / fraudulent. Oh, gosh. Basically, I was paying them for services, but they weren't actually doing it. How should a business owner check an accountant's work if they don't understand the software or concepts themselves? JP, I am grieved. I am grieved that you had this experience. I am more grieved that they were licensed because I have a license. One of those up there is, no, actually, it's a certificate, but my actual license is like in a drawer. But I'm a licensed CPA myself, and it grieves me that this happened. And I know that the 3 of us are going to have some specific insights and answers for you. Jen, Alicia, would one of you like to take off?
Yeah, let me go ahead and take this one. You guys have been talking a lot. You probably need a bio. I took my bio break, so if you need to, by all means. This is a really interesting question, and I feel like this is a lot more relevant now than it used to be, and that's only because we have so much technology now to be able to do this. So I don't know, 20 years ago when I would get this question, it's a very different scenario and a very different answer now than it was back then. So with the 2 examples that you have in your head, one of the first questions I'd have is, how recent did this happen? If it was recent, though, there are a couple of techniques that I would recommend to kind of stay ahead of this. First of all, this is not uncommon. I really regret that I have to say that because, like Jamie said, it really grieves me that that is a reality, but it is a reality. And unfortunately, because we have so many programs now, such as Xero and QuickBooks, that allow a business owner to outsource work to a third party, work that is a professional service that they cannot conduct themselves. When you're in that scenario, and you don't have the ability to vet the work itself, there's only really a couple of options available to you. One, learn the basic fundamentals of that work and understand what you're looking at. That's probably the biggest advice I could give is, in this scenario, specifically the statement that we have here, basically I was paying them for services, but they weren't actually doing it. My recommendation is do not work with someone who you're not meeting with at least on a monthly basis, if not weekly. I personally prefer weekly. Even if it is a 20-minute call, a Zoom call, by the way, so you can share screen, to see the work that they are doing. Meeting with them on a regular, consistent, recurring basis, make sure that you don't get pushed to the back burner. And for many people who are providing and conducting professional services in a remote environment, it is a risk, unfortunately, that sometimes the squeaky wheel gets the grease. The one that they're talking to the most gets the most attention. The one that they're communicating with most common is the one that gets the most work done. It's an unfortunate byproduct of the scenario that we're in right now. So one of the easiest ways to mitigate that challenge is meet with them regularly. And if they're not willing to meet with you regularly, I would ask the question, why? Because you should be able to ask questions. You should be able to have them show you a profit and loss on their screen. And here's the most important part of this meeting. You need to understand and agree with what you see. When you see a profit and loss that shows your sales are $10,000 for a period, and you know you didn't sell anything during that period, that's the meeting to say, wait a minute, there's a problem. I didn't sell anything. Why do I show $10,000 worth of sales on that profit and loss? And then you dig in with them live during that meeting and they discover, wait a minute, you actually got an inheritance and you got $10,000 and you paid off a credit card with that. It was your personal inheritance. You paid down your credit card, but it got posted as income. So this stuff happens when you're not meeting with your bookkeeper or your accountant on a regular basis, because sometimes they don't have all the information you do. You're the one who's actually conducting the work. You're the one who's earning the money. You're the one who's spending the dollars. You have the first primary source of information. When we are secondary, we're going to miss stuff. There's no way to get around that. Now, there are tons of automations we can build to mitigate 99.9% of those, but there's still going to be the anomalies and the stragglers you need to talk to them about. So at the very minimum, a monthly meeting to go over your profit and loss and your balance sheet, and more importantly, understand what those lines mean. And if you are working with a bookkeeper or accountant who has a communication style that is different than yours, this is one of those times where I would say you need to pair yourself up with a professional that you connect with. Someone that communicates in your language, in your style, who you can ask questions of, and you don't feel like they're going out of their way or they're doing anything that is above and beyond. That scenario of unrealistic expectations from either party is never going to work out well. So finding someone who has the same expectations about what this relationship is going to look like is really fundamentally critically important here. So while the two experiences you had, I can't speak to those because obviously I wasn't present. What I will say is there have been a number of times I have inherited books that clearly needed more attention than they got. And ultimately, when it comes down to it, it's generally speaking still the business owner's responsibility to make sure that they're getting the services they're paying for. Now, in your case, you've also said, how should a business owner check an accountant's work if they don't understand the software or concepts themselves? So the two ways: one, meeting regularly and asking questions, a lot of probing questions. The second one, and as much as I don't want to say that this is a great alternative, it is an alternative if you really struggle to understand financial concepts. Have a third-party accountant do a file diagnostic once a quarter or so. Give you a report that says, this is the condition of this file right now. No blame. This is not about pointing fingers. This is just a quick diagnostic that says all of your accounts are reconciled. I don't see anything in unreconciled activity. I don't see anything that shouldn't be there, that isn't coded correctly. There's nothing saying uncategorized. Another accountant can take a quick look at the file, give you a quick diagnostic report that says, here's the red flags I'm seeing. You can then take that to your accountant and say, all right, here's the issue. The problem is some accountants don't like to work in that sandbox. So you've got to make sure you're honest and open and transparent about this approach. There is nothing wrong with getting a second opinion on your accounting file. I do this a lot for clients where I'm not doing their primary service. I'm simply giving them a diagnostic on their file to check somebody else's work. It is not intended to lay blame. And actually what it has turned out, what has ended up happening is the bookkeeper that did the work initially has been coming to me, asking me questions about how to do this in a more efficient way. So we've actually opened up more conversations and ended up with better results for the client than I have seen previous to this approach. So those are the two techniques that I would recommend, either regular meetings, or if you can have open communication on board and everyone understands this is just a matter of getting a second opinion, a second pair of eyes. As long as everybody is aware of that and they're all on the same page, it can be a very, very productive way to have a second accountant every quarter take a look at your file.
Mm-hmm.
Jen, thank you. You are not kidding. These not only help to ensure quality, but they also bring value, particularly that meeting that you were talking about, brings value and insight to the business owner. Because, when you own your own business, it's not just having a job with your name on the letterhead. Owning your own business, as the three of us know, means that we need to learn some things that previously to this we didn't need to learn. Like marketing is so not me. Like I took some marketing classes as part of my MBA, and they were just so unrelatable. So like that's where my brain goes to whenever someone says to me, like, I'm not an accounting and finance person. And I just, I feel so not related to it, but I know that I have to have some information as a business owner. As an accountant, I'm like, well, how could you not know your numbers inside out? But it takes like 3 seconds for me to remember, do you feel the same way about marketing?
Right.
So, I would also love to add a couple of my own thoughts that are more specific in nature than the really holistic, like more far-reaching, good points that Jen was talking about. More specifically, and if you can post what accounting system is in play, that would be helpful, but you don't have to. One of the things that a bank reconciliation does is show completeness. It doesn't mean that everything was categorized correctly. It means it's in there. It means that the record that's in your accounting system of what cleared the bank matches the bank's record of what cleared the bank. So this is about completeness. And thanks, JP. Is that so? You say QuickBooks. Do you know if it's QuickBooks Online or QuickBooks Desktop? Because we can do a little demo of the a sample reconciliation report and show you where to go to tell if work has been done and how you can see specifically that something is complete. Because one of the things that I hear you say is they weren't even doing it. No idea. Okay, no problem.
Do you log in through a browser or do you open a program on your computer?
Yeah, if your username is an email address, then it's cute, and you log into a browser, it's QuickBooks Online. If your username is like your name or admin or something that's not an email address and it's locally installed, it's QuickBooks Desktop.
Do you have the demo file up on your account? If you show it on the screen and that's what it looks like, it's QuickBooks Online.
Oh, that's a really good idea. Thank you.
Okay,
got it. So JP
so I think he's in a situation where the bookkeeper is doing all of the books and just probably providing reports, and he's not actually seeing.
That's what it sounds like.
Yeah, and so that leans straight up to what Jen was saying about how often is your bookkeeper meeting with you and telling you the report and talking to you about the file, or how often are they sending you reports? If they're not, then that's where that's where definitely it's a struggle. I mean, because if you do have your hands in your books, you could look at the audit history and see what the bookkeeper has been doing.
Unfortunately, this is one of those areas where I would say you probably have kind of an old school approach that needs a refresh. You need to be in your file. You need to understand how to log in, how to pull reports. This is one of those areas that this is kind of a combination of responsibility here, but you definitely need to get in there now. Okay, cool, nice. We meet it weekly now, and I have a different bookkeeper and accountant for accountability. Fantastic.
So you're actually doing all the right stuff.
You are doing the right stuff. This is great. So
yes.
Yeah, if it's QuickBooks Online or QuickBooks Desktop, then it's gonna the only way we can tell that is the reports you're getting. If you are able to I don't know if you can post a picture on a comment, but I mean, not that you would want to do that with something that is confidential information. But we usually tell if we look at like the header, if it's QuickBooks Online or desktop. But other than
Yeah,
that,
you know what? Let's just give a demo of a reconciliation report from each platform. That's okay. Lots of people are watching this, right? So let's do this. Hold on. Let me click to share my screen. We'll go over here. We'll scoot this over here. We've got QuickBooks Desktop in front of us. It's a sample file. So if you want to look at a reconciliation report, again, for completeness, you click on Reports, then Banking, then Previous Reconciliation. Reports, then Banking, then Previous Reconciliation. You click on whichever account is interesting to you, like your checking account or credit card account or whatever. And of course, there's no reconciliations in the sample file. Hang on a second. Banking. I'm just going to produce one really quickly. Hold on. Give me a second. And then let's go like this and check off these and hold on. We'll go like this. We'll do all of that. And 5630102. Fine, hang on. 5630102.
This is not a demo of how to do a reconciliation, everybody.
Please don't do this.
Don't do this at home.
Okay, hang on. I will now demonstrate a reconciliation report. Okay. Reports, banking, previous reconciliation. Look, there's a previous reconciliation report in here. Then I keep the detail open, transactions cleared plus any changes made. Display. Okay, this is a reconciliation report. I'm going to give you just a couple of tiny pieces of information that you need zero accounting knowledge in order to look at and compare. First of all, you look at this report and your bank statement, which can be online or on paper, if I can say like the P word. First, does the opening balance in the report match the opening balance in the bank statement? Bing! Second, the line item that says cleared balance, does that balance match the ending balance in your bank statement? Bing! Third, anything that's uncleared, is it old or is it pretty recent? If it's old, it's probably wrong. If it's pretty recent, it's fine. I'm sure it'll clear soon. If any of those things for which I said bing do not bing, then there's an error, and any other information, like that you get isn't correct. And you don't know, I mean, this in part is about like if they've done the work at all versus correct and incorrect. But also, I'll tell you a lot of what I've seen. If when you go here to run this reconciliation report, banking, previous reconciliation. And let's say, so in this sample file, it's like November 30th, 2025. Let's say that right now it's June of 2026. And you go in here and the last date that's available is November 2025. 8 months ago, that's a problem. That's a red flag right there. Maybe the work has been done, but just not reconciled. But how would you know? So even looking at the date that it was last reconciled is a clue. Is this up to date? Let's do the same thing in QuickBooks Online.
Incidentally, that list is supposed to show one reconciliation for every reconciliation period. However, I would say 90% of the time that is going to be monthly. So you should see on that list, you should see 10/31, 11/30, 12/31, 1/31, 2/28, whatever that date is. But there are some accountants that reconcile more often. And I see this more so in bank feed scenarios. So for instance, in QuickBooks Online, where we have bank feeds enabled, I actually have a couple of clients I do this for, and I will reconcile their accounts weekly. So we will have weekly reconciliations down that list, but it's never never longer than a month.
Yes.
Typically speaking, a reconciliation matches your statement, your bank statement, whatever that period of time is. If you have a bank statement that is a quarterly statement, like some mutual funds and things like that, I would tend toward the monthly, just because I like to go and verify my balances. Even if I have to log in and get that balance manually, I will still reconcile monthly. But if you see it more often than monthly, it's not necessarily a problem. It's just if you see it less often than monthly, it could be a red flag.
Mm-hmm.
Well said. Thank you. All right. So let's do that same process in QBO. Report. No, wait. It's not here. It's in accounting. Reconcile. Sorry. Just reconcile. Accounting reconcile. Get started. Let's
It'd be
do
really
it.
nice if you remembered who we are when we went into the sample
I
file.
know, right? Oh my gosh. We have a beginning balance here.
Yeah, they don't have any reconciliations in the sample file.
You have
Oh,
to
they don't?
you have to do a fake reconciliation too.
Let's do a fake one.
All right, ending balance, 10
Again, do
grand.
not do this at home, people.
131, oops, 2022, whatever. Okay, resume reconciling. Okay, we check things off. Fine. So hang on, how do we get back to
The edit info button on the upper right.
Thank you. Why did I even do? I should have put 0. That gives me an instant correct answer. 4531.95. 4531.95. Your bookkeeper should never do this.
Yeah.
This is not how to do a reconciliation.
No. Okay. So we come here, we click finish now because our difference is 0. I'm clicking done. It's reconciled. Yay. Okay. So like I was saying, you log into your QuickBooks Online file. JP is giving so much love. Thank you. Hover over accounting. You click reconcile. Look, there's a link because this has now been reconciled before. Isn't that nice? You click this, and this is the reconciliation report. So let's go through our bing, bing, bing together at the couple of key things that you need to look at that you don't need accounting or financial knowledge to know. Statement beginning balance. If that should match the beginning balance on your bank statement. Bing! Statement ending balance. That should match the ending balance on your bank statement. Bing! And the third piece, when you scroll down a little bit to the uncleared section, none of these should be very old. If they're very old, they're probably wrong.
And that's not a bing, that's an eh. And one of the things that I find a lot when people are doing reconciliations is they think that by checking off all the transactions that are on their statement and they get the difference equals 0, they think they've reconciled. There's 2 steps to reconciling. The first step is getting that magic difference equals 0, but the second step is actually looking down the list of transactions and identifying anything that's not checked off. You're not done reconciling until you've managed all of those. If it's a check that's outstanding that somebody hasn't cashed yet, if it's recent, fine. But if it's 6 months old, you might want to follow up with them and let them know that they haven't cashed the check.
Yes.
Sometimes you find 2 transactions for the same dollar amount, you have a duplicated transaction.
Yeah.
And so if you haven't reconciled by actually checking on everything that's unaccounted for, troubleshooting it, figuring out why it's there, managing it, deleting it, maybe it was a transfer that you thought came from the operating checking, but it came from a different checking account or the owner's checking account. You have to figure out what everything else is and get rid of it. That's when you've reconciled.
Quite true. There's one other thing I want to mention, JP, which is actually not about finance or accounting at all. And that's this. And I'm going to say this because you have a new accountant, you have a new bookkeeper, you're meeting weekly, just so much. Yes, bam. And also, just in case they don't have anything like this up currently, you might want to consider it. We do this with every single one of our clients. We use a project management space together. We're in the space together. And we have this huge mega list of all the stuff that we're doing on a recurring basis. And we post comments in there and questions to each other, to the client. They assign things to us. We assign things to them. We assign things to each other. It's a space for accountability. It's a space for transparency. And we always tell our clients during, before they've signed up to work with us, but during the sales process, we say, you're in this space. Hell, you own this space and you share it with us. At any point, you can log in and see that we're doing things. We're talking to each other about things. If we assign something to you, please do it. We need your opinion or some information or authorization or something. But you can log in there at any point and see that tasks are not overdue. It's red or it's not red. Oh, this is fantastic. JP says, I love that collaborative process idea to use a shared project management space. Yeah, absolutely. There are some great ones out there. We like Asana.
Mm-hmm.
It's free up to 15 users and it has flying unicorns and things.
Narwhals.
Yes, flying narwhals and flying unicorns and flying hippos. And we're like, there's nothing better in accounting than when you get a flying rainbow hippo.
Flying rainbow hippos. I love it.
Right? Oh my gosh, I got all that for sending in my bank statement. Yeah, I'm in. There are other platforms like ClickUp and Trello. Some have a fee, some don't. But Alicia, you said you're a fan of Asana?
Yeah, I use Asana.
Yeah, beautiful. Yeah,
we've used everything from NTask to ClickUp to Teamwork to, I think I've tried out a good dozen of them, and Asana is phenomenal. It really is wonderful.
Mm.
We run my entire company on Asana. That's
so great. JP said, Jamie knows me. I'm a sucker for flying unicorns. Yes. Okay. And all right, beautiful. And I want to also give a shout out to JP's business. It's called the Smitten Kitten. JP runs, in fact, sometimes JP does some fundraising for the Racial Justice Center through the Smitten Kitten by offering some promotions and things. But check out the Smitten Kitten online. Pretty
cute.
Okay, good. Your Jamie says me too. Only I don't know what he was talking about.
I think he was talking about Asana.
Or
no, he was probably talking about the flying. He was talking about the flying rainbow unicorn hippo.
Excellent.
Sure.
All right, great. All right.
Especially since I'm actually known to dress up as a unicorn on a fairly regular basis.
Man, a unicorn or a science officer.
That too.
Okay, great. JP, thank you so much for sending in that exceptionally valuable question. You are not alone in that, and we are elated that you found a solution with service providers who really put you in a position of clarity, a position of power, with being powerful in your conversation about the finances of your business. And we're just ecstatic. Just absolutely, I love that. And thank you so much. Thank you also for moving money to the Racial Justice Center's Building Fund today. We're really excited to see that. And before we go on to our next question, let's talk about that a bit to everyone. Why are we here today? So this is a bookkeeping-a-thon. We are going all day. While the money's coming in, we are here answering your accounting and bookkeeping questions. We're doing live demos in QuickBooks Desktop, in QuickBooks Online, in Xero. We're getting philosophical about security and money and business finances and nonprofit financial health. And we're doing it for one purpose, and that is to raise funds for the Racial Justice Center's Building Fund. Right now in Omaha, Nebraska, some beautiful and powerful programs for racial justice and racial healing have been going on for a number of years through a company called Catriceology, which is owned and operated by anti-racism author and educator and speaker Catrice Jackson. She loves Black women. She holds Black women in her heart. She centers them, uplifts them, nourishes them at every opportunity. She loves Black people and especially Black women. And she has created this series of programs, including a special, like a Hallmark program called Harriet's Dream, and has been running those programs for several years for racial justice and racial healing. And she's been doing this in a completely renovated but leased commercial space. And it is time that Catriceology and the Justice is Love Coalition, which is one of the programs, and Harriet's Dream, it is time that they own the building in which these amazing programs take place, which also gives them not only greater control over what happens, in the building and the security and the certainty of that, much more control, of course, as an owner than as a renter. And it also brings greater security and certainty to the future of these essential programs for racial justice and racial healing. It also affords them the opportunity and the space to expand programs into additional programs in the future, such as youth education, community policing, economic advancement, and community peace for Black lives. And that is why we are here, is to request that you move money with a financial gift into the Racial Justice Center's Building Fund today. Once that land is purchased and the building is built, or once a building is purchased and renovated, that building will be named the Racial Justice Center, and it will house the existing programs like Harriet's Dream, for example, and the additional future programs that Catrice Jackson has already planned. You'll be able to find your ability to make a financial gift to this essential endeavor by looking at the GoFundMe link, which you should see in the thread for this live stream. If you can also tag that contribution with my name, that lets us know that you're part of the Bookkeeping-a-thon, you're watching the Bookkeeping-a-thon, you want us to live stream more solutions today for the entire accounting and the entire English-speaking accounting and bookkeeping community who's watching this on a variety of social media platforms and a variety of social media locations within the platforms. You want us to live stream more solutions and advance racial justice all at once. And I want to thank you for those of you who have already sent in funds during today's live stream. It brings us a lot of joy and happiness to see money moving for racial justice today. Catrice always says, justice is love. And we love it when you put your money where your heart is. And we also want to thank our two sponsors, Xero and Practice Ignition, who have put their money where their heart is. And if you are curious about Xero or Practice Ignition, you can ask us today any questions that you might have. If you want to be introduced to our reps for each of these, who are awesome, let me know. I will be happy to arrange a personal introduction. I wouldn't say this if our reps were like non-communicative and they had no idea what they were doing. They're amazing. They're each of them separately, one for Xero and one for Practice Ignition. So thank you. That is why we're here today. And I want to thank you so much for being part of it. If you can also share this link with others so more people can see this, obtain the benefit of the education that we're providing, be able to ask their questions about accounting, bookkeeping, money, business finance, and make a difference for racial justice today, that would be amazing. Well, moving into our next question, let's see what we've got here. Oh gosh, this was great, very timely. How can we prove that we aren't double dipping when assigning salaries to PPP forgiveness and the employee retention tax credit. Woo! Yes. It is not going to be long before people start prosecuting and saying, like, you have to give the money back. You use the same salary dollars that you used for the employee retention tax credit as you did for the Paycheck Protection Program loan forgiveness. And something's going to hit the fan, and it's not something I necessarily say when we're recording.
What is a G-rated show? So yeah. This is actually, yeah, like you said, a really timely question, because I don't know about you, but 2020 was kind of a dumpster fire for everybody that I met anyway. And one of the biggest challenges we had was trying to understand the fine print of the rules when they hadn't even figured out themselves. Like there were so many attempts to decipher what the intent was and how we could capture anomalies and make sure that we were still satisfying. There was a lot of gray area. And for accountants, we don't live really super happily in gray area. We're not super thrilled with living in the gray zone. We really like to have our answers and kind of know what we're doing. So last year was kind of stressful for a lot of us because we didn't always have the answers when our clients would ask us. And this particular question is remarkably timely. I just had someone reach out to me saying that last year they didn't separate these, and now they have to come up with the answers that their new accountant is asking them, and they're not able to come up with an answer that is a pleasant one. And it's because they did exactly this. They double dipped between the PPP and the ERTC. So, or did I say that right? Whatever it was.
Yep.
ERTC. And from the perspective of fixing it at this point, it's kind of hard to do that. You can do it if you do it before the end of the calendar year, but at this point, we're almost a full year later. And unless you try, if you were going to make a true fix and not get in trouble, it would have had to have happened before the end of 2020 closed. Unfortunately, at this point, there's really no simple answer to that. So the reality is it's going to depend a lot on your circumstances and what reporting system you used at the time, like what payroll system did it go through? Is there any possibility that they can help advocate to get this corrected on your behalf? I don't know. It really is going to depend on those individual circumstances. And like Jamie said, there's really no pleasant answer to this. And there's a lot of words that we could come up with that don't belong on a G-rated show. So I don't know if you've got a better answer than that, Jamie. But other than coming up with the numbers as they should have been, conducting a little mea culpa, maybe writing up a little mea culpa letter might actually be a really good idea. If you're truly stuck in a hard place and you have penalties and interest that are being accumulated from the IRS as a result of these mistakes, they're being pretty forgiving right now if you give them a good, valid reason. And if you really do clarify, this is what happened, they're getting these a lot. So it's not like it's a surprise to them. But don't ignore it. That's probably the most important thing I could say is do not ignore this. Do not just submit it and hope that they'll never notice. That's not your friend. Just pretending like it didn't happen if you know that there was a mistake does not do you any favors, not do anything about it. Now, it may not mean that you have to go restate your tax returns, but it does mean you need to talk to somebody about your situation before the IRS comes knocking about it. Because by the time they come knocking about it, your penalties are going to be much, much higher. So you're really better off addressing this now if you know that there's a problem.
Good faith goes a long way.
What the specifics were on that question, other than what you read out, because it's not on our comment list here. But that's really my input there.
Thank you. I'm grateful for it. I'd like to add a couple of things that are more of a technical nature. So I'm glad that you provide more of a strategic approach, and thank you, Jen. That's really valuable. I think of two scenarios when I read this question. Scenario number one, if you didn't double dip and you just need to prove it. Scenario number two, if you did, but there's a way to quantify it yourself so no one else does it for you, which is going to be not in your favor, and potentially a way to actually fix it. after the fact. It's not a guaranteed fix, but it's a potential fix depending on your situation. And I'm going to show you in Xero the technique that we use to do this, which is what we call tagging. So let me bring up the Xero sample file. And before I share my screen and get too technical, I'm going to give you the overall technique. The overall technique is to tag those dollars. Tag them as PPP or tag them as ERTC. And I'm not talking about the income. I'm talking about the underlying basis for which you got the income in the first place, which is the salary expenses. And in the case of PPP, non-salary expenses that are included in like what's forgivable. And by tagging them, you'll be able to prove that you didn't double dip. And I'm going to show you an example of how to do that in Xero, which is just one of what I always think of as the big three, one of the big three accounting systems. So let me share my screen. Share screen. This screen. Okay. We're looking at Xero. We're looking at Xero. Okay. So I'm talking about tagging, which in Xero is called tracking categories. So let's say that we already have tracking categories set up for various things. We can either add one, like if we only have one, we're allowed two. So if you're using 0 or 1 tracking categories, you can add a tracking category and call it PPP or ERTC, or you can name the tracking category. Let's like we can rename this. So instead of region, it's called like special purpose, let's say. And let's say we add the options called PPP and add another option called ERTC. This is one way of going about doing it. And secondly, in your payroll transactions, so let's look at the income statement here, where we're going to see the expenses for payroll. Payroll tax expense, no, there we go, wages and salaries. I'm going to show you a way to go through here and apply a tag for, let's say, PPP to all these wages and salaries. Guess what? You do not have to open up every single last one of these and add this tag. You can do it in bulk, and I'll show you how. So it's in the accounting menu. It's called Find and Recode. Watch this. Let's say you determine that between October and November, again, this is fake data, I'm making this up. It's the technique, the clicks are the clicks that you want. In October and November, those salary dollars were part of your PPP application, your PPP forgiveness application. Add a condition. Date 1/1/2021. I mean 10/1/2021 through 11/30. And we want the account to be wages and salaries. And there's nothing in here. What did I do wrong? Income statement. Did I get the wrong date or something? Wages and salaries. $668. Wages and salaries. October and November. I wonder if the closed period is on. Oh wait, this is a funky source. These were imported from someplace. Fine, I'll use a different, that's why, let me just click on one at random. Okay, it's going, okay. I'm gonna do the different expense account for demo purposes, just pretend it's wages and salaries. All right, we're unchecking that and we're checking, I know, office expenses. We have things in here. Okay, let's say from August to October is PPP. Let's just say that that's the case. Let's pretend I'm typing in salaries and wages. And we want to say from August through October is our PPP forgiveness period. I'm making that up. It's the underlying technique here. You checked all of them off. You choose recode. And I'm recoding the special purpose as PPP. Review, yes, I mean it. They're all being tagged for PPP. This is how you prove that you didn't double dip. Now you can run an income statement. I'm going to click update, and I'm going to add a column that's just for the PPP. So watch this, edit layout. I'm going to add a column to my report. And that column is going to be for my special purpose. And I'm going to click on that and enter in PPP. And I'm going to put in my column heading the same. While we're in here, please note, FYI, I can choose any column heading I want. I can choose a different date range, even though these numbers in this column are these numbers. I can report on a different date range here if I feel like it, which in this case I don't. I'm going to click done.
That's actually really cool that you can define a different date range on the second column.
Yes. Right here, these are my PPP numbers. Pretend it says salaries and wages, but I can see this right here. Now, if I go back into that same expense account, which we're pretending says salaries and wages, and say everything from November forward is ERTC, this gives me the ability to prove that I'm not double dipping. 11/1 through, let's say, 12/31. Click recode. I go to my special purpose, ERTC, Employee Retention Tax Credit. I go back to my income statement. I'm going to edit the layout and add another column for ERTC. Column, special purpose. I only want it to show ERTC. By the way, if I wanted to, which I don't for this example, I could combine both of these into a single column. This reporting is very, very flexible, which is one of the things I love about Xero. I can come in here and run a report and prove to the PPP people or the ERTC people or whoever that I am not double dipping, because I'm tagging the underlying salaries and wages expenses with one tag or the other tag, and this is my ability to prove it. So that's the first of my two major technical shares today on this question. I'm going to pause before I go on and address the question of like, what if it turns out that I did double dip? Is there anything I can do to fix it after the fact? So I'm just going to pause right here. Jen, Alicia, do you have any thoughts or stories or questions or anything come to mind at this point?
I mean, only horror stories, not how to fix it. I mean, unfortunately, we haven't quite had enough time yet to be able to see how these issues are going to be resolved. We'll see them in the coming months. We're going to hear more and more stories of people that did make mistakes and how they ended up having to fix it. But we haven't run into those a lot yet. They just haven't caught up. So I've heard a lot of mistakes, but I have yet to hear a lot of successful solutions about fixing it after the fact.
Got it. Yeah. Some of this, it's not going to really hit the fan until the authorities start, looking into things. I mean, yep. I'm already hearing stories about business owners, like being discovered that they committed fraud with this pandemic related funding. Okay, so here's my next piece, and this is really specific to PPP. I mean, you can use these tags with like anything, your lines of business, your locations, etc. But there's something specific in the PPP. So in order for your PPP loan to be forgiven, only about 60% of it has to be related to salaries. The other piece of those funds can be used for a variety of other purposes. So if you discover, I made a mistake and I double dipped, you can, if you've tagged everything for PPP, or first of all, you can tag your ERTC dollars in the way that you just saw demonstrated today. You can tag your ERTC dollars. QuickBooks Desktop and QuickBooks Online have a similar capability with the battery classify tool, how you can assign a class. So if you create a class called ERTC, you can assign the transactions to that class and run a report. But if you realize in the process that you've done some double dipping, there might be something that you can be able to do which will save you so much money, like tens of thousands of dollars, or depending on the size of your business, hundreds of thousands of dollars. And that is seeing if you can have enough other costs that are not payroll costs tag with this PPP tag and say, oh gosh, this one's eligible for PPP forgiveness. Oh, this one's eligible for PPP forgiveness. So for example, just certain other types of expenses, like certain types of software expenses that help you run your organization they also count towards PPP forgiveness. If you can apply that PPP tag to those non-payroll forgivable expenses and reduce the amount of salaries and wages that you need to have tagged. So if right now all of your salaries and wages you double dipped, if you can move a chunk of those to other expenses, and if your numbers are such that you can have only 60% in your salaries piece and 40% in non-salary but forgivable expenses, and have the rest tagged to ERTC in your salaries line item, then you have just saved your business tons of money. You can prove that you didn't double dip by moving some salaries in the PPP column to non-salary forgivable expenses. And this is where data meets cash. You'll be able to prove with data that you don't have to give back any of that cash. Mm-hmm. So that's my share on that. I don't know if anyone has any comment or follow-up questions on that topic.
I mean, you've been using the word tags, and in QuickBooks Online, there's tags and classes. Mm-hmm. So there's a distinction between the two. So the technique that you've been showing, if you were doing it in QuickBooks Online, would be done with classes instead of tags. Although you could also do it with tags also. I haven't been doing as much about like distinguishing the PPP versus non-PPP and tagging it as yes or no. Most of the reports that I've been running have been based on this is PPP eligible and here's the time frame that we're working off of, but that doesn't control for a double dip. So this is a really interesting technique.
Well,
thank you for sharing that.
One of the features Jamie just showed was when you edit the layout of the report in Xero, you have a lot more functionality than you do in QuickBooks. QuickBooks Online does not allow you to build a report where you can like combine all these categories and edit the title on it on that one column, but not, it'll let you edit the title on a report, but not like by column. You'd have to pull it into Excel to do a lot of this. Mm-hmm. So one of the benefits of Xero is with these kind of analytics, it is much easier to create custom reports that allow you to track these specific questions over time without having to reinvent anything.
Excellent point. I'm so glad that JP is in action, going to send out some communications to their lawyer and accountant to find out if they did this or not for the smitten kitten. So fingers crossed, and all the best. It's such a great thing that you have that kind of support in your business, JP. And I'm really glad that you're going to be able to communicate with them and ask them, hey, did we do this? Because if you didn't, it's not too late. And this is serious money. And, with everyone, I mean, so many businesses have been struggling for obvious reasons. And, ERTC, you can do it retroactively. It's too late to get additional PPP funds if your business hasn't already done that. But it's not too late to file for forgiveness and to make sure that you're not double dipping if you have both PPP and ERTC. So I'm so glad that you're sending out those communications. That is awesome. Beautiful. All right, let's see what other questions we can answer today. And as a matter of fact, before we do that, I'm going to check off this one. Before we do that, I want to thank our 2 sponsors today and remind everyone why we're here doing this all-day bookkeeping-a-thon. I mean, as long as the money is coming into the Racial Justice Center's building fund, we are here answering questions. And another $25 came in just in the last little while. It's just been absolutely amazing, really inspiring.
I did actually put in Jamie's $5 that he.
Yes, I saw. That's great. That was fantastic. So we have 2 sponsors today who are passionate about the accounting profession and leaped to at the opportunity to advance racial justice in the profession and advance racial justice even outside of the profession. They want to see the Racial Justice Center become a reality. And those 2 organizations are Zero and Practice Ignition. We reached out to them originally. That they weren't going around like, hey, we just want to splatter our name everywhere. Oh, this one, great. We reached out to them intentionally, and they leaped. They specifically named that they were moved by this cause to build a permanent home for racial justice and racial healing in the United States. And they leaped at the opportunity to put their money where their heart is. And so I want to give you a little bit of information in their words about Zero and Practice Ignition. Zero's cloud-based accounting software has been recognized globally as a leader in the market by a number of business software review platforms. Track your business on the go and be confident in your numbers wherever you are, with greater control, leading you to better decisions. Keep records tidy and make compliance a breeze with Zero. Our firm uses Zero, which is why I reached out to them. Not exclusively, we have some clients on other platforms as well, but Zero is our preferred platform. And during the course of the day, people who are watching this live stream are finding out why. I love the reporting capabilities, the 2 class tracking categories, the in-app uploads. All of these things give better data to our clients and help us save a lot of time, which I love. I mean, it was difficult to learn. Those bank recs threw me for a loop. They're dramatically different from QuickBooks. And I am well versed in QuickBooks. I published an expert level book on QuickBooks Enterprise. I know QuickBooks inside and out, and it was icy cold water, those bank recs, to wrap my head around it. It took me 3 to 6 months to finally stop thinking about it the old way. And now I look back and I'm like, oh, they have to do reconciliations monthly? Oh, what a time suck those can be. I never have to do those anymore. And at first, for those first 3 to 6 months, I was so resistant. I was like, this doesn't make any sense. And this, how can somebody even have accounting software like this? It defies logic. And now I wouldn't do it any other way. please.
Put on the question list for so that I don't interrupt your flow, but I want to know how you look for transactions that haven't cleared if you have an always on reconciliation or
Okay, so
duplicate
let's
transfers and things like that.
How do you look for transactions that haven't cleared?
Because
And
one of the common
zero.
mistakes that people make with QuickBooks Online is they think that because they're using the bank feeds, they are reconciled and they're good, and that's not
Right.
true. So I'd like to see how Xero does it differently.
Yes, an excellent point. Yeah, so not true. Great, I'm glad you asked. It's on my list now. And our second sponsor for today is Practice Ignition. Similarly, I went to them because I'm one of their top 50 women in accounting. They gender justice and racial justice are very important to them. They did not hesitate to put their money where their heart is. And they said, we want to back this campaign for racial justice. And I want to share with you their message. They say, win clients, get paid every time. Run your business like clockwork with automated proposals and payments in one convenient client engagement and commerce platform so you can focus on what matters most, your clients. And this is exactly why we sought Practice Ignition in the first place. We used to have all our engagement letters in Word, and we used to have payments in a different platform altogether. And it was time consuming and awkward, but it was the best we could do because it was the best we could do. We didn't know that anything else was possible. And maybe back then nothing else was possible, but now there's Practice Ignition. There's no awkward time between when someone signs and when the money moves. We don't have to go back to them and say, thank you so much for signing. Could you please pay us now so we can start being your accountants? And even in one situation, someone actually paid before they signed. So, right, like they say money talks. That's great. I'm glad to know that you're serious, but we don't have an agreement actually. There's no awkwardness. There's no wasted time spent in that conversation. It's just a tactical one. Now that we've switched to Practice Ignition and we've been there for several years, I think since 2018 is when we made the switch, because that's actually why we switched our whole firm's bookkeeping from QuickBooks Desktop to Xero, is so it could integrate with Practice Ignition.
Oh, interesting.
Everything's been, such a breeze. Since then, like someone signs and the money moves automatically.
Mm-hmm. Well, that's really cool.
Yeah.
I want to actually add a little bit about Practice Ignition, because one of the things that's really cool about it is you can set up, right now there's a big shift happening in the industry from hourly billing to fixed rate billing or value billing. And one of the things that I like about Practice Ignition is it gives you a platform to kind of even yourself wrap your head around what it is that you do and what it is that you offer, and put it into packages where you can say, okay, if you're going to pay me this amount, this is what I'm going to do for you. And if you pay me the middle amount, this is what I'm going to do for you. And if you want this full service, then this is what you're going to do. So that same like 3-tier, and I think you can even do more than 3 tiers, where you can set up packages and then your clients can look at what they need and pick their package and then say go. And so that saves you from having to do all of the pre-selling where you're explaining everything. Like it gives them a place to go. That takes all of that off of your plate. And then when they sign, when they choose, that's when they get to fill in the forms and do all the signing and all the rest of the automation that Jamie's talking about.
Thank you for mentioning that, Alicia. You're so right. In fact, there's a website for those accountants or bookkeepers who have not custom pricing, but standard pricing and standard packages. There's even like a website, I don't know if it's like a widget or embed code or whatever that's called, that can create a direct link between Practice Ignition and those packages,
right,
and your company's website.
Right.
Which blew me away.
Yeah.
Incidentally,
probably
Lisa,
an iframe, but I don't know that that's true. I'm sorry, Jen.
They have a Cyber Monday still that's still up right now, 30% off for new professional or scale annual plans. Just mentioning that.
Oh my God.
Bunch of new features too. Like now there's now a Gusto integration. There is a
Really?
multiple proposal option. There's multiple signature options. So it looks like you can collect
Yes.
e-signature through this. So if you're like me, where you haven't adopted Practice Ignition yet, you're still using antiquated methods of an e-signature program and Word. Don't get into that. This is a fantastic option and it's 30% off. So, take advantage of the Cyber Monday if you're shopping around for something. But I mean, some of these options here are things that I'm like realizing, I could really make my life easier with this.
Right. And Practice Ignition is not specifically for accountants and bookkeepers.
True.
They realize what a good tool it is for them, but you can actually be in any industry and use Practice Ignition.
Yeah, I do find it can be really useful for professional services, whether it's a like construction industry and pull the funds, or professional services like marketing services, where you might have a project with multiple phases, or you might have recurring, like an outsourced marketing agency where you have a flat monthly fee, and the option to also say, this month we're also charging for the passing through our ad spend to you per our contract, and it came to this much money. They can pull that from their clients' accounts, and life changes when you have no receivables.
That's really cool that it can just pull out those funds.
Yep.
Yeah.
All right, beautiful. So let's go on to our next question. And as a
We've hit
reminder,
3 hours.
I know, right? Woo! Let's go on to our next question, and we look forward to taking your questions live. So we have a lot of questions that have accumulated here, both common questions for bookkeeping and accounting and more advanced questions. So no matter where your question falls on that spectrum, we're very much looking forward to receiving it. You can send it in. We would love to address it, discuss it, even do a screen share if we can, and share some techniques related to your question in a demo file. And in the meantime, please spread the word. We are here to raise money for the Racial Justice Center's Building Fund. So this amazing organization, Catriceology Enterprises, can own the building and have more say in their destiny instead of continuing their amazing programs for racial justice and racial healing in a leased commercial space. So what juicy question do we have next? Oh, this was great. This was about QBO. So I'm going to defer to my good colleagues, Alicia and Jen, on this one. The question is, does a company that flips houses need a different QBO file for each house? If not, how do you track each house in QuickBooks Online?
Projects.
Take it away.
I would say projects are probably the easiest answer to that. There's one of the benefits of these different programs is that there are different ways to do the same thing. So there's about a half dozen different ways to accomplish this specific question that you're asking. But QuickBooks did come up with a feature called Projects. I want to say it was probably 3 or 4 years ago now. And that works pretty well for tracking individual income and expense projects, for lack of a better word, and just kind of parsing them out so that you can look at the spend per unit or the income per unit. You can add in things like the amount of time that you spend per unit, so you can even track your time with that. And of course, allocating out overhead, things like that is fairly easy when you're tracking things incrementally like that, when you're separating out your projects or your, for lack of a better word, your cost accounting. Cost accounting is something that I absolutely adore. It's actually what got me into accounting in the first place. Was not even gonna get, I was a nanny. Tell me how that makes sense. But I was a nanny at one point in my life, and that's when I got exposed to accounting by bizarre connection of events. But cost accounting is where I started, and specifically building units and renovating and flipping was very much how I got my toes wet in accounting in the first place. And we didn't have those techniques back then. So that was 21 years ago, 22 years ago, and we were using QuickBooks Desktop Enterprise at the time. And the technique that we used at that time was sub-customers, and you can still use this. That is still an acceptable way to do it. And if you've already got it built like this, it's okay to continue. It's not going to break anything if you want to continue that. But because so many people were using sub-customers and they were having challenges with it, because the feature in QuickBooks for sub-customers it can get confusing when you're billing the customer, because you've got a customer and then a bunch of other subs underneath it. And if you had to bill out one and not the main, it just got a little confusing. So they added projects to eliminate that challenge. But ultimately, they work pretty much the same, which is you can pull up profit and loss by that unit, whatever that unit is. In this case, is houses, and those tend to work pretty well. The other possibility is, now this can be applied with either within Xero or QuickBooks Online, and that's those tracking categories that Jamie mentioned earlier, which in QuickBooks we call them different names, but essentially it's, if you think about it as, it's just this kind of database concept of, if there's a field and you put in information in it, you can then harvest a report that is exclusive to that information. As long as the field has something in it, you can build a report around that. If you leave the field empty though, the software doesn't do well with that. So matter of fact, one of my hiring questions when I'm hiring a new bookkeeper is I will share an image of an expense in QuickBooks. And I will say, of all the fields you see in front of you, which ones are the most important to fill out? The only real answer is all of them. All of them. If you have nothing in it, I cannot run analytics on it. So every field gets filled out. So if a field is turned on, there should be a reason for it being turned on. So with something like what you're describing, if you don't want to use sub-customers or projects, turn on one of those extra tracking fields. Use that. That's just 3 examples of how you can solve this particular challenge of tracking those independently. None of them require you having multiple QuickBooks or Xero files. Do not do that. You will end up costing yourself way more money than you need to.
Yeah. Now, the one caveat with that, though, about the multiple files is if you're flipping houses and you have each one set up as its own tax entity, as its own separate company, then yes, you actually do need to have a separate file for each of the houses. But assuming that the question was actually saying, I have a company that buys houses and renovates them and flips them, then Jen's suggestion of the projects is absolutely the way to go. And projects is in QBO Plus and Advanced. I'm happy to do a demo of it.
Please.
But, yeah. Okay. Are you seeing my QuickBooks?
Yep.
Yeah.
All right. Awesome. So where I am is in the left-hand side. There's a tab here called Projects. And so that has to be turned on. It's not on by default in your QBO Plus or Advanced. So it can be turned on by the business owner or the bookkeeper. And if you do have customers with sub customers already, it will actually ask you if you want to convert all of your sub customers over to projects. And that is totally fine to do as long as you only have them one level deep. If you have a customer with a sub customer who has sub jobs underneath, projects isn't going to work. It's only one level deep. But what you do when you look at my file now, you can see here that I've got like bathroom edition from Gary Weisinger. And so there's probably another one on this list as well, but you can see the customer who it's from, and then the project itself. And this project center is really super cool as a central organizational hub that when I do have, clients who do construction, for example, or anything that's project oriented, I actually teach them to use QuickBooks as if like, this is how you do it in QuickBooks. And so I send them to the project center and I teach them all of their QuickBooks through this central hub, because what it does is allows you to see a graph, for example, at the top of your profit margin so far. So you can see how you're doing with your income versus your costs. And then on the overview, you have a column with all of the income and then all of your costs. And then you can see the profit right there. So what it's doing is it's bringing the income parts and the expense parts all under one roof. So instead of seeing all, like having to go to the customer to see all of the income, and all of the and going to the individual vendors to see all of the expenses. This transactions tab brings it all under one roof for everything that has been labeled with the customer or project. So all the job costing that you're doing every time you make an expense and you allocate it to a customer, it shows up here. Or vice versa. You can actually say add to project and click the green button in the upper right, and you can put in not just income expenses, but you can do the, I'm sorry, not just income transactions, but you can do the expense transactions
Whoa, does that say
right from
estimate?
here. What's that?
Estimate and purchase order are included, huh?
Bills, purchase orders, expenses, estimates, all of the related ones, including time entries. You can even do your timed job costing here as well. So anytime an employee fills in a time card, whether they're using the time activities in QBO or even QuickBooks Time, the old T-sheets, if they're using that, on the time cards, you can specify what customer it's for or what project it's for and what service they're providing. And so this goes into all of your costing reports. You can even make it billable if you're invoicing for time and materials. You can mark it as billable and say, okay, my cost for this employee is this, so I'm going to bill this out at $60 an hour, so that you can then collect everything and invoice the customer and make your margin on it. So all of this even flows through to payroll. And not only does it flow through to payroll, but what I really like about this, I didn't put in how much time it's going to take us. Let's say it's 2 hours.
And it will convert decimals, which is really, really useful.
Which is really super nice.
The programs that don't will drive you nuts.
So what this also will do is allow you to, if I go back to all projects, this is kind of at the root level, not specific to a project, but there's this hourly cost rate calculator up here where your cost per employee is more than just what you pay them in your wages. There's overhead, there's your insurance, there's all of that.
7.65% taxes.
Say that again, Jen?
There's a 7.65% of additional taxes. It's
yeah, exactly. Yeah. So when you come in here and you can say, all right, I pay this dude $25 an hour. Here's my employee taxes. Here's my additional taxes. I'll go ahead and I'll match that rate. We're also paying per hour. So you got to calculate your workers' comp down to like whatever it comes out to an hour. And then you can also add overhead to it. So let's say I want to allocate an extra $2 in overhead. So now, even though I'm paying him $25 an hour, it actually costs my company $30.93 an hour. And so I'll click OK on that one and say done. And oh no, I don't want to do that without saving. I didn't click save right there. Okay, done. So going back to the bathroom where I have Chris Pepper in here, I can go to the time activity on the project and I can group it by employee and see all of their time cards for that project. Or I can flip this and see it by the service that was provided. I know that I just did that one, but I want to show you here. I can see how much time I took on the project for landscaping and paving and how much time for cleanup and how much time for paint by employee. So I'm actually getting the labor costs in here outside of payroll. This is just kind of a reporting dashboard so that you can really see your true costs. But then when you run your project report by profitability, notice it says without time costs, because this is where it doesn't include all of that allocated overhead. What it does do is it includes your actual payroll costs. So you get two completely different ways of looking at labor in the project. And this is what Jen was talking about earlier about being able to, if you're using classes on for your tagging of all of the houses that you're trying to flip, that's kind of the other way of doing it. This is pretty much the same report as filtering your profit and loss report by class. So it's just a different way of getting to the same information. with all of this other super cool stuff that it does and that it tracks. And so when I do have construction clients, this is where I send them. I don't teach them to go up to the new button, or I don't teach them to go to a vendor. I teach them to come here and enter in all their expenses so that we can capture all the information about it. And you can still use classes. The problem with classes is that unless you're using advanced, you top out at 40 active ones. And so if you want to see your past history, you have to inactivate and activate things. And yeah.
Stunning.
So that's a little bit about the cool stuff in the project center. And then if I go and look at Gary Weisinger, I can also see that he now has a projects tab where I can now see all of the different projects that I've done for him over time, all the active ones. No, this is just, let me see if I have something inactive here. Yeah, so I can see here past projects as well. So that way, you know, if you're doing multiple jobs for a customer, you can track your costs specifically by that task, not just everything ever done for that customer.
Absolutely stunning. This is, you know, I've heard people talking about QBO projects, but believe it or not, this is the first time I've ever seen it.
It made a lot of improvements. It was not this beautiful 5 years ago. This is recent developments that they have, unfortunately, Intuit's really good about pushing updates based on requests. Enough voices ask for it, they will eventually make those changes pretty quickly. It'll just pop up one day in your file. You'll log in and something will be different, which is in some ways a little bit, you know, it gets in the way of your flow because, you know, rabbit trail, oh my gosh, new feature. But at the same time, it's nice that they listen. So it's very possible that you played around with projects before and just didn't have those features available yet, so you wouldn't have seen them.
Mm-hmm. Yeah, no, it's absolutely great. I mean, there's little things that are still deal breakers for me occasionally here and there. Like if you're doing progress invoicing, you can do percentages or flat dollar amounts, but like if you have quantities like 10 of this, you can't progress bill for 5 of them, and I don't understand why. And so I have a couple clients that I haven't been able to bring over to do this, and they're still on QuickBooks Desktop for that reason.
That doesn't make any sense. Like you said, you can do that in QuickBooks Desktop.
Yeah.
I wouldn't be able to. Yeah. Hopefully, if they're moving in that direction, you know, give them time, they'll get there.
Yeah.
Kind of depend. You know, it depends on where they're moving strategically. If they would, maybe they will.
Yeah. Well, you know, they're always paying attention to feedback, that feedback button in the upper right-hand corner of a new feature, or the feedback up under the gear. Please, 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 please. I'm going to get in your face and suggest that if there's something that it doesn't quite do for you, especially if it's a deal breaker, please let them know, because I've actually met the guy who every time somebody submits feedback, it shows up on his phone. Or there's a room with a TV on the wall that every time somebody puts in feedback, there's somebody actually watching it, because that's how they know, like if something maybe something broke and that's their first line of defense, they need to go fix this quick. That's how they know. But then they also tally all of the feature requests, and the more people who say that they want something, the higher up it goes on the roadmap, so that they know that they have to fix it. And you know, I know for a fact they listened. Like back in the day, check this out. Back in the day when the it wasn't the plus new button on the left, it was a plus in the top center of of it. So you would click the plus to make a new transaction, and then every time you saved a transaction, it puts up that confirmation that the transaction is being saved, but it was right over the plus. And so you would either have to wait the 3 seconds for it to fade away, or you would have to dismiss it. And I'm like, I just wrote into the feedback, like, guys, you're slowing me down by 3 seconds every time I do anything.
So that's why they moved the button. Thanks.
Yeah. Well. So two weeks later, I noticed that confirmation message, they just dropped it right down below the button. So you still got the confirmation message. It was no longer covering the button, and I know that it was because I complained.
Love it.
That is great. I had no idea. Like that monitor stuff popping up.
Mm-hmm.
That's amazing.
Yeah.
All right. Let's see. Let's consult the list of questions here. Actually, you know what? We did that. This question is something similar to what we did earlier, but that's okay. And you know what I think I'm going to do? I'm going to answer this question. Oops, hang on. I pasted this into the wrong area. And I'm going to dovetail that with answering a question that you had asked me earlier, Alicia. Mm-hmm. So give me a second while I just get this up here. Someone asked, I have a bank that won't connect to Xero. How can I upload the transactions to Xero? So it's actually the same technique that we demoed earlier with Stripe, but I'm going to show again because there could be different people. It's a long live stream. But I'm also going to dovetail that with the question that you asked me earlier, Alicia, which is, how do you look for transactions that haven't cleared? In Xero, if the bank reconciliation function is so different from QuickBooks, how do you do that? Mm-hmm. So I'm going to share that information with you as well after I share these upload techniques. So not every bank connects to Xero. Not every bank connects to QuickBooks either. And so what you can do is either download the transactions from your bank to a CSV or an Excel file. Then get them in the right layout, which I will show you. Then upload them. And one of the cool things I really like about Xero's upload function as far as banks, which includes credit cards, by the way, is that you don't have to have the vendor name and the expense account in Excel when you upload. All you have to have is the bare bones of the transaction, the date, the dollar amount. If a description came with it, that's always nice. helps us. If there's a check number, stop using checks. But anyway, if there's a check number, that can be uploaded with it. I found this to be problematic in the past when using the batch enter feature of QuickBooks Desktop, because you need the vendor name to be precisely in Excel as it is in your QuickBooks Desktop. You need the expense accounts to be, first of all, selected, and second of all, correct in Excel before you even use that batch enter capability in QuickBooks Desktop, which is very frustrating. It's because it's time consuming. I'd rather be able to just upload to the bank feed and then let the bank rules take over from there and do click, click, click. And by the way, also, if your bank, some banks also don't have a CSV download capability or an Excel download capability. We've actually interacted with some banks, more likely to be community banks, but we've interacted with some banks that our clients are using, in which we actually have to log in, highlight, when you go to the detail area of a bank account, like showing you the recent transactions, highlight the column headers with the date and the amount and all the things, and highlight from there all the way down to the bottom, highlight the actual transactions, copy them, paste them into a spreadsheet. But once you do that, it becomes super easy to get it into Xero. So let me show you an example of that using the Xero demo file. So hang on.
While you're doing that, let me offer a little bit of commentary on these bank connections. They do sometimes break. So even if you have a bank that's connected, that does not mean tomorrow morning when you log in, it'll be connected. However, don't panic. Give it 3 days. Because a lot of times they will fix it themselves and you do not need to panic. I cannot tell you how many times clients have said, oh my gosh, what do I need to do with my bank account? It's broken. Give it a couple of days. There's a good possibility it'll fix itself.
Right.
That will not happen though if, let's say, a bank gets bought by another bank and the API backend changes. Then you really do have to reset that connection.
Yes.
But those are the kind of things we can help you with. I will say that when you are initially setting up a bank connection, you as the client should be the one working on that connection with the accountant, with your user. In many cases, the banks will only permit a connection from the original, the owner user, not from one of our users. So if you give us a user ID, login credentials to your bank, that does not necessarily mean that we can get the bank connection fixed. You may have to have your help to fix that.
Excellent point.
Yeah, I'll frequently wind up zooming in with the business owner so that they can do the fix.
The good news is we know how to do it. We just need you on the screen with us for a couple minutes.
Right, so you don't have your password. But one thing is that the banks are always improving their security protocols, and so sometimes you do have to disconnect and reconnect in order to get that new token that works a little bit better. So if it's just down for a day, it's a bank issue. If it's down for 2 days, that's when you do have to disconnect. And here's a little hint about that. If you have multiple accounts at that particular bank, if you have to, first of all, if you're going to disconnect, make sure you've accepted all of the transactions in the bank feed before you disconnect, because if you have old stuff, you might not be able to pull it in again. But I found it more effective to disconnect all of the accounts with the bank and then reconnect all of the accounts with the bank. If you just try and disconnect one and reconnect one, it doesn't always work.
Excellent points, all. And I just want to throw this out there, although I heard you hint at it, Alicia. If you are the admin on the bank account, if you are the business owner, don't give out your credentials. Okay. So we're talking about uploading to a bank account if it doesn't connect directly to Xero. Not all of them do. And so here's an example. Let's take a checking account. Let's say there's no direct upload. You can come to the dashboard, click on these 3 vertical dots, and you want to click on Import a Statement. This is where 2 things are going to happen. Number 1, you can download the CSV template to lay out the information in the way that Xero needs it. Once you do that, you'll browse to the CSV file that you just created with the data on it laid out in the correct way and upload it. And you'll see what happens next. So we're going to download our CSV template. And now you can, in just a moment, you'll be able to see what information is required by Xero. So if it has an asterisk, it's required. If it doesn't, it's a field that's available to you. So now let's say we download a CSV or an Excel file from the bank, or we've logged into the bank, we've had to highlight a bunch of things, copy and paste. So hang on a second while I just generate some random data. I'm going to zoom in so that it's easier to read. I'm just going to generate some random data. So let's go with 1/1/2023, let's say, and just give me a second. This plus a random number between 0 and 2, and we'll go down for a bunch. Fine. And now we have some amount, and I'm just going to in between like 100. Actually, I'm going to make this negative impact. Actually, yeah. 100 and whatever that is, 1,000,000. I'm going to take that. Give me a second. I'm going to mess with it a little. Negative with the minus sign. I want the 1,000 separator because I just do. I'm going to take this plus, hold on a second. That's fine. And then times, give me a second. Times okay, this is randomizing whether the numbers are positive or negative.
Those are some giant numbers.
True. Okay, now they're randomized between positive and negative numbers, so I'm just going to paste those as values, and I'm just going to go like name, oops. Um, 10, or actually 1 and 9. I think that'll do it. Yeah, there we go. Like some random names. I'm gonna do the same thing over here, but with the word description. Okay, fine. So we have some random data. Oh, this is still not random. Hang on, I will make this random. We have random data. Let's say we've just downloaded this from the bank. Now we need to import it into Xero. So let me point out something. When you download it from your bank, it's probably not going to be laid out like this. That's okay. You can just lay it out like this. I mean, it's a little copying and pasting, or you can program a macro to lay it out like this. Notice that all the amounts are in one column, which is another advantage of this over some of the upload availabilities in QuickBooks Desktop or QuickBooks Online. I think where you have to separate out the transaction types. You don't have to do that in Xero.
Online, you can specify if your numbers are in one column or two.
Nice, nice, love that. If when you copy and paste, you have some numbers in the debit column and some numbers in the credit column. Here's a quick way to get them in the same column. So let's see, on the banking side, a debit is a negative. So you go like this, credit minus debit, copy and paste, and now these are the numbers that you can upload. Just to get them in the same column. Okay, so I'm gonna save this CSV file. I'm gonna close that. And here we are back in Xero. The key is to make sure that you clicked on the correct account, whether it's a credit card account or a checking account or whatever. And now we're going to import that statement. This is the one from before, which I'm just going to take this opportunity to get rid of because I'm done with it. We're importing this one. We click import. Because this is the first time I've done this, it gives me the option to make sure that my column headers from the CSV go into the right place. Date, date, amount, amount. Payee, yeah, payee, description, description. That's fine. And yes, don't import the first line because they're column header. Okay, so I'm going to click save. Look at this. It checks for duplicates. 176 statement lines were imported. Fantastic. I click OK, and it takes me to the bank feed area. Well, this is great. Some of these numbers actually match something that was in. Oh, this was already there from the demo file. That's why it's all lit up. I'm like, wow, that's a coincidence. So hang on a second. Jump to page like, let's say 19. Great. These are some of the ones that we just imported. So now we're in our bank feed area. So if you have, for example, an open bill and the payment didn't get recorded in Xero, you can record it by applying the payment coming in here on the left from the bank feed directly to the open payable. I'm not saying that that necessarily is the desirable thing to do. It depends on the situation. If your business is all electronic and transactions pretty much clear the bank when on the same day or close enough that they're executed, that could make sense to do. In general, I'm a fan of recording the transactions when they happen, even if they clear later, which leads to the first step in answering Alicia's question about, how do you find unreconciled or unclear transactions. But you can also enter straight from here. So let's say this was a disbursement to name number 6, and we're going to put in like a Fulton Airport parking. There we go. We paid them $3,568 because we were there for a really long time. We were we were Tom Hanks and Cast Away. That's why we were paying that much money for airport parking. But okay, what is that? Travel? Let's call that travel. Right? You can do the data entry from here. Plus, if you have bank rules already set up, it will populate this automatically. Then you can just look over that with your human eye and exercise your human judgment and say, yep, looks right to me. So since we're talking about this, let's look at the bank rule functionality, which in my opinion is more robust than the bank rule functionality in QuickBooks Desktop. I haven't seen the bank rule functionality in QBO for a while, so
Please
what?
don't. Just please don't.
Okay.
As the account, as the one who works almost exclusively in QuickBooks Online until very recently, I will tell you the bank feeds rules do not do you any favors. It more than likely is going to create more problems than it will fix. So that's one of the areas that I just have not found a good solid solution for. So I tend to advise people not to use the rules in QuickBooks Online.
Oh my goodness, I have the complete opposite experience.
Ooh.
I love teaching people how to use the bank rules properly. They do have to be taught to be used properly. You can't just take the suggestions. So
Yeah, that has
one.
not worked well for me for some reason.
Wow. What, uncategorized assets just doesn't do it for you? So let's look at some of these. So we can have spend money rules, receive money rules, and transfer money rules. Let's just go to some spend money rules. There's just so much that you can do here. In this one section, you can have an all or an any. So let's say if the payee equals name 06, or if the payee and in fact, we can even say contains, right? What if it's like a gas station with, ExxonMobil 12AQ34 because that was the location number? Like freaking just call it ExxonMobil and move on.
Mm-hmm.
So it contains the what Intuit calls the alias feature all in one fell swoop, which I like. Or payee equals or contains name 08, let's say. Then set the contact to demo name, which I'm going to add right now. Existing. There we go. I'm going to skip the fixed value, or here, I'm not going to skip it. Say like the first $10 of that transaction will always go to dues and subscriptions. With this special purpose, it's always going to be north, and it's always going to be administrative, and the amount is 10. With the remainder, allocate items in the following ratios. Is that not freaking amazing?
I love. What if
Yes.
you want to allocate the whole amount? Like if you have a $100 transaction, you want to put any of that in the first line, but you want to allocate all of it by percentage.
You can just X this out.
Okay.
And then this goes into like dues and subscription. Let's say this always gets split up among, let's call this admin, and this is 25%. Look, it's red, must total 100%. It could even be the same expense account.
Just different purpose. Love it.
A different special purpose we can do 25%, right? So, but what if for East and West, it's something else because they use it differently? I don't know. I'm just making things up. Office expense, East, 25, and office expenses, West, admin, 25. Set the reference. Whatever, you can even have different rules. Like what if it's name 6, but they're spent on a credit card? Different rules apply, let's say. If you always spend on a vendor name 6, and what you spend with them from their credit card is always this type of thing, but if they're pulling from your bank account, it's always that type of thing. Mm-hmm. these bank rules can be account specific. And give this rule a title, name 6 and 08. I click save on this rule. And let me get past the ones that were in here from the demo file. And you'll see what happens. I don't know how many pages this went to. There. Hang on a second. Let's click reconcile again. And I think we had to go to page, like, let's say page 4. Oh, that's received. That's why I was like, oh my gosh, it's not doing it. Look at that. Look at that. Name 8. It's a money spent. And we have, it's popping up like, oh, we want to apply a rule. I can say, yeah, it's now entered. It's done. Like that was my data entry. And I can go through here. But I'm also exercising my professional judgment to be like, oh, actually that one doesn't apply in this case because of whatever. Right? But so I can say, no, actually, I don't want to apply the rule. And in this case, it's going to be whatever, just something else. And this one's going to be this. And that's what that is. But for the rest of these, I can go through, okay, looking good. I can go through here. Yeah, looks good, looks good, looks good. And I'm handling data entry and reconciliation simultaneously. Yeah, looks good, looks good. This is a beautiful thing. So I want to answer your question, Alicia.
Yeah.
Right. So here's the answer. I'm going to show you a report. So transactions can be entered other than through the bank feed. You have what's called a spend money transaction. There are multiple ways to do it. Same as QuickBooks, it's just called different things.
Mm-hmm.
This one's called spend money. This one's called receive money. This one's called transfer money. You also, just like QuickBooks, we have invoices and bills, and payments can be entered against those. So all of these create transactions that affect the bank account, and you don't have to rely on the bank feed to do data entry. So let's say we're entering something into the checking account, same transaction by the same type of clicks, and if you have a credit card on the books, same exact thing. There's a credit card feed, or you can do direct entry if it makes sense. So we're receiving money from whoever begins with A, city agency for sales. It's East Side for fundraising. That's receive money transaction. Data today, I'm clicking save. Here's a spend money transaction. A, who's with Hoyt Productions, spending on things. Consulting, and it's consulting for North. And, or you know what? It's actually half for North and half for West. And we can even show that with this. Okay.
And that item column on the left, by the way, is that for products and service?
Great question. It is, and it's actually much more flexible than the items in QuickBooks, because in QuickBooks, the item has to be assigned a general ledger account. Mm-hmm. In Xero, the item does not have to be assigned a general ledger account. You can assign it one for convenience, so it pops up automatically over here, but it's more just another business intelligence data field. It's brilliant.
And I will say one of the biggest challenges with this specific issue in QuickBooks Online is you cannot do batch recoding of an income account if it is connected to items, because those items are mapped to an income account and you cannot do batch recoding with that.
True.
Well, but then wouldn't you just edit the item to change it to where you want it to go?
Yeah, but if you've got 10,000 items that are all mapped to the income accounts that the client created initially, and they created 100 income accounts that all line up with their 10,000 inventory items, it takes a minute to fix that.
Right.
It takes a minute because QuickBooks does not give us the tool to batch do that because it is connected to an inventory item.
Right.
Mm.
Right. That's where C data comes in. That's my backdoor on that one.
Thank you. All
Yes.
right. I've heard of that. It's all like something in all caps. C data?
Yes, C Data is an app that allows you to access your QuickBooks Online and other apps as well through an Excel spreadsheet. So it's an Excel add-in.
Mhm.
So Jamie, it's right up your alley, where it allows you to look at the tables through Excel, and you can do anything that you do in Excel to your live QuickBooks data. So you could go in and change that income category and just copy it all down and change it and then save it.
I
And
need
then
to
it's
use that then,
updated.
because I have not found an
Sweet.
easy way to do that.
Do you
Yeah.
recall how much it is?
Just always make a backup before you
Yes.
do that, because it could have unintended consequences. But
What
yes,
could possibly go wrong?
what could possibly go wrong if you change the data in the database instead of in the fields?
Yes.
What could
Is
possibly
that
go wrong?
QuickBooks Desktop and online?
I believe so. Yes.
Okay.
Actually, I know so. Yes.
Okay, nice.
That was awesome. Okay, so let's save that $2,000 transaction. That's done. That's done. Let's enter a transfer from Stripe to checking of $1,000. Clicking transfer. By the way, something that's a pain about Xero, the transfer screen did not have an icon to attach a document. You have to enter the transfer, then go into the ledger and then reopen the transaction and then attach the document. What a pain is that? It just in the data entry screen, this was not here. So I really hope that they fix that in the future, because plenty of times you make transfers and you need documentation attached. Do you see anything? I don't see anything. It's an irritant for
I'm
me.
gonna go put a little request on the help feature. Hold on.
Please. So let's look at the invoices. I'm going to enter the letter A again. Okay, Bayside Club. We're going to charge them whatever. $15,000 to sales, and something goes here and something goes here, whatever. I'm going to show you how to enter a payment on this invoice. So we have a payment that's happening that we didn't import. So this is the invoice. It has the same layout as the bill. Here, we haven't used yet. Charges, whatever. $3,500. Lots of consulting happening today. Let's call it salad and let's call it administrative. Okay. So here's a bill for outbound, right? We owe somebody something. And here's an invoice for inbound. Somebody owes us for something. Either way, it's exact same data entry. And at the bottom is where we enter a payment to be applied against this. So let's say they paid $10,000, or I would need a new number, $11,000 on this today. So 12/4/2021 paid to the bank account. And
Be nice to have an attachment field there too.
no, yeah, that's also a pain. There's no attachment field here.
Yeah.
You have to click add payment, which adds it to the checking account ledger. Then you have to go view invoice, and then oh, I entered the whole thing. I didn't mean to. Well, fine. I'll show you another feature of Xero Cares. Remove and redo. Okay, so
You can't just edit
like I
it?
was saying,
You can't just edit it?
not payments, which at first was a pain, but and a real irritant for me. Like, oh, really? Why do I have to remove and redo? However, over time, I came to see that it's advantageous. Why was that? Oh, not that it's advantageous, but it doesn't matter, because all you have to do is go back to the bank feed, and the matching of where it was imported to what you recorded, it'll just light up green again. It'll just appear and you click OK. Your reconciliation reports are not affected. I mean, they're affected before you re-reconcile it, but once you re-reconcile it, there's no drama. There's no like, and now the reports are out of whack until you do another monthly reconciliation. Yeah, I'd rather it be editable, but because it's not, at least I can say that it doesn't mess up the bank recs. 12.4, going into checking reference is whatever, ACH, let's say. And same thing down here. Let's say we're paying $32.50 on this bill, 12.4 we're paying it outbound from checking and EFT, let's say. I'm just making that up. Okay, we click add payment. All the things that you just saw, receive money, spend money, transfer money, record a payment on an inbound, record an inbound payment on an invoice, record a disbursement on a bill to a vendor. All those things affect the checking account.
Mm-hmm.
So the question is, how do you keep track of all that if Xero doesn't have a bank reconciliation function in the same way that QBO does? The answer is you go to the reconciliation report. Xero has reconciliation reports. What they are a true reconciliation report. They only show the reconciling transactions. Now, there are other tabs in which, just like Intuit, you can see all the transactions from that period, like the full ledger. However, this shows the balance in Xero as of whatever date. Xero bank recs are also bank rec reports. You can also run them by whatever date you want. The balance in Xero as of that date, the balance per statement, which is everything that's been uploaded, and a full listing of all the differences. This is printable. There's full transparency and all the things that we need to account for are here.
So
the downside,
scroll up to the top.
Sure.
So just the top section. So it's the ones that say outstanding payments and outstanding receipts. That's where you're paying attention to, and you're making sure that there's a reason for all of them.
Yes.
But how do you find duplicates that way?
The same way that you would find duplicates the same way that I find duplicates. If I look at something that's old, I start to troubleshoot it. And my first thought is, was it entered twice? If so, the one of them cleared and this one's a duplicate. That's just.
But then you have to go search for it and go look at a register or search
Well,
for a dollar amount.
I wouldn't look at the registers, but I would use find and recode the find part of find and recode to go look for it, to look up the dollar amount, the date, the name involved, and to see if this was in fact a duplicate.
Yeah, I think for me that would make more work, because if I'm doing a reconciliation and I'm finding things that aren't on it, I look at the context and go, oh, it's just right here. Oh, they took this one instead of this one, or the one that they manually entered through receipts that has the receipt attached. I want that one, not this other one created from the bank feed. So I think for me, I would want to be able to see it in context.
You can see it in context by running an account transactions report, which is the name for the transaction detail. So, for example, checking account, we can run for this month, let's say something like this. Now, one thing that this lacks is a column that indicates whether or not it's cleared. And that has been very useful in QuickBooks, and that's lacking here. I can tell you that Xero is really built for really tech-forward environments. I know that we often, it's built for tech-forward environments, lots of automation, especially companies that have ditched the paper checks. And when everything happens electronically and in an automated manner as possible, I actually haven't missed that cleared column. At first, I really missed it because I counted on it quite a bit. what I also realized though is that the recommendations that we were making to clients for how to do business, how to handle the financial part of how to do business, our recommendations changed and they became more automatic in how they moved money. And so we don't really have much of an issue with duplicates or needing to see what's cleared and not cleared. This really is enough for us to see, my gosh, this has been outstanding for a while. Normally they'd be hooked up with an automatic electronic payment. But if they didn't sign up to receive payments electronically and we had to issue a paper check using, let's say, Bill.com, well, we'd know about it anyway because Bill.com sends out notifications when someone doesn't cash their check soon enough. But we'd come here and see that. But just the nature of how people do business changes. And we really don't have much of an issue with outstanding checks.
I think outstanding checks are probably less of my concern because those are obvious. That's just like, oh, it's still there. Nobody's cashed it. Then,
yeah, no, I'm sorry. I misspoke. You were asking about duplicates.
Yeah.
Yeah. Yeah, it's less, I don't know, it's less of an issue, I think. I mean, maybe I just haven't come across it a lot, but when there's a lot of automation set up and the automation's working well, I haven't seen duplicates be much of an issue.
What about missing transactions? I had a
So-
cleanup recently that had a real issue because when we ported in the information, we could only get in the last 90 days. And there was a period of about 2 weeks there that we were missing. And it took a minute to dig down and figure out what that portion of time was because there was no easy, clear column. There was no way to see, did this import? And what happened was through, a course of several attempts to fix it, we ended up in some cases with double entering it, the stuff that we were missing, and then having to delete it and redo it. And because it's already been cleared within bank feeds, if you import that again, it doesn't give you any alert that says this is already in your books. This is a duplicate.
Right.
So it's really easy to add a duplicate in that case because there's no restriction in place that says you already have an identical transaction on the same day. Are you sure you want to add this?
Right. I haven't seen anything like that in place that would alert you that, hey, there's already an identical looking transaction. You want to take a look at that? I haven't seen anything like that. I think that could be very helpful in the opening stages of an engagement.
Right.
I can see where that's very helpful. Once an engagement is up and running, we've never seen a need for it.
Yeah,
but I can definitely see that. Yeah, right. I mean, I can definitely see the need for that during the cleanup stage. When you first start working with a client, or if anyone's watching this who is not in public accounting, but you're an in-house, you're W-2 employee, you're the bookkeeper for an organization. When you first take the job, you might find stuff like that. I mean, your predecessor was a predecessor for a reason, and so there could be things in there that really need some catch up or some fixing, and those things need to be checked out. I haven't seen anything to protect against duplicates like that. But here's, this is where I go to look for any outstanding transactions. And this right here means that something's been imported into the bank feed and has not yet been moved into the general ledger. This is helpful as well.
So that's everything in the bank feed right now waiting.
Yeah, including all that stuff with name, or maybe not since the date. If I move I forgot what date range I put in here.
Yeah, I mean, kind of the only what's going through my head is that the only way, if you're finding that it's less necessary, then the only way that I can reach that conclusion is if the way that Xero works prevents some of the duplications from happening.
I don't know. I mean, it kind of
otherwise, I'm not sure how how it's less needed.
I don't see us coming across a problem with duplicates that much. So I guess it would kind of depend on what situations you're seeing that are causing the duplicates in the first place.
Yeah, like a very, very typical one is if you're using receipt capture and you're sending receipts in, a lot of the time, especially my construction guys, for some reason, will code the receipt with the wrong dollar amount. Like they'll transpose a digit, and so the
Oh.
transactions in that has the receipt, which is the one that we need, but it didn't match the bank feed, which was pulled in as supplies and materials, and then we have to delete the one from the bank feed, fix the one that is attached to the receipt, and then rematch it again. And that's
That I can
very,
help
very
with.
typical, but that could be because of the way QuickBooks handles paper receipts. But it's user
So-
error. It's user error that's making the issue.
True. So I can answer that just from our particular tech stack. Our tech stack of choice is Dex and Xero, and so Dex is fabulous at detecting duplicates. Furthermore, Dex, unlike some other expense receipt platforms, Dex actually hooks up not only to the accounting system, but you can hook it up to the bank or credit card accounts. So when all of these things are hooked up, Xero and the bank and credit card accounts and Dex, they're all talking to each other. Not only does Dex detect duplicates, but it also detects when a transaction is already in Xero and later we get a receipt for it. It will identify the transaction and we can look at it and say, yep, you identified that correctly. And it could push through only the document to that transaction. So it now discharges that in Dex. It can be archived. Puts together the backup documentation, like the receipt, with the transaction in Xero without having to download and manually do anything or end up with duplicates and whatever. All of that sorting out happen, and the automation related to that happens in Dex.
Right.
And so similarly, it has an OCR built in. So when someone sends a receipt, it's the OCR parses out the date and the transaction total and all the things into the different fields. We actually put more bank rules in Dex than we do in Xero. Bills can be pushed through, spend money transactions can be pushed through. Similarly on the income side, but we don't use it for that. That's where the automation happens for us. And then we just have our bookkeeper, looks over it and says, exercises professional judgment. Does that look right? So for example, if there was a balance due that was rolled forward on a bill, and last month was $50, but this month is $50, and the bill total is saying $100, Dex is going to pick it up at $100. And the bookkeeper is going to change it to, no, only record the new charge. We already recorded last month's charge last month. So there's a little bit of critical thinking that goes on in there to just check the automation and then push through either the transaction and the documentation or just the documentation if the transaction's already there. So I guess hearing that's one of the reasons why duplicates aren't an issue for us anymore. They used to be though.
So it's Dex. That's the key in that, not even the QuickBooks or the Xero.
Jamie's right. Dex looks at the whole image as a whole and says, you've already done something with this exact same image. So, really, and it'll do it to the level where it can be the same invoice every month, looks identical, but the only thing that's different is the invoice number. It knows that's a different document. Cool. Or a Home Depot receipt or let's say, perfect example, a meal receipt that has tip on it. They sent it in. They didn't record it they recorded at the original amount without the tip, and then you get the new one with the tip on it. It's going to be able to tell that it's a duplicate, but that the amounts don't match based on what they submitted. So it has a little extra level of, I guess, engagement with the critical thinking that you don't necessarily get if you're just going directly into Xero or QuickBooks Online. And I personally love the idea of not putting everything into one tech stack or one tech tool, because all you need is to log in one morning and not have that tech tool work, and suddenly your whole day is shot.
Right.
So if you've got multiple tech tools and you can still perform functions in another place and still get access to that data in another place, at least you don't feel like you're being held hostage. But yeah, Dex is pretty good about catching duplicates. I think Jamie's right on that one. That's probably why we don't see that a whole lot in Dex done on in that Dex scenario.
Beautiful.
Although just telling people go use Dext instead may not be the best solution for the solve for everybody, but it's super cool that Dext brings that to the table. That's awesome.
Yeah. Great. This was a great exploration here. And let's pause for a second. I want to thank our sponsors and presence. Why the three of us are here, giving out thousands and thousands of dollars of advice to the community of accountants, bookkeepers, business owners, and nonprofit leaders that are out there watching this bookkeeping-a-thon on a variety of social media platforms and locations. So first of all, we are here in support of the Racial Justice Center Building Fund. And I'm going to read to you a little bit of information about that. Hang on just a second while I get here. This information that I'm about to share with you comes from Catrice Jackson, who is the owner of Catriceology Enterprises. That is the business that is currently conducting the programs such as Harriet's Dream for racial justice and racial healing. Those amazing healing programs are currently being done in Omaha, Nebraska in a rented commercial space. And what Catrice, like many business owners and like many homeowners, seek to do is own the space and have greater control over the destiny of the organization. Like homeowners like to own their space and have greater control over the destiny of the people living in it. And of course, that also helps to build financial wealth. And so I want to share with you some words that Catrice Jackson has written about this campaign. She says, the Justice is Love Coalition, which is also part of her company, Catriceology Enterprises, is launching a reparations and economic justice campaign for a racial justice center in Omaha, Nebraska. Funds will be used to purchase and renovate an existing property or to purchase land and construct a new building and to pay for the Racial Justice Center's operations. The outcome of the campaign will be a permanent location for racial healing and racial justice in Omaha. The Justice is Love Coalition dismantles oppressive systems and replaces them with racially equitable and just systems so all communities can thrive. The Racial Justice Center will house Harriet's Dream, which is the only racial trauma healing and wellness center of its kind for Black women. Over time, the Racial Justice Center will also house a range of vital programs for youth education, community policing, economic advancement, and community peace for Black lives. Economic justice, Catrice says, is racial justice. Justice is love. And Catrice is asking us to put our money where our heart is. And that is why Jen and Alicia and I are here today, live streaming this bookkeeping-a-thon, because we are putting our energy where our heart is. We have put our money where our heart is, and we are asking you to do the same. If you can click on the GoFundMe link in the live stream where you're viewing this and send in $5, $25, $300. If you can send in funds and move funds towards this campaign, we can help these amazing programs that bring healing, peace, and justice for racial justice for Black people and especially Black women in Omaha, Nebraska, and also those who come from all over the country to experience these amazing and healing programs. This is why we're here today. And so along those lines, I have a quick request. When you do move the funds and make your financial gift to this campaign, if you can scroll down a little bit after you click donate now and enter your information, if you can tag your financial gift with my name in the referred by box, that lets me know, that lets all of us know that you want us to extend the bookkeeping-a-thon and share more solutions with accountants, bookkeepers, nonprofit leaders, and business owners who are watching this. We are here live streaming this as long as money is going into the Racial Justice Center Building Fund campaign. This is why we're here, and tagging my name not only helps me to be accountable to Catrice for funds raised, which I'm fully committed to doing, but also lets us know that this is why you did it, the Bookkeeping-a-thon, and we will carry on. I want to give a thank you to our two sponsors today, who are Xero and Practice Ignition. Both of these organizations have programs that we personally use in our accounting firm. We save ridiculous amounts of time using the automation and the features in these. And one of the reasons why I reached out to Practice Ignition in the first place is that I'm one of the Practice Ignition's top 50 women in accounting. And I know that they stand for social justice. They've been running this special program to recognize women in what is still a male-dominated industry. And if you think otherwise, because you know a lot of female bookkeepers, just look quickly and see who are the highest earners in the industry, who are the partners of accounting firms in this industry. Practice Ignition knows it, and when I reached out to them and asked them for their support in racial justice, they did not hesitate. They were like, "We stand for the cause, sign us up." And this is their official message. They say, "Win clients, get paid every time. Run your business like clockwork with automated proposals and payments." That's what they do. Proposals and payments in one convenient client engagement and commerce platform. So you can focus on what matters most, your clients.
You know, I laugh, but at the same time, I keep myself muted because my cats can get loud. So if you hear that at some point, I apologize.
That was funny.
We live in Southwest Florida, where it's A, summer all the time, and B, like, you see bugs sometimes. Like, there are bugs here, and I recognize the sound. Paper towel, now. That's what that was.
Oh, gosh.
Okay. But you know what? It's completely worth it, because our natural disaster, we have like 2 weeks notice on our natural disasters. You're never going to escape natural disasters. The least you can do is get notice on them. Like, I could never live in Tornado Alley, but you know, it's 2 weeks, you know, that hurricane's coming. So you can make plans. Anyway, okay, so yes, Practice Ignition, we have an amazing rep. And if you would like to get introduced to our rep, just let me know. It would be my great pleasure to make a personal introduction. And before I talk about our second sponsor, I would just feel free to talk about Practice Ignition, your own experiences. We could have different people on the live stream.
I mean, I've done contracts for years under, you know, Word, and uploading it to my e-signature program, and then getting the signature and collecting the ACH information manually through the same thing. Like, it's easy enough to do it there, but when I develop my own contract as a result, I have to come up with the layout myself. I've got to come up with the contract language myself. Now I can go to my attorney, but they're not going to give me something that looks nice. And I do care about the way my contracts look. I don't want it to be a wall of text. I want to break it up. I want to have some lines in there, a little bit of color, a little bit of design elements. The Practice Ignition layout is so clean and so easy on the eyes, and the information flow is very organic, it feels user friendly, and it feels well developed for the user to understand what they're reading. So you can go through a lot of contractual language without feeling overwhelmed in the process, which I still have trouble with because I'm not using Practice Ignition right now.
For now.
I might have to change that.
Not yet.
By the way, they have this new feature where you can send out a video along with your proposal.
Oh, I'm so excited. Okay. Yeah, no, that's good stuff. I like that.
Okay. Everybody, I'm going to be right back.
Okay. Our second sponsor, what?
Sorry, Alicia dropped off for a second. I was going to ask her if she has any experience with practice ignition, if she'd ever used it herself for her firm.
She does.
I'll come back and answer that. So the short answer is no, I haven't, but that's because my practice is all short Q&A. I don't have ongoing bookkeeping contracts where I provide the same services to people over time, or I do, but like 5 people. So my experience and exposure to practice ignition is actually from being on many different demos of it and seeing it and going, oh my God, this is so cool. I wish I needed it. So that's that's kind of where my experience comes with it. In fact, the first time I ever went to my local Woodard Group meeting, the Lunch and Learn to always featured a sponsor, and Practice Ignition was the sponsor that day. And so the very, very, very first time I ever showed up in that networking group, that was my experience, was like, wait, you can do that?
Right.
Oh my God, that's so cool. I wonder if I can like find a way to use it. And, you know, unfortunately, because I'm not an ongoing contracted fixed price person, I'm the person that you call when it ain't working and support's not helping. That's, you know, so I'm one-offs. But if I did, I would use it.
Yeah, I love, you know, I love the fact that it's both payment and contract in one. I love the fact that you know, we can pull from our client account. We can choose. There are some platforms where you can pull from your client account, but there's one of the advantages that Practice Ignition has in that regard is that you can choose on a client by client basis if you're going to allow them to choose ACH or credit card. In some other platforms that I've worked with, if you're going to open up credit card as an option, you have to open it up for everyone, and that's going to cost you a bundle.
Yeah, that's exactly right. And merchant.
Yeah. So what we typically do is we let people use credit card for the initial payment. It's quick, it's easy. You know, let's get up and running. And then we transition them over to ACH for the recurring monthly fees.
Makes sense.
And then, you know, it's like once we're up and running, let's do the bank verification and all those steps. And, you know, that approach right there has saved us a ton of money, which I love. And of course, not to mention when someone signs, the money moves automatically. But you can also turn that off if you're in a situation in which you don't want the money to move just yet. We're not going to start providing services until 2 months from now, but we want to sign contract in hand. So we don't want the money to be sent in now, but we do want it to be automatic that 2 months from now, the money moves. And I love Practice Ignition for that. Our other sponsor is Xero, and I want to share with you their message. Xero's cloud-based accounting software has been recognized globally as a leader in the market by a number of business software review platforms. Track your business on the go and be confident in your numbers wherever you are, with greater control leading you to better decisions. Keep records tidy and make compliance a breeze with Xero. You know, I just connected some dots because every accounting system says that they can make compliance a breeze. And you know what? I'm not saying they're wrong. However, there's compliance and there's compliance. There's your basic financial statements, which every accounting system should be able to run. But you also have certain other types of compliance. Earlier in this live stream, we were talking about PPP forgiveness compliance and ERTC compliance. Run reports on that. Earlier in today's live stream, we were talking about nonprofit compliance with producing very specific reports to meet a funder's requirement, like a grantor, for example, or functional expense categories. And the degree of flexibility that exists in Xero reporting is really the best I've seen for the small business market. So I wanted to draw that distinction there. You know, like there's compliance and there's compliance with the custom reports and that extra business intelligence feel that's available. I just love it. I love it. That's why we keep, you know, we try to approach every situation dispassionately. Like, what's the best accounting system? Sometimes QuickBooks Desktop really makes the most sense, and here's why. Sometimes QBO. This is why it really makes sense to have QBO in play. Most, in my opinion, most likely QBO is going to be the answer when there's an essential third-party system in play that's industry specific, and it integrates with QBO and not Xero. But if that's not in play, I go with Xero every time. I just love it. The automation, the more flexible reporting, it's awesome. So I want to thank so much both Xero and Practice Ignition, who just jumped at the chance to support racial justice as they work to elevate the entire accounting profession every day. So thank you. Let's take a look. I'm going to check all the places where this is being live streamed to see if any additional questions have come in. If so, we will address them. And if not, I've got a stack of questions here, both commonly asked questions and
they really did respond quickly. It's not like you asked them a couple months ago.
What? Sorry, Jen, what? I didn't hear you. I wonder if there's a sound issue. Can you hear me?
Oh, I'm having issues with my bandwidth. I'm going to run downstairs and just, I'm going to have to restart. So I will be back in a moment.
Okay.
And I'm still here in the background, but Jamie brought me lunch, so I don't want to be on camera.
Okay, great. All right, let me just check the live streams here. Going to refresh in the places where we're streaming today. And then we'll hit the next question.
Yeah, we have so many places where we're streaming right now. We're streaming live on, I think, 6 different locations on Facebook and 2 different YouTube streams. It's pretty cool, this new technology. So for what we're using, everybody, is called Restream. And so instead of just broadcasting our Zoom, which was our original plan, Restream allows all of us to be able to get all these fancy controls so that we can change who's the main speaker and actually broadcast out as a broadcast instead of just a screen share. So it's a pretty cool tool for the job.
Thank you, Alicia. I never even heard of it before we started planning this bookkeeping-a-thon, and I love it.
Yeah, usually Jeff, our tech, is the guy who's running the show. So this is the first time that I've actually sat behind the controls. I'm like, ooh, this is kind of fun. There's
Oh, that's great. Oh, that's fantastic. Yeah, JP was wondering how we were streaming it.
Mm-hmm.
All right. What else? Let me, check this out. When we run, I see this problem fairly frequently, and it's answered differently depending on the accounting system. And the accounting system wasn't specified in the question, so I'm going to do a demo with QuickBooks Desktop. But Alicia, once I read the question, if you've got an answer in QuickBooks Online, go for it. The question is, when we run a cash basis balance sheet, we're showing a balance in accounts receivable. But I thought that was supposed to disappear on the cash basis. How do I get rid of this? So I'm going to do a demo. I'll do my demo first because you're eating. So I'm going to share my screen. Give me a second while I do that. share screen, share that screen, and scoot. Okay. All right, you can see my screen. So I don't need invoices anymore. Right, so cash basis, we're showing accounts receivable. Let's see. Look, we have a cash basis balance sheet and we're showing accounts receivable. That is not supposed to happen. The whole idea of cash basis means you don't have receivables. You are only showing income as it's received, which means there is no receivable, because a receivable means that you've provided services or delivered the product. So it feels like you've earned the money, but the money hasn't actually come in. So if you're running cash basis reports in the first place, you shouldn't have receivables. And so that means you are right. This needs some troubleshooting. Now, you could take the long way by double clicking and going through this detail and saying, wow, let's look at this and figure out who did it and why and how to fix it. Don't do that. I'm going to show you in QuickBooks Desktop how to run a custom report so you can quickly ascertain who is involved, like which customers or clients are involved with generating this amount, which immediately narrows down the field. So let's take a look. Accounts receivable. We're going to go to the reports menu. We're going to run a custom summary report. And that summary report is going to show us cash basis accounts receivable by customer. So you see this 21/27/16 as of December 1st, 2025. We're going to run a report that's going to show us the same total, but broken out by customer. So summary. No from date, 12/1/2025, because that's the date in our sample file. Display rows by payee. That's how we get it by customer. But I'm clicking on advanced to only show us non-zero, because there could be like 500 customers in this file. I don't want to see all of them. I just want to see the ones that aren't zero. And I'm going to click on filters and only show us accounts receivable. And then I'm going to copy this and make a header and say accounts receivable by customer. Let's call it cash basis accounts receivable by customer. And last, let's have this report be on the cash basis. Let's go. Who is at fault? Here we go. What I tell you, that same 21/27/16, only now we have it broken out by customer. And we can look at this and see what the situation is. We can look at it right here and then look at the details behind the situation and determine what's happening. For example, is the balance sheet being debited? Because that is something that's going to generate accounts receivable in a cash basis balance sheet in QuickBooks. It shouldn't, but it does, because that's how QuickBooks works. It's wrong accounting, but it's the tech thing. And look, what a shocker. We have a balance sheet account, inventory asset. I swear, I didn't even look at this in advance. But some, dollars to donuts, it's because something's debiting a balance sheet account instead of the P&L. So this is showing up on a cash basis balance sheet. It's, it needs to go to inventory asset. It still shouldn't show up on a cash basis balance sheet though. So that's that situation. Let me hit escape, and let's look at the other situation, the 1793/14. Could be the same thing. Could be that something's hitting a balance sheet account. Yeah, in this case, it's retainage receivable. That's a balance sheet account. And so that's why if there's an open balance for this customer, it's going to show up on a cash basis balance sheet. So you'll have to make an adjustment based on your knowledge of the situation. But those are the clicks on how to quickly, look, I did this in 3 minutes, whereas the accounts receivable ledger is huge. And in a couple of minutes, I found out what the problem was. And then you can use your specific knowledge of the situation to make the fix.
Yeah, I mean, the upshot of the question is that if you are correctly using your workflows of invoices and payments, when you switch to a report that's cash basis, you shouldn't see anything there. So it does mean that somebody recorded a transaction that would not be a cash-based transaction, like a transfer, or something's mismatched in the products and services, something is hitting accounts receivable that shouldn't be hitting accounts receivable. And so, when you're looking at, for instance, actually, can I do another demo?
Yeah, go for it.
And I don't know if I can replicate this specifically because it's it's a fake file. But what I would typically do in that case, I mean, in order to get my accounts receivable, I'm going to have to go to accrual because I don't have anything in here that's faking it out. But another way of doing what Jamie was doing is to look at your accounts receivable register, and you really should only be seeing invoices, payments, and credit memos here. Right? Anything else that was here is not normal workflow. Like, you don't want to see a deposit. If you see a deposit here, it means somebody coded a deposit in the banking feed and said, this is accounts receivable. And I've actually found that the people who do that tend to be CPAs because they're used to thinking about it in terms of double entry, like what's being debited and what's being credited. And so they're like, oh, this payment is debiting or crediting accounts receivable. So they type in accounts receivable, not this deposit is this payment for this invoice. And so that's kind of where it falls down. So what I will tend to do in looking at this transaction that I have right here, I know that the things that are valid for accounts receivable are invoices, payments, and credit memos, but not much else. So I'll go up to customize this report, and I'll filter it by the transaction type, and I'll make sure that I have everything that I'll select all except invoices, payments, and credit memos, which are the ones that are supposed to be there. And then when I run the report, there's one. I've got one thing in here that's miscoded. And so that's how I would do it in QBO to quickly locate something that's not supposed to be there.
Another quick way, by the way, is grouping by transaction type as opposed to by account at the top.
Oh, right. Okay.
You don't want to
So
go through the
let me go
filters.
ahead and take off that transaction type filter and demonstrate that, because that's also a cool way of doing it. So if I group by transaction type, let me go back to cash based to see if I can make it work. No. Okay. So then I can collapse. Here's all my invoices. Here's all my payments. Here's all my credit memos. And there's something else that's not supposed to be there. So that's another great way of doing it. One cool thing about cash versus accrual reporting that I want to point out to people that you might not know is there, it's like I consider it one of the best kept secrets, is that no matter what basis you're reporting your taxes on, so let's say you're reporting your taxes cash based, but in reality, there's accrual activity. I'm putting out invoices and waiting for people to pay. I'm just not counting the income till I got paid. But what you can do is, so if my file is cash based in the settings, I can also go up to, and this is specific to QBOA, so the accountant's version. Business owners can't do this, but bookkeepers can. You can go into this reports options, and this sets the default across all users. And not only can I say, all right, I still want to see my reports accrual basis so I can keep tabs on my invoices. But you know how it defaults to last month, and every time you run a report, you're like, okay, I got to go change this to year to date. You can come in here and change this to year to date or whatever your favorite period is. But now, so my reports by default are now year to date accrual based, even though my company is cash based.
Oh my gosh.
Isn't it it's a game changer for some people.
Yeah.
And so now when I go to a reports and I just run any report, let me go run a P&L, even though my company's cash based, my P&L is defaulted to accrual so that I can see the reality to what's happening. So here it is, a year-to-date accrual. Here's the reality for my actual real-life business activity. And then I'll change it to cash-based to see what I'm going to tell the IRS. Right. So
Nice.
that's this accountant tools reports options is one of the best kept secrets. The other thing I really, really like about it is that it shows me the reconciliation status of all of my balance sheet accounts. You can get some of that information from the overview tab. Like that's going to tell you when your accounts that have been connected to the bank feed, it'll tell you when those have been reconciled. But it won't tell you everything else. And I'm one of those obsessive compulsive people who I try to reconcile all of my accounts. Now, this is, again, a fake file, not my real file. But if you were looking at something that I had my finger in, you would see reconciled as of straight down the board for everything.
So this is the online version of the Accountant Center in QuickBooks Desktop.
Yeah, the Accountant Center in QuickBooks Online is up here under the briefcase in Accountant Tools.
Yeah, my favorite thing about that Accountant Center in QuickBooks Desktop is that you can see the last reconciled all in one place. And that's tremendously useful. I love this. This is great.
Yeah, always make sure you click around and check things out. In fact, on December 17th, I'm teaching a class called How I Learned to Love QBOA, where it's for, especially for, there are people who are amazing expert bookkeepers and accountants who have been in the industry for decades, and you're excellent at what you do, but you look at QBO and you're like, no, I'm not doing this. I don't like it for this reason, this reason, this reason, and this reason. Those people take my class and they're like, oh, okay, I get it. It's not over here. It's over here. Or this complaint that I had, you can just get around it by doing this over here. And so like one of my favorite things to do is convert QBO haters to QBO. Jeff Weathers, if he's still listening, I know he was earlier. He's one of my latest people. He was like, I like desktop. I'm comfortable there. I teach it at SBDC. QBO is that newfangled thing. Not interested. And I showed him a couple things. He's like, oh, and now he's teaching his SBDC classes in both online and desktop because he's like, this, you might like this.
That's great.
Yeah. So it's all those little tips and tricks like that.
Love it. Love it. All right. Let's see what other questions have come in. And I want to give a quick shout out this time to our sponsors, and then we'll get to the next question. Practice Ignition and Xero have powerfully chosen to sponsor this Bookkeeping-a-thon, which exists for the sole purpose of raising funds for the Racial Justice Center. So if you're watching and you have not sent a financial gift to the GoFundMe campaign for the Racial Justice Center, I'd like to invite you to do that now. If you received value today, if you are bearing something in mind that will help you help someone else, I'd like you to consider sending a financial gift to the Racial Justice Center campaign today. That is why all three of us are here running this all-day bookkeeping-a-thon. As long as money keeps coming into that GoFundMe, then we will continue to deliver high-quality bookkeeping solutions to the commonly asked bookkeeping problems, as well as some of the more exotic variety. So we've worked with for-profits and nonprofits today. We've talked about some super geek tech things. Little gap here. The topic of PPP loans and ERTC has come up. And so we are here because we are dedicating today for racial justice, and we really like to invite you to move money to the campaign today. Additionally, I'd like to invite you to share the link. We're still live. We're still going. Money has been coming in, something we are extremely excited about. It's great to see money come in. I'm seeing $5. I'm seeing $25, $50 coming in, even some larger numbers. And these you know what? The leader of the campaign and the owner of Catriceology Enterprises that will own the Racial Justice Center building, her name is Catrice Jackson, and she says, put your money where your heart is. And we'd like to invite you into moving money for racial justice today into this building fund, so the amazing programs that are being offered right now in rented space can be moved into a building owned by the same company who's offering out these services. If you are a homeowner, then you know exactly what I'm talking about. You purchased your home for a reason. And it's not just because somebody was like, well, you should purchase a home. Okay, I think I'll drop a ton of money, like more than, anything I've spent in my life, so I can become a homeowner. I want you to dig deep and think about the reasons why you became a homeowner and why you should be entitled to be a homeowner. You should be a homeowner. You are a homeowner. Why? Why is that good? Why is that a good thing? Why should you be entitled to home ownership? And you should be. These are the exact same reasons why Catriceology Enterprises should own the very building that they do business in, own the very building that they create healing programs for racial justice, racial healing, community healing. And that is why we're here today. So I want to thank our sponsors briefly, Zero and Practice Ignition. Thank you so much for putting your money where your heart is. And we are very excited that if someone here is hearing about Zero or Practice Ignition for the first time, and you would like some more information on that, if you would like to be introduced to our rep for Zero or our rep for Practice Ignition, I will make a personal introduction. I am a fan, which is why I went to them in the first place. And I said, would you please sponsor the Bookkeeping-a-thon for the Racial Justice Center? Both of them, by the way, jumped at the opportunity to express their enthusiasm and their love and their affinity for this cause, which is racial justice and racial healing, through what they do for a living, which is Practice Ignition and Zero. These apps, in the case of Zero, it's an accounting system. Practice Ignition, it's not specific to the accounting industry, but it puts together a proposal and payment in one place. So when a client signs a proposal, money moves automatically and on a monthly recurring basis or quarterly or however it is that you set it up, or project milestones. You can set all of this to happen automatically. It's a beautiful thing. Before we go into our next question, I'm just going to check the threads briefly. And I actually have a question for my co-presenters here, my amazing, expert, knowledgeable, and heartful co-presenters who not only love the accounting industry, but are committed to racial justice. I want to ask you a question. And I know that Alicia, you and I, and Jen, you and I, we talk about racial justice from time to time because it's important to us, and so we talk about it. But even so, it's not an easy thing to talk about, even for white people like us who are not subject to the harm of racial justice. But I want to ask you something. As you shared with people what you were up to in this bookkeeping-a-thon, potential sponsors, individuals who might like to move money into this campaign for racial justice, through the accounting profession, as you shared on social media, did you observe reactions, communications, words, actions? Did you observe racism as you shared what you were up to in this bookkeeping-a-thon for racial justice?
Well, the vast majority of people that I reached out to were incredibly supportive about it, but I did actually receive some people who were uncomfortable with it. And what I encouraged them is that if they weren't interested in this specific goal for this specific fundraiser, that they take action in their own way, like what feels right to them. Like maybe, like maybe they're not in Omaha, Nebraska, so they want to keep their money more local, or they want to do something that's more personal to their life experience. I highly encourage anybody that maybe you don't want to donate to this, or you don't want to contribute to this fund, but instead find something local, find an organization in your own neighborhood that means something to you, that uplifts your community. That's great. And if you can still ask a question here, and we will still answer it, because it's not necessarily about who's receiving the money. It's about the fact that we are trying to create equity for everybody and level the playing field and give everybody resources. If they're seeking resources, help them get their needs met.
So you were talking to someone who is committed to racial justice, but in their more local geographic area.
Well, I don't know that that's their truth. I don't know
Got it.
necessarily what their thing was, but I did get a couple people who were just not comfortable with the fact that I was getting political with my bookkeeping training. And hopefully the bookkeeping education is more important than my own personal belief system, that you wouldn't discount who I am or what I do because I believe in something that you don't. I would like to think that people can separate their professional and their personal, and I try and foster relationships even with people that I don't agree with. I try and foster relationships with people who think differently than me, and not just write them off or blow them off or insult them or any of that, because that dialogue is really incredibly important. That if we don't talk to each other about uncomfortable conversations, then there's never any progress. People just bubble and get focused on their own belief systems. If somebody believes something that I don't believe in, I'm going to let them to it. It's their life, not mine.
I really appreciate you sharing that, Alicia. I want to share some thoughts about some things that I've learned in my education with Catrice Jackson in the Socially Conscious Women's Collective. And then Jen, I can't wait to hear what you have to share, because I know it's going to be meaningful. You said something, Alicia, that really landed with me. And I just want to reflect it back, because I know it's going to land with you also. You said, I'd like to think that it doesn't matter. And yet someone reacted as if it does, because that is what mattered to them the most. And that is why the three of us are here. That is why there's so much racial trauma that needs to be healed. Because you and I are going to end this call and we're going to keep on being white. We're going to keep on benefiting from something that we didn't earn and we didn't create. And that's systems that center us, systems that cause someone else to be pulled over who's going just as much above the speed limit as we are. Systems that are going to cause us to be believed more than someone else. People of color, especially Black women, have to deal with this trauma every day, and it never stops. They also would like to think that it doesn't matter. This is their lived reality every day. And it's not a matter of a belief system. It's a matter of lived experience. And this is something which I didn't get until I made my education more formalized in various places, including the Socially Conscious Women's Collective. And another thing which I didn't get either, and I see a lot of, and I hear from the person who expressed this to you, racial justice is not actually a matter of politics, it's a matter of human rights. And it's, politics are a matter of opinions, right? Like what we think is the best way to help a society along and govern a society and allocate scarce resources and policies for defense and education and other things. When race is still correlated with wealth because of redlining, when race is still correlated with wealth because of individual policies in hiring and salary, when race is still correlated with wealth because of lending policies that are at the highest systemic levels, when race is still correlated with wealth because of medical racism. Right? This isn't a matter of politics, it's a matter of human rights. And it's really easy for someone, and I just didn't appreciate this before, I didn't understand it before. It's really easy for someone like us to just intellectualize and decide to I'm not saying you, I just mean like white people, like the person who wrote to you, that's what I meant. Mm-hmm. It's really easy for white people, like the person who said, oh, well, you know, this should be about bookkeeping, not politics. It's really easy for that person to say, I'm going to characterize it as something which is optional. It's optional for that person because that person is not traumatized, is not stolen from, is not discriminated against, does not come up upon redlining, does not, you know, all of this. I mean, so I just, those are some of the thoughts that bubbled up as I was listening to what this person said to you. And yet we can walk away and be okay. So this is about like us being aware that for people of color, and especially Black people and especially Black women, and I'm sharing this, you know, to our audience, right? It never stops. And that is why the Racial Justice Center is needed. It's not enough to have the current amazing programs. Those programs need a permanent home. The business needs more certainty and stability and more say in what happens, because the trauma happens every day. Thank you for listening. Jen, what do you have to share about what we just talked about, or your experience when you were sharing your participation in the Bookkeeping-a-thon with other people, with potential sponsors or potential people who would make a financial gift to the campaign, or just this is what you're up to? What did you observe?
So, I mean, I've got plenty of thoughts about this whole concept and purpose and mission and all of that. But the reality is that my voice in this really doesn't matter that much. Other than what platform I can put myself on to advance a cause that matters to me, my voice is meaningless. And when it comes down to it, our country, the laws that we live in, are governed by politics and by the politicians who pass laws on our behalf. Politicians pass laws on our behalf based on who pays them money. Let's just be honest. Okay? Money drives change. Our laws, our political environment, the causes that get pushed through the legal system are pushed through on the backs of money. Mm-hmm. So no matter who you are, no matter what race you are, you can't just ignore that fact. You can, but it makes you kind of a terrible person if you just ignore the fact that you have power. And if you choose not to use it, you're actually choosing to still use it by ignorance. Or silence. By not making a choice and by not taking action, you are still taking action. It is just based on your ignorance that you shouldn't or couldn't or don't want to do something. It is either you don't know about it or you don't want to do it. But the information is out there, the need is out there, and ignoring it is a big part of the challenge for me as a white person, because when I posted this, the only people that seemed to notice or care or reshare were people of color. That bothers me on so many levels as a white woman, that the community that I've put myself in and the people I have surrounded myself with in social media, people that I may not have ever met in person, but the fact that I've met these people on a social media platform, and when I shared, and I've got a fairly decent sized network, more on LinkedIn than on Facebook from a professional perspective, but I've got, several thousand people that I can reach out to and ask to reshare my content. And I've sent some private messages to people, and the ones that were most interested and most grateful for the effort were people of color. And that was my experience. My experience was not necessarily that I got any negative feedback from anyone like Alicia did. Mm-hmm. I didn't hear negative feedback from anybody. But what I did notice was the only people that appreciated it and understood the impact of what we were doing were people of color. And that tells me that there's still a lot to do for white people to understand the impact that we can have with something like this.
Thank you, Jen. You know, there's a name for that. Catrice Jackson wrote a book. She wrote a number of books, but there's a book that she wrote called Weapons of Whiteness. And she names 40 some odd weapons that, like, every time you see a white person being racist on social media, whether it's intentional or I'm not going to say unintentional, but like subtle. Let's call it subtle. Whether it's overt or subtle, there is not a shred of original thought in it. It is so predictable. It's what she calls a white woman's script. And one of those weapons, she codified these into a list of 46 or so weapons. And by the way, if you ever write the term weapons of whiteness, you have to write it with a trademark. She's got an attorney on retainer.
Nice.
One of those weapons is white apathy. And she says, and rightly so, and it's something that you encountered, Jen, something that you observed. White silence is violence.
Yeah.
And no one's saying it to be pithy. White intellectualizing is one of the things that that person who wrote to you, Alicia, that's what Catrice calls that. It's common, it's scripted, it's predictable. There's no original thought in it. It's a playbook. I also encountered a lot of white silence. And I encountered something when I was sharing about the Bookkeeping-a-thon for the Racial Justice Center. I encountered something, again, not a shred of original thought. And by the way, something which I have done. I've done white silence. I've done white intellectualize. There's nothing in that list that I haven't done. Our whole culture is all around us. There's no way you can even avoid doing it if you're white, unless you have become aware of it and you're intentional and you can make a different choice. So what I'm about to share with you, I'm not exempt. I've done it before also. And what I encountered was a combination of a couple of weapons that she calls the white gaze and white busybodying. And also deflection. All three at once. I posted about the Bookkeeping-a-thon. Instantly, a white woman started saying, how come this isn't a 501c3? That's great.
You mute your tab.
How come this isn't a 501c3? And I won't go into further details of that, but the long and short of it is, why are you criticizing the way a Black woman makes mission? She felt completely entitled to, instead of saying, wow, this is great, period. I'll share it, period. I'll move money, period. Like, you could stop at any of those. No, she decided that she needed to deflect from an uncomfortable. Jen, you talked about like comfort, like something's wrong. Let's deflect from something that's uncomfortable, something which I've done lots of times, and talk about something like that's more comfortable, like me deciding that I know better than a Black woman how she should be doing things for racial justice. The
I always
white
find it
gaze.
interesting when people ask about the 501c3, because I mean, that means they don't want to pay taxes and they have to abide by very, very, very strict rules. So they're limited in their impact. If you really want to have impact, an organization that is a 501c3, yes, they might have phenomenal impact, but they also have significant restrictions in place.
Yes.
And in this case, I don't want to question that, how she's spending the money, because I know she's spending it on a cause that matters to me. Nitpicking the granularity of those individual line items makes no sense to me, because then I'm just eliminating or putting a barrier in the way of me supporting a cause.
Yes. Well said. Yep. So that is something that happened. And by the way, there was someone else on the thread who spotted it. She hadn't read the book. She didn't know those particular terms, but she said, this does not really seem like the forum to be, questioning how a Black woman makes mission. You're not the person to do that. And she was right. And I contributed the words. It's a script. It's a white woman script. And so the three of us each encountered and observed expressions of racism as we were sharing about the bookkeeping-a-thon. Yet, we're not economically impacted by it. We're not, our futures aren't impacted by it. It's not directed at us. We don't feel that adrenaline rush. We don't feel that pang. We're not traumatized by it. And this is one of the things which I understand, that when we follow the lead of anti-racism leaders of color, this is something that we can do, is that we can share their words with other white people and help to move money. And I just want to express my appreciation and my love and my affinity for being here with both of you today, as we use our hearts and our professional skills to move money into the Racial Justice Center. Because in less than a week of sharing about this, look what we encountered.
Mm-hmm.
Thank you. All right, so let's get, and JP contributed some really, thank you so much, JP. JP contributed a comment. If anyone wants to learn more about where this white violence comes from, read Catrice Jackson's Weapons of Whiteness. Yeah, they put the trademark symbol in there. And JP included a link to where this book is available on Amazon. Oh, fantastic. Oh,
cool. Yeah, thanks,
Jen found it already. JP, thank you so much.
Yeah, for sure.
All right, let's see what question we have next as we light up our left brains again. All right. Okay, I have one here that says, so this one's of a different pace than we've done earlier today. They're using QuickBooks. I just started doing the books for a home healthcare agency, and their patient information is in their QuickBooks file. Is this allowed? Also, if it's not allowed, how do I issue invoices from there? Which is a funny question, because a lot of times they have a specialty system in place.
Right. And that's so QBO is not HIPAA compliant. I'm not actually 100% sure why it's not HIPAA compliant, because whoever's in the QuickBooks should be the same people who are authorized to see client files most of the time, unless it's financial department. What most of the two things that my clients do who are healthcare professionals will either or both use a billing service, so that all of the patient billing is happening from a third-party service, and then their QuickBooks is just deposits. And then we just automate the deposits, and it's just all there. And one of the benefits of that for one of my therapists is that we have her QuickBooks literally 95% automated through bank feeds, because all of her payments are from the same insurance companies, and her expenses are the same medical billing expenses. And so literally the only thing I have to do for her bookkeeping every single month is classify her 5 checks. And like the whole rest of her file, like we don't have to touch it. So that's one of the benefits of using a medical billing service, is that, sure, you have to pay a little money out of pocket, but it's going to save you on the bookkeeping side. And then for the people that I do have some medical practitioners who are using QuickBooks as their customer management. They all just use a code for each customer name, so that there is no personally identifiable information in the file. So it's either a number, or like you have to even be careful with initials, but you can twist it around and figure out how you're going to do it. So as long as you don't have diagnosis codes that are personally identifiable, you're okay. And so that's if you're just saying patient appointment and you have a code, you're okay. One gray area is QuickBooks payments because it does attach the customer name to the payment method. So I'm not actually 100% sure if that breaks your compliance or not. So that's actually a refinement that I'm curious about. But
Thank
those
you.
are the two strategies that my healthcare clients use.
Beautiful. Jen, I don't know. I know that you have a construction specialty as well as nonprofit experience, but I'm not sure if you've come across this issue before.
I have actually, and it's definitely a major need right now. And that's, yeah, if anybody is listening and you own a medical practice or a therapy practice or anything that has patient information, it's definitely becoming more and more problematic how many more options there are for tracking, because every time you connect a new program or app, you're connecting more confidential information. And you're not going to find out until it's too late. And by then those penalties, well, they add up really fast, and they are worse than IRS penalties in many cases. So, these are business ending penalties as opposed to the IRS, which really wants your business to continue so you can continue paying money into the system. But I don't care about that. If you break the law, they will penalize you to the point where it will put you out of business. So this is not an area you want to mess around with. QuickBooks, Xero, all of those, they're just not secure enough. And it isn't even worth, even if you find a third-party app that says it is, it's not even worth it. It just isn't. Figure out a way, even if it's old school, how to protect this information, because the issue is HIPAA rules and tech rules are not evolving at the same pace. And it's really easy to get yourself into a new tech tool that seems wonderful and amazing, and it's just the bee's knees. And then you find out that it's violating something major in your HIPAA compliance. And I have run into that situation recently with a client where thankfully she didn't get penalized because we found it and we undid it. But she had connected a billing service that was it was pushing payment or patient payments through, I think, Square or Stripe, one of those that pulls the name of the payer in. And it was connecting it, just like Alicia said, to the invoices in their QuickBooks system. So even though the invoices were not labeled, or the QuickBooks system was not labeled by patient, the payments that were connecting to them still showed the patient name. And that alone was a violation. So it's just not worth, that's one of those areas it's not worth playing with. And you really need to get a consultant that understands HIPAA rules when you put in a new system. And you really should have somebody checking your system every couple of years to make sure you're still compliant.
Brilliant on both counts. And thank you so much. I want to share one situation that I've seen that we've enacted personally. It's a workaround, though. It's a good quality workaround, but it's a workaround. So I want to tell you about it. It took a lot of tech mojo to get it done. But it's, at the end of the day, it's best to have a HIPAA compliant specialty system, HIPAA compliant payment, as plenty of home healthcare systems do. You can log everything in bulk deposits, and even if you in the accounting system, and do a monthly cash to accrual gross up, right? Because you can have the specialty system for all the details and receivables and what's owed from what insurance company or what private pay person, whatever. In one situation, we actually did a tech workaround. They have all those things in place, but they also have this specific program that's private pay, and they need invoices. And the services that they receive are still medical in nature, but they need, it doesn't make sense for the other system, the specialty system, to be used for the invoices. So what we did was we took an export from the specialty system saying, and it was a per diem charge, saying how many days this person received medical services. We took that in a database, which came in a predictable data layout every single time. I took that and I programmed a macro in Excel to do two things. Number one, to take all of that data for all of the patients, aggregate it into, earlier in this live stream, you saw me upload things to Xero. It's not just bank feeds that can be uploaded. It can be invoices and bills. So I did a lookup to exchange the name for the member ID that Alicia was talking about, or like a patient ID code, which was not linked to their name. like not even with an Enigma machine. It was like random 3 digits or something. And gave them like a patient ID and put all this data into a CSV file that we could upload as invoices saying member XYZ. So we could have the individual invoices, which were private pay, in the accounting system. But the macro also did a second thing. It went through this loop that I programmed, this iterative loop that went through every patient in that database and took the data that had been sent in from their billing specialist and populated an invoice in Excel. Like it looked just like the invoices that come from the accounting system. It printed that invoice to PDF and saved it automatically to our client's server, which is HIPAA compliant. So all we had to do was get this import, copy paste it into this macro powered workbook, click a button, and all this stuff would start to happen automatically. Invoice after invoice was generated and saved on the client's machine, invoice after invoice. And at the end of it, a CSV was generated that we could upload. The invoices had all the PHI that you could want because somebody at the client's location was going to print them and put them in the mail. But the CSV had the patient numbers.
Right.
And we uploaded those to Xero and create the invoices. Now, FYI, since then, we've evolved one step past them and we don't invoice. We just collect with ACH, but that's another story.
Mm-hmm. Right. I mean, all that sounds like a whole lot of work around that it's just worth paying the $250 to the billing software a month instead.
Right. It's a workaround, all right. Yeah. Yeah. If they could do that in the billing software, that would have been much preferred.
I do think it's worth pointing out, by the way, that we're talking about a compliance regulation that is, generally speaking, not within the accountant's arena of expertise. We are not HIPAA experts. We do not stay on top of all of these rules and all of these laws. We just happen to know some of this because we've run into these issues before. But this is not something that we receive in our training specifically. We don't get specific HIPAA compliant accounting training as part of our education. So when you're working with an accountant and you have a medical practice, you're responsible for your HIPAA compliance. If your bookkeeper is not being HIPAA compliant, that is not on them because they are not HIPAA experts. This is why I think it's really valuable to have a compliance expert just come in and do a quick little audit once every couple of years. Tech has changed, interfaces have changed, humans have changed. All of these changes are happening constantly. It's worth it to have a compliance expert just take a look at your system and give you guidance on what to improve until your next visit with them.
Nice.
Mm-hmm.
Nice. Thank you. All right. Let's see. I will check that one off. This one says we just paid for an annual software subscription. Part of the subscription is for months in this year and part of it is for months in the next year. How do we get the expense to show up correctly in the financial reports?
Yay, prepaid expenses.
We're all like, okay, let's do this.
Anybody want to do a demo?
I could do a demo.
All right.
Hang on, I'm trying to fix I put up my standing desk because we're 5 hours in. Sitting for 5 hours, I'm trying to stand instead, and I'm trying to fix my lighting because it's not set for my stand-up desk. So sorry for this weirdness happening above my head. Hang on a sec. If anybody else wants a demo while I figure this out, I'll just leave it above my head like that and demo anyway.
You look good.
Okay, I look good, but my background's weird. Okay. All right, so you were asking me. Oh, my dog is pawing me. He wants something, and I can't help him.
I'm happy to demo if you want to take care of him. And also, I got to say, I love your Bernie in the background.
Thank you.
He's adorable. Really cool.
Just in case you were wondering where my view was out my window, it's not. All right,
Love it.
Prepaid expenses. I think I have prepaid expenses in this file. Jen, I might have you.
Happy to
Yep, I have prepaid expenses. Okay.
And while you do this, I'm going to take a quick break.
Okay.
All right.
All right. So the idea with prepaid expenses is instead of when you are hit with a lump sum payment where you want to spread it out over time instead of taking that whole hit in 1 month. So generally we're talking about either annual subscriptions to something or big expenses that you don't just want to see it on your profit and loss report all in 1 month, which is going to throw all your numbers off for the whole rest of the year. In particular, like the questioner asked, if it's spread over the year, that if it's not just a January expense through the year, but maybe it happens in October, how do you account for it all the way throughout the year? So the idea is that you code the original lump sum expense to an asset account called prepaid expenses. And so the prepaid expenses just lives, hang on a second. It's an other current asset because you increase it and then it decreases. So the whole idea is that you're using it up within a year. And so it goes into prepaid expenses. That means that the whole lump sum happens on your balance sheet instead of as the expense. Then what you do is, or what I do anyway, is I make a journal entry. And I'm not a fan of journal entries. They have very specific purposes, but this is one of the real purposes for a journal entry. And then you set it so that you credit the prepaid expense asset and then you debit whatever that expense is for that one, let's say it's over a year, 1/12 of the amount. So I took that 6,300 and I think that was the amount, right? Yeah, 6,300. Don't forget that all of your math fields in QuickBooks are little calculators. So you don't have to sit there over in your 10 key and do the math and then come here and type in the amount. I can do 6,300 divided by 12 tab, and it gives me that 525. So then I do 525 in, 525 out. I'll do the first payment right on the day that I paid the original full amount. So that'll be my first one. I'll save it. And then I'll make it recurring. And I'll go into recurring transactions and I will, so let's say this was my virtual assistant. Virtual assistant prepay. And so I'll schedule it to start on that same day starting next month. So generally I'll go ahead and I'll forward this, starting tomorrow so that it doesn't trigger for the one I just made. It's starting with the next one. And then I'll end it after 11 occurrences because I made the first one. And then this is the rest of the year. And then this will just now run. And once a month, it will then take that 1/12 and move it over until my prepaid expenses register zeroes out for that expense.
Nice.
Now you might have many prepaid expenses going. And so this one's all nice and clean because it was 6,300 in and then all the payments to make it down to zero. What I will typically do at the end of the year is I go in and I reconcile this ledger to zero. Now I've got some extra stuff going on, so it's a little weird, but I'll reconcile it to zero. And then check off the one and then check off all the missing ones. I think it's because my statement date is wrong. Hang on, let me make today my statement date. Here's another cool trick. If I want to make my end date today, if I type the letter T, it puts up today's date. So I'll save that.
Woo.
There we go. And now I can find the original expense and all of the associated payments that went with it until it equals zero. And then I'll finish that reconciliation. Then I know that I've completely finished it. Now, in the case you're looking at, what?
I have never even thought of doing a reconciliation, like using the reconciliation feature in the prepaid account. Oh my gosh.
I win.
Alicia, bam! OMG. Oh my gosh.
So when I hit my year end of that prepaid expense and I've used it up, I'll go ahead and I'll clear it off. That way I can do a report filtered for only unreconciled, and I can see what my open prepays are.
Get out.
Yeah.
Oh my gosh.
Now I'm not going to finish this one because this is my demo and I'm going to use it in the future. Here I can also see, here's this mistake. Can you tell me, Miss Jamie, why I have all these extra journal entries here?
I can.
Why?
Because you didn't put a stop on the automation when you built the recurring transaction, the memorized transaction.
So I demoed how to do it properly, but the one that's in my file is making a mistake, and it was just set to indefinitely go. So it's showing me too many expenses. I've got 525 expenses that should not be on the books. So I got to go in and take them out, delete them, and fix that recurring transaction. I'm going to leave it here because I build errors into my file so I can demonstrate this stuff. But that's what I do is I go in and I reconcile each prepaid expense to make sure that I've completely got it all sussed out. And then I can run a report. I'll show you how I do that report. I'll drill into the balance sheet. And then I drill into my prepaid expense asset, the current assets, prepaid expenses right here. And now if you look at this for all dates, you'll see here, I think I've got some reconciliations in here. I'm not sure I do. Not sure. I don't actually. But what I will do is go in and customize this, and I'll filter it for the status of whether it's been cleared or not. And so I want to see everything that is not reconciled. So generally I'll do either cleared or uncleared. Mm-hmm. And that will show me just the ones that have not been matched. And so these are the ones now that I can look and make sure that these are genuinely here and supposed to be here. Or I can reconcile, I can filter for reconciled and just see the ones that are complete.
Genius. You know those moments that you've had, like all three of us, we've all taught people things, whether it's, your Royal Wise customers, Alicia, or your clients, Jen. We've all taught people things, and we want them to have these eye-opening moments and feel empowered. And when that happens, that's amazing. And also, I know that the three of us have taught, and then someone feels dejected. And we're like, why do you feel so sad? Because they're like, do you know how much time I've wasted in all the years? And I never really got it. Okay, I'm getting it right now.
Yeah, so this is a game changer. Gosh. So now you have this extra homework assignment when you do your year-end prep for taxes to go in. When I say I reconcile all my balance sheet accounts, I mean it.
Yes.
I really do.
Oh my gosh. I never once thought of using that feature. That is freaking brilliant.
Thank you. Thank you.
So we have a question from Jeff. Great question. And we can demo this in QuickBooks Desktop or QuickBooks Online or Xero. Because Jeff is asking about a journal entry. So this one is platform agnostic. And the question is, can you demo how to do a journal entry to record the purchase of a new truck for $80K, and you put down $30K as a down payment? And first of all, Jeff, I appreciate you asking this. And second of all, he says QuickBooks Desktop. All right, I'll take it because I have a sample file open.
Got it.
So first of all, I'm glad you asked. It's a quality question. Secondly, a lot of people need the answer to this question. And I'll tell you why I know that they need the answer to this question, because every time we go in, we have a new client and we look in their books to see, okay, what do we need to do first, to get everything up to speed. And when I see that there's a fancy new truck for $30K in fixed assets, I'm like, did it come with a motor? I am really not sure that this is reflecting the real transaction. So let's take out. All right, I've got my QuickBooks desktop demo file open. So give me a second, and I'm going to share my screen. And we're going to book this entry. There are, in fact, I'm going to show you. I'm going to go through a couple of iterations on how to do this, because there can be nuances in the correct answer depending on the more general situation. We'll start with the plain vanilla.
I really do it with the journal entry or not.
one of the solutions is a journal entry. The others, not so much. So let's go. Let me click on the thing to share my screen. Hold on. I lost. All right, here we are. Share the screen. That one. No, not that. Oh, hold on. Yeah, that one. Okay. We're looking at, yes. All right, QuickBooks Desktop. All right, here we go. So scenario 1. Nothing is happening except we plunk down $30K. We receive a truck which has a selling price of $80K, and we incur $50,000 worth of debt at the same time. So this is, in that like plain vanilla situation, what I would do. I'm tapping Control W, which brings up the check screen, and I put like EFT or ACH or a check number if I wrote a paper check. Heaven forbid, stop that. No paper checks. And let's say I bought it on the default date in QuickBooks, which is December 15th, 2025. I'm writing the check out or sending in the wire to the automotive dealership. Let's hold on, of Portland. And I'm doing a quick add. They're a vendor. Okay. I'm plunking down $30K. However, that is not all that happened in reality. What happened in reality is that we got a truck whose cost was actually $80K. So let's see if this sample file in the fixed asset section has trucks. Vehicles, let's go for it. Vehicles. And I'm going to put something about the vehicle, like a 2022. Somebody give me the name of a truck that you might buy for $80K.
A Ram?
Ram.
I'm pretty sure a Dodge Ram is a fairly expensive truck, although if somebody is out there cringing because I do not know the price point of a truck, I'm sorry. It's the only one.
It's probably not really 80,000, really.
Okay. I don't know. Okay.
F350.
He says F350.
Okay. Now we have a long-term liability that we're picking up at the same time. So I'm probably going to enter this new loan on the books because I do not want to play a game of let's combine all of our loans into one line item on the balance sheet. Now, if you want to expand and collapse, that's okay, but mush together different liabilities, no. So I'll call it 28,300. 28,300. Oh, it's not on the account list? Oh, let's set that up. Okay, so no, it's not an expense. It's a long-term liability. Long-term because you're going to repay it in more than a year. So if you plan on repaying the $50K in under a year, then call it another current liability. You click continue. Here we go. Let's call this
350.
Ram. What? Oh,
F350.
Oh, there. Oh, fine. F350. There we go. Copy that. Save and close. We're gonna. Oops. Hold on. There we go. F350. And so what I'm about to show you, this is one way to do it. In this case, I might actually use a journal entry, and I'll tell you why, but this is just as good. Okay, to record opening balance of F350 loan. Okay, this is fine. This is valid. I'm going to click save. Now, what's good about this is that it's it's a check type transaction, which makes sense because money's leaving the bank account, and we look at the transaction types. That's a good thing. In this case, it has a check number. That's a good thing. It should have that. However, what's bad about this is it doesn't have the creditor's name on this line item going to this loan account. It has Automotive Dealership of Portland, and they're not the creditor. They're about to sell your loan. So it's precise in one way, but imprecise in another. So you can go with this. You'll be fine. Let me show you another way to do it. And that is a journal entry, which, like Alicia, I'm not a big fan of, but something like that could make sense in this case. So that check number that we used was check number 491. 491, so we can have the check number up here. We can have the vehicles over here for 80,000. Nope. 80,000, and we'll say to record purchase of that. And then here we can have the Automotive Dealership of Portland. Over here, we have the loan F dash whatever. What did we call the loan account?
F350.
That's what I thought we did too.
You had a hyphen. F dash.
F dash. Hold on. Long-term liability. There. Oh, because I didn't. 20. Fine. But the loan was only for 50K, and we're going to call this to record opening loan balance for the right. And now here we can put the creditor's name. So let's call this like Ford Finance. Add them as a vendor. And over here, we can have the checking account for 30, and then we can just say copy, paste, and this one is going out to Automotive Dealership of Portland. So again, this has one advantage and one disadvantage as compared to the other one. Advantage is we can get the correct creditor's name into the long-term liability ledger. And we still have the check number, so that's okay. But the disadvantage is we're writing a journal entry for something that's clearing the bank account. In Xero, you can't even do that. In QuickBooks Online and QuickBooks Desktop, you can. But the part of me that gets squeamish when a journal entry is going to the bank account.
I mean, there's a reason why it is not available in Xero, and it's because so many people messed it up. So, I mean, let's be honest. A lot of these techniques that are not available in Xero are by design not available in Xero. It's so easy to mess them up. So yes, QuickBooks does give you a lot of tools, but sometimes with great power comes way too much responsibility. And, just be careful. Now, one of the questions from Jess is, do you suggest listing each asset individually? Honestly, I think that's a personal decision. I like listing my assets individually, but I think I don't think that Alicia and Jamie would necessarily agree with me that that's a carte blanche or blanket rule. It really is individualized to the company.
I think it depends. For me, it depends if it's material. If it's something that I would like to track its depreciation, I'll set it up individually. And then I like that QuickBooks Online actually gives you the ability to do original cost and depreciation on an individual item basis.
Yeah.
So if it's something big like a truck, I will. However, if you're buying computers and furniture for an office startup, I'll lump all of that together into just furniture and fixtures or computer equipment. It depends if I really care to know what the fair market value or unallocated asset is. Undepreciated, that's the word I want, undepreciated part of the asset.
And sometimes that's a good conversation to have with the person that's preparing the tax returns, because they're going to need a depreciation schedule. They're going to need an asset schedule. So if you're collaborating with them and you guys are both communicating closely during tax season, it might be easier on you to have that broken out already, so you don't have to worry about missing anything or having numbers that don't match. But again, it's personalized to the company.
My take on it, I do not like to list the assets individually. And I do like to make sure that our totals always tie to the tax preparer's depreciation schedule. As a former tax preparer, I can also tell you that, so former tax preparer, what we currently do is outsource CFO, controller, bookkeeping. Like we're in it all year round, but we don't do the tax work any longer. So as a former tax person, I can tell you the tax person has the software to calculate depreciation. And no matter what I do in the accounting system, it may or may not be the same method, or it could be off by a couple of dollars for rounding, and that's going to irritate me. I don't want to calculate depreciation on a year-round basis because A, the tax preparer already has the information because they have the shiny toys that come with being a tax preparer. And B, zero of my clients care about depreciation on a year-round basis, and zero of my CFOs care about depreciation on a year-round basis. So that's one of the few entries that we just make annually, saying to the tax preparer, give us your depreciation schedule and we will, we will record depreciation. And so we just want to make sure that the assets tie. And if there's anything, and that's why I would use a different field to record the type of asset. I don't even want them in the chart of accounts and be like, well, you could expand it as sub-accounts, expand and collapse. I don't even want it in the chart of accounts. I just want vehicle. I want each class, each depreciable, fixed asset class in its own account. I want to see land separately from vehicles, separately from furniture and fixtures, separately from office equipment. And that is all. So I'm real glad you asked that follow-up question. And another one is coming in from Jeff. This is fantastic. If the asset gets fully depreciated, I assume it does not leave the asset list until it's sold. Then how do you get it off the fixed asset? Let's do it. You're right. As long as the company has legal title to the asset, it does not leave the asset list. You are correct about that. And then once it's sold, or it doesn't have to be sold, it could be sold or disposed of, carted away. Then how do you get it off the fixed asset list? So let's go to that because it's interesting.
But I actually had one more comment about the process that just going back to the mechanics of doing the registration of the recording of the transactions.
Yeah.
I actually do one thing different than the two options. I have a third option for you.
Tell us.
So I'm a big believer in every real life activity has one corresponding action in QuickBooks. So I will write the check or do the expense for the down payment. Like I gave this down payment to this vendor for the truck. Then instead of a journal entry for the moving between the asset and the checking account, I do a $0 check where I and I have to have it in front of me to know which is the positive or the negative, but in order to create the liability and the asset value, I will put it in I might get the positives and negatives wrong, so forgive me on that. But I'll have a positive into the asset and a negative out to the liability. And then I have one transaction that shows that during this truck purchase from this vendor, we set up, or from the lender, this is the thing that we set up. And so it puts the loan in for the value of the truck as an actual expense transaction.
Got it. So, out of curiosity, which name do you use in that transaction? You use the lender's name. All right, got it. So does that not leave you when you look at the fixed asset ledger, does that not leave you with two separate entries for the truck with two separate names?
Yes, it does, because part of the value came from my down payment and part of the value came from the liability.
I got it. Thank you. All right, great. So let's answer the next part of Jeff's question. That was phenomenal. Where's that share screen button again? I lost it. Hang on.
I'm going to do that fancy thing that I did and pop up Jeff's question.
Ah, that's so great.
Love
it. Screen number 1. There we go. Okay. So I'm going to not save this one. I'm going to clear that. So the next question is, and actually, before I answer your question about how to get it off the books, I'm going to answer your first question in a new way that bridges that question with your follow-up, Jeff. what if there is an exchange? What if we bought the what if we bought the truck, incurred a loan, but also traded in an existing truck for it? So let's say, so this is how I would record that. And let's go back to this check transaction. And what I'm going to say is, say we still paid 30K down, but we didn't have to incur a loan of 50K. We only needed to incur a loan of 40K because we also traded in $10,000 worth of truck. Now, who decided that it's worth 10K? Automotive Dealership of Portland, that's who. And so we need to accommodate for that here from an accounting standpoint. What we need to do now is look at that handy dandy depreciation schedule from our outside tax preparer and say, what is the current book value of the truck that we just traded in? And let's assume for the moment that it's fully depreciated. We originally paid 60K for it. We have since taken $60,000 worth of depreciation, and on the books, it's got a 0 book value. What we do here is record a gain on disposition of vehicle, set up as other income.
So this might also be like gain or loss on sale of property.
Mm-hmm.
Okay.
Yep. I typically like to use disposition over sale.
Okay.
To keep the account flexible for whatever may happen.
Okay.
But yeah, to record gain on disposition or on trade in of somebody give me the RAM of 2008 RAM, let's say. Now, Jeff brings in a good question. How do we get the RAM off the books? Here's how. Vehicle. I said that we originally paid $60,000 for it. We're getting it off the books right now. Then we enter accumulated depreciation, debit 60K. And then we're saying to record the trade in of the 2008 RAM.
Oh, so this is literally taking it out of the asset
Yes.
categories and making it disappear.
Yes.
And also getting rid of the accumulated depreciation or recording.
Yes.
Now that's assuming it was already recorded.
But so it still happens in the period where it happened, and then it's gone in the period where it's gone.
Yes.
And then I, of course, would reconcile both of those two accounts when we're done.
Yes, you would. And that's why we love you.
I love my OCD.
So
It's an asset. I will not appreciate my OCD.
Alicia, you're a debit to the profession. So, all of these ins and outs, we still have our cash of 30K. So Jeff asks a great follow-up question. Does it increase accumulated depreciation? No. This is debiting accumulated depreciation that decreases that account. And this is crediting the vehicle's account that is decreasing the vehicle. So this one entry, and I'm actually going to save this and then show you from the perspective of the balance sheet and the P&L where everything is happening. So let's
Thank you for making that a check and not a journal entry.
Let's go here into the vehicles account. And what we can see here is simply that we purchased a truck and we offloaded one. We purchased the F-350 and we offloaded the Ram. And under Alicia's method, this would show a 30 and a 50 to show that we purchased the truck, 30K of it from the automotive dealer, and we purchased 50K or 40K in this case, but all of that from the Ford Finance. And then here, the trade-in of the Ram, it's no longer on the books. Let's look at accumulated depreciation. Over time, we have all kinds of, let's go back in time a bit. We can see to record depreciation, blah, blah, blah. We're recording depreciation. And over time, $60,000 worth of this depreciation has racked up because of that 2008 RAM. Okay? Now that accumulated depreciation is off the books from this entry. Now let's hit the profit and loss. Before we do that, we also see liability, long-term liability. Here we go. We owe $40,000. So we have that liability. And on the P&L, this is my last piece of this. At the bottom, gain on disposition of vehicle, $10,000. Because we got $10,000 worth of value for it, even though it was fully depreciated. I just want to say at this moment that sometimes I feel that way. I am fully depreciated, yet I am continuing to give $10,000 worth of value.
We depreciate you, Jamie.
Well, you know, we've been at this for a little bit.
It's almost 6 hours.
That is so great. So my final answer to your question, Jeff, if we take this piece and say, you know, what if there's no trade-in? What I just want to get the thing off the books. You can do either a $0 expense transaction, like Alicia was talking about, for vehicles and accumulated depreciation, and a gain loss if there was one. Like if there was no cost to haul it away, then you can make a journal entry or a zero sum expense to credit vehicles or truck or whatever your fixed asset account is called, and debit accumulated depreciation is off the books. If, however, you incur a cost for hauling away that rusted piece of junk from 13 years ago, what you can do, and this is what I recommend instead, you have yourself a check or expense type transaction paid to the order of whatever company it is, hauled it away. So let's call it haul away vehicle company. And you pay them $500 to haul away your ancient, fully depreciated vehicle. So you're going to pay them a fee for that. That's a service. So I don't know. Let's just stick it in here for now. To record that we're hauling away. No, to record disposition, to record towing for 2008 RAM, and then you would add 2 line items to that. Get that vehicle off the books. This is the same entry, or to record disposition of 2008 RAM and accumulated depreciation to record disposition. I wouldn't call this a gain loss. That was a fee for service for hauling it away. But that's how I would do it. I would link it. I don't like a separate entry for this because it separates. It's like what Alicia said earlier. It separates two different things. What?
One activity, one journal, one transaction.
Entry. Yeah, exactly. If it was one thing in reality, let's have it be one thing in the accounting system. Anytime something else happens that's not that, chaos ensues. And you know what? Chaos and bookkeeping should not go together.
I think that's why some of us like being bookkeepers, because we like controlling the chaos. we like everything in its exact bucket.
Very much so. I will say the other challenge there is if you add more transactions, every time you add a transaction to the system, it gets just a tiny bit more full. And it works just a tiny bit slower. So when you add in 20,000 transactions that could have actually been 2,000 transactions, it makes a big difference in how your file operates.
Yes.
And we see that more so with desktop than we do with Xero or QuickBooks Online. But definitely, if your QuickBooks desktop file is starting to give you trouble, one of the first things I would look at is how full is it? how much data do you have in there? Because there's a good
Mhm.
chance you've got too much in there.
Yeah,
Yes.
I don't know if QuickBooks Online has been around long enough to top out like that. I mean, hypothetically, it's indefinite because it's server space and Intuit's going to give
Right.
us that server space. But if you are, like when we were having that conversation about the merchant service imports, if you're bringing in 1,000 sales transactions a day, your reports are going to get unusable in like a
Yep.
week. Not
Because they
because you've
just
out of
won't
file
load.
space,
You
but
just won't
because
be
it's
able to
got to
load
actually
them.
churn.
Yeah,
Yeah.
exactly.
Yeah.
Well said. So let's step back for just a second. And I just want to thank our sponsors and presence while we're here dishing this information, just wanting to help our fellow accountants and bookkeepers with the best high quality education we can give. We are here in support of the Racial Justice Center. We are witness that racial violence still happens every day. Sometimes it's with a weapon, but sometimes it's with words. It's with gaslighting. It's with intellectualizing. It's with confusing having an opinion with the lived experience of people of color in the United States, especially, but not limited to, Black women. And that's what the Racial Justice Center is designed to create a healing in that area. There are amazing programs for racial healing, racial justice, community justice happening already as part of the business Catriceology Enterprises and special programs like the Justice is Love Coalition and Harriet's Dream. But they're happening in a leased space. And if you're a homeowner, you know exactly what I'm talking about. There's a reason why you purchase a home. In fact, there are many reasons, because some of these reasons are personal, why you purchase a home instead of becoming a renter. And all of these reasons apply to Catriceology Enterprises and with these programs for Harriet's Dream, the Justice is Love Coalition, and other programs that need a permanent home with the stability and the certainty that ownership provides, that being a tenant does not include. So we are here for the Racial Justice Center. We are asking that you move money and make financial gifts to the Racial Justice Center. In fact, we've had some people give multiple gifts over the course of the past few days. That is a wonderful thing to see. We've seen gifts of $50, $5, $1,500, $50, $25, multiples of 18, which is my personal favorite as a Jewish person.
You noticed.
Yeah, and that's why we're here. And number two, please share the links. We are still going. There's still money coming in, and we are still going strong because we are here using our professional skills to shine the spotlight on racial justice. Because for us as white women, it's something to shine the spotlight on. However, for women of color in this country, for people of color in this country, there's no shining the spotlight. They're experiencing systemic and individualized racism, discrimination, institutionalized. Oh, you can't because of this rule, rather than let's create a way so there's no artificial obstacle. Redlining still occurs. Individual, and that's at an institutional level. Individual discrimination, acts of gaslighting, acts of microaggression, acts of macroaggression still occur. And even the three of us, in a week or two of promoting this bookkeeping-a-thon, witnessed verbal acts of racism, violent racism that didn't harm us as white women. But in a week of promoting a bookkeeping-a-thon for a Racial Justice Center, we were witness to it. If that is still happening every day, then clearly a center like this is sorely needed to promote justice and healing. And that's why we're here today. And I really want to thank, from the bottom of my heart, our two sponsors, Xero and Practice Ignition. We approached both of them because, first of all, we're fans. We actually use Xero and Practice Ignition in our firm. We save ridiculous amounts of time using it. We love the features, and I approached Practice Ignition first because I already know that they are committed to gender equality and gender justice, because they shine a spotlight on women in the profession. And they have an award, which I've won for 2 years in a row, called the Top 50 Women in Accounting. And I thought to myself, if they stand for women in accounting, if they stand for gender justice, let's see if they will also put their money where their heart is when it comes to racial justice. They did not hesitate. I got a response so fast that was like, yes, for the cause. And they weren't saying yes for the eyeballs. They were saying yes for the cause. And they moved money straight into the crowdfunding campaign in the using the GoFundMe link. And I am just so proud that they are a sponsor of the of this bookkeeping-a-thon. And I want to share with you a statement that they prepared, which is that Xero's cloud-based accounting. Sorry, this one is Practice Ignition. They say when clients get paid every time, which is so true. Run your business like clockwork with automated proposals and payments in one convenient client engagement and commerce platform so you can focus on what matters, your clients. This is so true. We went seeking a solution years ago in late 2017. I was really tired of Microsoft Word, even though it looked awesome. There was no money that happened when I sent out a gorgeous looking proposal in Word. It was nice, and they came back signed, like mostly. Sometimes you could see them like printed and then signed, or maybe, or like someone typed in their name. No, that's not a signature. Like you typing your name isn't a signature. So sometimes there were issues with it. Plus, money never moved when it came back signed. So I sought something that would be more automatic and have a signature happen and money move at the same time. And that's what I found in Practice Ignition. And it, even though it's not, I wouldn't call it a perfect solution. It's not a perfect program. There are still, some things that we don't quite understand, or some things that we have to kind of have a little workaround about. But it solves the core problem, and nothing else does. There's proposal software out there. There are payment platforms out there. There's nothing else that does the job like Practice Ignition. It's amazing. It's reliable. On the rare occasion that we need to send a refund, like if we've collected an upfront deposit in advance of some due diligence, and we or the client decide not to work together, we'll refund that. Practice Ignition handles it reliably with plenty of communication. And I love the fact that we can create a service library with all of our services, and all it takes for me or a member of our sales team to put together a proposal is like, click on a drop down, this one, click on a drop down, that one. And we have all that language together. Then we go over it. Is there anything we need to customize? Oh, here. All right, we're done. And we send it off.
Now, I haven't looked. I'm curious to know, can you I know that you can make packages and people can select from the packages. I wonder if it's possible to just make a whole cafeteria list, and the person can say, I want them to do my bookkeeping weekly, my reconciling quarterly, and advising quarterly, and then it puts together a package. Is that a thing? I'm just making
I don't know. Yeah. I don't know, but I can tell you that on the back end, all the things that you would need to do that do exist. They didn't exist a year or two ago. Mm-hmm. Everything had to be on the same payment schedule, but they did an interface, a really nice interface upgrade about, maybe a year or so ago. And now you can be a lot more flexible with the timing of things, and you can have a one-time here and a monthly recurring here on the 7th, and a semi-monthly here, and you can really have a lot of flexibility with the timing. So it's
one times like a file review, a one-time setup, the monthly bookkeeping, and your annual file review.
All of those things are possible when you put together a proposal. What I don't know, because I haven't used this feature, is if you can make those kinds of selections available like on your website for the general public to come in and be like, I'll take one of those and one of the, I don't know. That's not how we run our business. We design, our business is done on a very custom basis. Not everybody's is. We get into relationship with our potential client. We listen to them deeply. We offer some solutions, if they're on board, at this point, we understand where they are and where they want to go. And we put together our recommendation of a package, which we can talk about and tweak, but basically they can take it or leave it because we've given our best professional recommendation as to what's going to get them from here to where they said that their goals are. We're not going to give them anything less than that because they won't reach their goal, and we can't do that in good conscience. We don't want to give them any more than that because I think that would be a waste of their money. So because we take a very customized approach, that's why we don't offer like packages like that. But there are a lot of people who do, and that's a valid way to do business. And it's worth looking into if someone's got a more like off the shelf type of a business.
Right.
Great. Thank you for mentioning that, Alicia. So that is Practice Ignition. I also want to send a deeply heartfelt thanks to our second sponsor, Xero. As you know, because you've been with me all day, I am a huge fan of Xero. It took a lot of getting used to. It really did. I was like, what even is this? And I get it now. It took me about 3-6 months to really get, and I am absolutely hooked. I love the in-app uploads. I love the two tracking categories. Xero is an accounting system. I love the monthly deal notifications that I get from my rep. He sends me all these deals, like every month he sends me, hey, this is the deal for the next month. Fantastic. I mean, there's a 25% nonprofit discount, but sometimes those deals beat the discount. So we sign up with a deal, like we just got one for our client with 2 different related nonprofits, 50% off for 6 months. And it already only costs like $34 or something for the mid-level for unlimited users. So we got them that deal on each of their entities for 6 months, and then we'll switch over to the nonprofit rate. So we have a great rep, and their official message is that Xero's cloud-based accounting software has been recognized globally as a leader in the market by a number of business software review platforms. Track your business on the go and be confident in your numbers wherever you are, with greater control, leading you to better decisions. Keep records tidy and make compliance a breeze with Xero. That is my experience of using this. I would not read it if I were like, I'm saying this, but that's horse hockey. No, it's not. That very accurately, actually, it's true. It accurately describes my experience, but it doesn't capture the flavor of my experience. My experience with Xero is that it is slick. I feel so smug and self-satisfied when I have just allocated payroll across, for like 50 people across 3 functional expense categories and 4 locations, and I upload it as a single bill, and it's like pow, pow, pow. You know how many lines that bill has? I'd have to use a separate app if I were using QuickBooks Online or QuickBooks Desktop, like Transaction Pro Importer or SASANT. But for Xero, I don't need a third-party app. I could upload that thing just straight away. It's a beautiful thing. So I do feel
you're making me feel like I drank the Kool-Aid.
That's how I feel actually, like using Xero, like I drank the Xero Kool-Aid, and it was hard at first. I didn't understand the bank reconciliation feature. I didn't, there were some things that I loved about it right away, like the 2 tracking categories and those crazy, amazing bank rules. There were some things, it doesn't have an undeposited funds account, which really drove me crazy.
Mm-hmm.
And I understood why. It's because Xero is built for an account in which, like a business that runs in such a way that you don't have checks sitting around. You don't have undeposited funds. Everything's happening electronically. So I got it, but it still irritated me.
That's also one of those features that people get wrong a lot in QuickBooks Online and Desktop. So removing it in Xero makes a lot of sense. I mean, I can't tell you how many times I'd go into a QuickBooks file and one of the first things I check is the dumpster fire that was their undeposited funds. And inevitably it was.
Well, and those are the two things that for me I think would be hardest about Zero, and I'd have to wrap my head around. But like I think there's a need for a funds in transit. I have money coming in from QuickBooks payments and in from Stripe and in from manual checks and people who pay us in cash, and Jamie and I split it, that kind of stuff. Like, we need a funds in transit, so I'm not sure how I would manage all of that without undeposited funds.
Yeah, that's a really great point. I agree with you 100%. Though if the company has legal title to those funds wherever they are, they need to be on the books as of the date that they have legal title. So that's why we use accounts for the merchant services like PayPal and Stripe and whatever else to hold that.
So the way that I do some stuff with a clearing account, you would just do that by nature.
Yes.
Got it.
Exactly.
Got it. So it's almost like multiple undeposited funds in a way.
Well, yeah, it is, but everything's not all in one place. Everything is in its own bank account. This is Stripe. This is being held by Stripe. We have legal title to it, but it's still in transit. This is in our PayPal account. It's not all together in undeposited funds. It's,
in some ways that's easier because I would be able to see at a glance where my Stripe deposits are and where my QuickBooks payments deposits are.
Yeah.
I have to say, having gotten into Zero recently, I really missed undeposited funds in the beginning, but now that I see the value of multiple clearing accounts that basically do the same thing, just a little bit easier. That's my reconciliations, but I'm absolutely a convert with the undeposited funds.
Now that I've seen what Alicia's done with prepaid, which you can't do in Zero because there isn't a reconciliation feature like that, I'm kind of like, I don't have any regrets. I'm just
that one's not big enough to change your entire system because
no, but it gave me pause because that was so compelling. That was brilliant. I wish I could go back in time and use that feature for we still have a couple of clients on QuickBooks Desktop and QuickBooks Online. All right, I'll focus on them. But yeah. So actually, that brings me to a question that you had asked me, Alicia, and I'm wondering, let me look at that and see if there's anything that I haven't yet answered. And I'm going to go through the demo file quickly in order to see if there's anything that I've forgotten. You had asked me, what are the things that you, meaning me, like better in Zero than QuickBooks Online?
Mm-hmm. Yeah, you've shown me a couple of them.
So yeah, we've gone through a couple today, and just in case there's somebody new on the live stream who hasn't been with us earlier in the day, let me just find the tab where I have Zero open. All right, hang on. Let me share my screen. Oh, I've been logged out. Give me a sec.
I really hope you're going to talk about the recode feature, the batch recode.
Oh yeah.
The fact that we have so many more options in Zero than we do in QuickBooks Online, that makes a big difference.
Thank you for mentioning that. So true. All right, let me share my screen. I'm also just going to do a quick refresh to see if any other questions have come in. Hang on. I should refresh the other. All right. They're all refreshing. Let me just take a quick peek and then we'll dive in.
Okay.
On through. Oh, wait, this isn't loading. All right, it's loading now. Okay. Okay. All right, here we go. Here, then here, then here. Then, didn't I click it?
Oh, sorry, it was me.
Oh, it was? Oh, you did something?
I have to click it. Sorry, I didn't notice it come up.
Oh,
I'm sorry.
wow, you were slick all the other times. I thought it was automatic.
No, it was me looking. I was looking at my Facebook feeds, looking to see if I had questions to answer, and I didn't ever hear your thing pop up. I'm sorry.
No problem. Okay, so let's go straight into what Jen was talking about. So Xero has a find and recode feature. Okay, QuickBooks Online has a batch reclassify. This is better. And here are some reasons why. Look at this. So first of all, the conditions. Second of all, the stuff that you can reclassify. So you can look up any of these conditions, and you can look up all or any. So you can look up a transaction type, status as like draft or void or whatever the other like normal statuses are, the bank account or the offset account, the date, and even the date. You can have is between, is before, is or is after. I like that greater flexibility. The transaction total, you can look it up by the tax rate. It's interesting about Xero. It has the tax rate in here because this program was actually developed in New Zealand. And it really took off in New Zealand, Australia, and England before it really made it big in the US. And they've got VAT over there and taxes like on a transaction by transaction basis are apparently a much bigger deal. So the tax rate field is a big deal here, and you can like look things up by the tax rate, which FYI, like if that's not something that's relevant to the organization, you can just repurpose this field for whatever you want. And you can still run reports by it and do find and recode by it. You can look up by who entered it, which is not a capability of QuickBooks. You can look it up by the contact, which, by the way, is another thing which I really like about Xero. There's no separate list for vendors versus customers versus anybody else. It's one contact list, which in my opinion reflects reality, because a given person or entity can be many things to your organization. And the fact that in QuickBooks, those have to be split up among a vendor list and customer list often results in really awkward things like RoyalWise-V,
Right.
RoyalWise-C. You can't produce one report showing all the things that your organization does with RoyalWise, who is both a vendor and a customer.
Really? You can have one consolidated list?
One consolidated list.
Bing.
That means
Yes.
when you have this, the biggest offender I've seen of this particular issue is having an employee who not only purchases products from you, but you also reimburse for things.
Yeah.
So you end up
vendor, employee, and
payroll,
customer.
Vendor and customer activity. And in QuickBooks, all three have to be different names. They cannot be the
Yes.
same.
And you have to know which is which, right? There's like, Jen, what's your middle initial?
R.
Oh my gosh, that's so great. I'm glad I knew that. I didn't trust myself. Okay. So, right, you could have like Jen Virides in your vendor list, Jen R Virides in your customer list, and Jen R period Virides in your employee list or your other names list.
Right.
You just can't find all in one place all things Jen.
Yep.
You can look it up by the invoice number of reference, and the fact that you can look it up here by the class, by what in QuickBooks is called the class, only bears in mind the fact that in Xero you can name the class. It's not just class. You can name it whatever you want to name it, and you get two of them. Now I know that QuickBooks Online has the relatively new location feature, and I know that it has the tags feature. However, and those are major improvements, but they don't have the flexibility, and in the case of tags, the reliability that the two tracking categories do. So let's say we're gonna, what?
You also can't rename them. If you've
Right.
got a client that comes to you and they're used to calling it, functional expense, and you're telling them we got to switch it all over to classes, it's an adjustment. And having that customization definitely makes it feel like your file.
Yeah. Yes. I will also concede here something that QuickBooks does better than Xero. In the results, I'll get an invoice, but the payment on that invoice will not show up in this list. It's in the database, but it does not show up in a find and recode, which is annoying.
I guess it would be problematic if you accidentally change something that connected the two.
Yeah, and if you're right, exactly. So if you want to go there, you first have to go to the invoice and then click on it after. And I don't know if this invoice is paid. It is. So then you have to click on the payment and do whatever you need to do there. You can't just go to it straight from here, which is super annoying. However, here, let's add a condition and let's do transaction type. Let's take receive money and spend money transactions only. So that's super flexible. So now we have this list. Oh, and F also, which has pros and cons. Both QuickBooks and Xero have the ability to lock the file as of a certain date, so nothing can be changed from prior to that date.
Mm-hmm.
In QuickBooks, this find feature will turn up all the transactions, whether they're from a locked period or an open period. But in Xero, it won't turn up the transactions from the locked period. I get the purpose of that, but that's super annoying.
Yeah, that would be really, really hard for me, because if I want to go manipulate something, even if it was past, would you have to unlock the file?
Yeah, which again, on one hand is good. You have to have, it's another level of security. On the other hand, is a pain.
Yeah.
So, yeah.
I'm curious, does Xero have the same loophole with the closing password?
I don't recall that there is a closing password in Xero.
Okay.
I think there's just either the permission to change the date or not based on your login.
Okay.
I'd have to ask one of our controllers.
That's actually really nice, because I can't tell you how many times people got locked out of being able to close it because they didn't remember that password, and they don't realize you don't actually have to have it.
Yeah. So look at what can be recoded. So this is the next thing.
Wait a minute, I want to know about that loophole. If you don't
the
have,
fact that you don't have to have one.
If you don't, do you mean like if the closing date was set with a password, there's a way around that password?
Yes.
What, in desktop or online?
Online.
Do tell.
Yeah, absolutely. I'm happy to. Well, why don't we finish this and I'll pull that one up next.
Okay, add that to your question list.
Great. Wait, hold on. Adding it to my list. How do you hack the closing date password in QBO? This is great. Okay.
Ooh, I know something.
Although maybe we shouldn't say that in public.
I mean, I'm going to assume at this point the only people who are still on this are other accountants, because this is a lot of accounting talk for people that aren't accountants. So you know this, right?
Look at all the stuff. So, oh, and by the way, these can be sorted. So, right, sorted this, sorted by that. Look at all the stuff that can be recoded. Not just the account and not just what QuickBooks calls the class categories, but the contact, the tax rate, and especially if you're using something special for the tax rate, if you're using instead of tax rates, you're using some other business intelligence field, like you're using both of these plus another one, like location, functional expenses, and department. You can do a find and recode based on even those things, which I absolutely love. So we can change, contact, even if it's an invoice that has a payment applied to it, but you can't mess with that in QuickBooks. Like there's no batch reclassify, and if you change the name on one, it's going to mess it up, and you have to go into the list itself. But you can't change it unless you unhook them first and do all this. You can just use find and recode and change the contact name over here, which I love. So
that's really
cool. I just love this.
Yeah, like all those are not options that we can do in our recoding in QuickBooks.
Plus, check this out. You can run this by unassigned. You know how we always say, and rightly so, you can't run a report on a blank field in Xero for certain reports. You can. It's called unassigned. I've got something to check for quality control in Xero files, like make sure everything on the income statement has these tracking categories, and you can run an unassigned one. There's something like that in QuickBooks also.
It doesn't always work right though.
However, oh, does it?
Mm-mm. It's
Um,
I have found it to be pretty buggy. Trying to pull reports with, they don't call it unassigned, they call it unspecified in QuickBooks. But
okay.
if you try to run a report, even when you check off the unspecified button,
Mhm.
it does not always pull.
Oh, that's a pain. So yeah, the ability to use this as a filterable, searchable field is amazing. So yeah, that's a lot like embedded there, and just looking at find and read code. I love the fact that we don't have to do bank reconciliation. We don't have to sit and do bank reconciliations. It's done in real time. And all we have to do is monitor that this statement balance equals whatever the bank or credit card is saying. If those are out, it's a pain to have to research and figure that out. But 999 times out of 1,000, this precisely equals what the bank balance is or the credit card balance is. And so there's no separate reconciliation function, which opens your capacity for earnings if you're in public accounting and have many clients. It takes you less time to do the monthly close because you're not sitting there doing all the reconciliations. They're done in real time, because when they're brought in through the bank feed and recorded in this system, either by matching or by data entry or by whatever else, it's not only entered, it's also marked as reconciled because it came straight from the bank. So that's a really nice feature. And if you can do, if one person can serve 10 clients instead of 6, or 20 clients instead of 15, right? It opens up capacity. So that is also another feature I love. I love the multi-line import for invoices and bills. So let me go to business, invoices, bills. You can import using a similar process that we saw earlier today a couple of times with importing bank transactions into a bank feed. You can use a similar process. There's a CSV import template. And all you have to do is get your data from wherever it is into this layout, and you can import bills into Xero. Similarly to the bank uploads templates that we saw earlier, there are a bunch of columns, more here, but there are required columns and columns that aren't required. So you can just delete them if you don't use them. And so let's go here. And for example, let's say you have, so here's a specific example of how we use this to allocate payroll across multiple locations, and for our nonprofit clients across functional expenses. We had this is a true story. Hang on, I gotta stop sharing for this. We have a nonprofit client, about $2 million in gross annual revenues. And I was on my weekly call with the executive director yesterday, Friday. And she said, I'm going to expand the duties of one of our employees. He's currently exclusively in this one program. But I'm going to expand his duties to get involved in program number 2, which is funded by a grant. I need some way, she said to me. Alicia, you're like smirking, and rightly so. I need some way to be able to prove to the grantor that we're only charging them for his salary spent on this grant and not his other duties. How are we going to do that? And I was like, for a lesser firm, this could be a problem. I actually said that. For a lesser firm, this would be a problem, and we'd have to scurry and figure out something, and we would do it. But we've been handling it this way the whole time. All you have to do is let us know what the rule is. Is it a percent? Is it a flat dollar? We have a macro-powered template for this. And she was like, have I told you lately how much I love you? And so my point is, no matter the complexity of the calculations that you need to do, let's say in Excel, you have those calculations result in a layout that looks like this, and you can upload a bill for a payroll in which, you know, the salaries and the employer's share of payroll taxes, let's say, are being allocated across 4 locations and 3 functional expense categories and grants, and show the deductions that don't get allocated, of course, but payroll deductions for things like the employee's contribution to health insurance premiums or life insurance premiums, or amounts withheld for their employee's contribution to a 403B or a 401k or a Roth 401k, or have $5 withheld for a United Way contribution. All of that, those calculations can be done in a reliable, rules-based way in Excel, and have them culminate in a simple CSV in this layout and upload that bill to Xero. Who cares how many line items it has? It's not like anybody's reading it. The whole point is everything goes into the correct general ledger account with the 2 correct tracking categories. And when you run an income statement, you can run that income statement for that location and say, and knowing that payroll has been allocated there, hey, how are we doing at this location? Or run a report filtered for that grantor or that grant and say, look, grantor, here's my official report. You gave us 50, we spent 10, we are on track, or whatever. You know, you gave us 50 and we spent 50 on the contracted spending purpose. Look, here's proof. And all of that happens without a third-party app. Are all of these steps possible with QuickBooks? Yes, with a third-party app. And you have to learn how to use the third-party app. And I'm not saying it's not possible. Of course it's possible. People in our firm know how to use it. But in Xero, it's not necessary. It's inside the app. So that's another thing I love about it. Also, the bank rules are a lot more detailed. These are the rules. Let's go open one. Oh, here, there's one that we created earlier. Oh, shoot, hang on. I messed up there. I didn't mean that. Let me stop sharing for a second. This is the demo file that I clicked. Hang on. Okay, let's go to bank rules. Edit. So you can have spend money rules, receive money rules, transfer money rules. You can have rules like when the money's spent on a bank statement matches whatever. You can choose any or all. You can add a bunch. You can have contains for some like fuzzy logic, starts with, or even if it's blank, what to do if it's blank. And tell it what to do. Should it choose the payee from the bank? Should it be changed to a particular contact that you're going to name? Do you want the user to be able to enter it during the reconciliation process? All of these are options that you can choose for this rule. Then you can even split it up by general ledger account or by one of your 2 extra class tracking categories by percent. Or you can say, all right, take the first $10 and put them to dues and subscriptions, East Side fundraising, first $10. After that, split up everything among these 4 line items, 25% apiece.
I like that you can mix a flat rate and a percentage.
Yeah.
That's something that you can't do in Cubio.
Mm-hmm. You can set the reference automatically, either by the user or automatically according to a particular field. And you can have this rule apply to only certain accounts. Like, so if a company works with, if a company has a vendor, and if they pay the vendor on a credit card, it always means we're capitalizing something. But if they pay the vendor from the bank account, it always means it's an expense. Right? You can create this rule based on what account it is, what account it's coming from, and then give the rule a title, and then it goes in there, and then it alerts you, oh, this rule is coming into play. Should we do this? Look, apply rule 711. Yes, I'm going to apply the rule. I just did data entry and reconciliation in a single click. So I like the detail of the bank rules. I like the fact that there are 2 tracking categories. There's some things I don't like. I don't like the audit trail. It lacks the detail that I really need that that QuickBooks has, especially QuickBooks Desktop. So the audit trail really isn't that great. Something nice about the contacts, you can create groups, which is nice. It can be very useful for 1099 preparation or any other way that you want to group. Something also nice about these groups is that you can run an AR aging, not only by contact, but by contact group, which is cool. Same with AP. So here's an AP aging. And we could run it by vendor, but you can also change this to, hold on, contact group instead somehow. I forget. No, not just group. There's like, you can add a column. Oh, maybe it's in here. Let's see. I forgot how to do it with the group. This is nice too, being able to see this in here. I forgot. Oh, there. It's like this. There's a training group, so you can have it all in the by group, by contact group, which is nice. So those are some of my favorite features of Xero. I also like, I've experienced personally, I know that I have different experiences than some, but my experience between the integrations between Xero and certain other platforms is that it's a smoother, more reliable, more accurate integration. Not always the case. Like sometimes Cubio is just fine. But I've also integrated, for example, Float with Cubio and Float with Xero, and Harvest with Cubio. And I'm really not thrilled with those integrations, but I've never had an issue with any integration with Xero. It just like always works as advertised. It's described to me that like whatever, I don't know, the back end of Xero is different in some way, which I don't know what else I tell you. That makes it like easier for apps to integrate with.
It looks like the fields are more discrete, that they make better there's more flexibility to be able to leverage any piece of information, not just the main pieces of information.
Maybe that's it. Maybe that's why so many developers can make things that integrate with it. Sounds good to me. One thing that is super annoying though about Xero is that when you run a ledger detail, there's no separate, like the separate field that actually exists for the contact does not show up. In the ledger report, there's one column that combines the contact and the description. What is that? Yeah, So like you can get it in a separate field in some reports, but not in a ledger detail. So you can export it. Granted, you can export it to Excel, turn it into a table object, throw a formula on it that says take everything to the left of the hyphen that separates them, and that's the contact and everything, and you can do that, but it's in there already in the database as a separate field. Why would they combine them? I don't know.
Somebody had to go to extra effort to do that too.
I know, right?
I'm a little confused as to what the point of that would be. Like somebody had to build that into their system. Why is that better than not?
And here's why I'm mentioning this. I'm not here saying that like 0 is the be all end all. My point is, even with its disadvantages in comparison to 0, my opinion is the weight of those disadvantages is far less than the weight of its advantages. And to somebody sitting here going, yeah, but the contact field. Okay, are you going to stop there? 2 tracking categories, better business intelligence, better automation, spending less time. You can make more money with more clients serving them, better reporting features, and no third-party app needed. Really? The contact field? Extract it. So that's why I mentioned some of the downsides. They just pale in comparison to the overall benefits of it. So that's my full answer to your question, Alicia. I hope I didn't do overkill. I don't know.
Well, it's a lot, but it gives me a really good sense of what it is. I mean, because I have a career based on teaching QuickBooks because it's not easy to use. As much as Intuit is trying to make it so that anybody can use it, even when they're trying, some of the things they do actually get in the way recently. And so, I don't know if I could, build a parallel career teaching 0 at this point. But, it's like, when you look over the other side, you're like, ooh, that's really cool. Okay, wait, I can't. I have to stay over here.
Great. So let me just check. Oh, that's so great. It's nice to see some additional money coming into the campaign, even though I don't think it was a part of this bookkeeping-a-thon. But by the way, and I have to look and see when this is over, but there's actually a match happening right now, which I had forgotten about until yesterday. But there is someone who said if $5,000 gets put into the Racial Justice Center's campaign, they're matching it. And
as of when? I mean, does the money that we raised before we started count?
Some of the funds actually counted.
Okay, good.
Hang on a second while I get information about this.
Because we've been fundraising for a week.
It hasn't been the entire week, but the funds that came in today, and I think yesterday.
Good.
Give me just a second. So I don't know when the deadline is. Sorry?
Is a deadline when we finish? Because that's kind of ambiguous. I was
It
going to
will
say
run. Oh, I see it.
But they're not as good when they're not fresh. So
no, eat them.
I'm going to take them. They're fresh and they're wonderful. Do we know what the timing is going to look like for today?
Yes, it is tonight at midnight. So for all of you out there still or watching us, joining us right now, any funding that you send to the Racial Justice Center Building Fund campaign using the GoFundMe link that's in this live stream will go towards the match. If we can get to the 5K mark by midnight tonight, then someone is doubling all of those dollars and putting in $5,000 into this campaign.
So anybody who contributes to us for this is going to they're going to get it doubled. That's awesome.
Yes. Yeah. So even when we're done for today, we can keep spreading the word, keep letting people know about this match. It is valid until tonight. That's amazing. So any place where this is being live streamed, we can go in and post a comment and say something about the match, and that'd be fantastic. Do
That's a
we
really
have
good idea.
to, what?
I think that's a really good idea, but I'll do my little QuickBooks hack here first and then go add some
Excellent,
comments.
please do.
Yes, please.
All right, so this will be a nice, easy one. Let's see. All right, how do I?
The third circle down at the bottom.
I have it.
It may be related to the bandwidth issues you're having.
My Chrome tab selected, and I'm trying to click it, but nothing's happening.
So you did the third button down in your controls to turn on your share screen?
Yep. And I've got an entire
I'm not
screen window or
seeing
Chrome tab, and when I select it, nothing happens.
Do you want me to pull up mine and you direct me where to click? I know that's not convenient.
No.
I don't know if it's related to the problem you were having earlier.
Figure out. Oh, Lord.
You can
One
do
second.
it. You can do it.
I can do it. I can do it.
You can do it.
Try this one more time. Well, if you want to go ahead and share yours, I don't know why mine's not working. Is there anything that the host needs to trigger?
No, your share comes up on my side and then I approve the share. So, I don't know.
Jamie, when you
You've
share,
been
are
having-
you double clicking anything, or are you just
No,
selecting
I
the window to
single
share?
click. I single click the share screen button, then there's a pop-up in which I select the screen that I want to share. And then I click the button that says share, and then Alicia gets notified, and then she clicks whatever she clicks so that the share begins.
Okay, so
maybe
I'm
Alicia
not
could
sure.
share.
All right. I'll go ahead and I'll share mine and you'll
Okay.
tell me where to go. All right.
Before we jump into
all
the specifics, I
Yeah.
wanted to let you know that we've got a cat lover in the live stream, Veronica.
Yep,
hoping
it does
your
come
cat
in for
comes up with another
it
hug.
does come in for a hug occasionally. She's surprisingly she's the smallest one in the house. We've got 5 cats. She's the 6-pound baby, but the rest of them do not mess with her. She is the dominant in this house, and I am part of that. She has claimed couch while I'm here working in many cases. All right, so yeah,
All right.
if you go into your advanced.
All right. So I'm going to go ahead
set a
and
closing date
set a
and a
password. And I'm going to set it for my closing date is today. Do you have a password that you would like?
It doesn't matter what it is, and that's here.
All right. Let me go ahead and set a password.
This is I believe it is a
Oh man.
oh,
I've
got a
got
quantity
negative
on
tail.
hand of less than
Let me hopefully I can escape
Try
tail
1031.
supplements.
Oh, you've got a different file up. I was using landscaping
Yeah.
one.
No, I got it. So I have a password set as of
Perfect. Okay,
30.
so go back into that and change the closing date. And we're going to pretend like you have no idea what that password is, and you're not going to type any.
Okay.
Why didn't it close? There it is.
Okay.
And just change the date. Change the closing date. Pick the next day, whatever that is.
I'm going to hit the plus sign to go to tomorrow.
There you go,
Okay.
and hit save.
So I could
You
change
have
so I
to-
could change the date up to today, and then that'll allow me to.
You can
That
actually
is a
change it in
whole-
the future too. But the trick is you have to know the password, and you do not have to use the password. I don't even know. I think it's there. QuickBooks Desktop, by the way, has the same loophole. At least when I was using it a couple years ago. They may have changed it since then, but I think they left that in there because so many people could not get access to their file without that password. So they just removed the need to have it. Like right now, you can hit save and you've removed the password from your file, and you didn't have to know it to get rid of that.
Right.
It's not very secure. I mean that if you're stuck and you need to get into your file and you cannot access the password, this is the loophole. You don't have to know it.
Interesting. That's really super interesting. So, I mean, it makes sense because it's less of a lock than it's like kind of a warning or a formality so that somebody who doesn't know better doesn't
Exactly.
accidentally change the book. So I can see why, I mean, I can see why Intuit did it, because if you forget the password, you are SOL on your
Correct.
books. Yeah.
Yeah.
Well,
That's
cool.
not the
Thank you
case
for that
here.
tip. I did not know that. That's cool. That's super
I don't
cool.
know
Thanks,
what is
Jen.
going on with my speed here, but I keep dropping out for a second.
We have since I video cast all day, every day, we have like direct connections and like crazy bandwidth. And so,
Well, I'm wondering,
That's
since
awesome.
I have a new computer, I wonder if it's just like on the wrong bandwidth or something, because it wasn't like this before. But
right.
whenever you increase or where inevitably
Right.
there's
Well,
little
some routers have 2 channels. Make sure that you're on your router's main channel and not your router's sub channel.
Yep, good point. Thank you. I'm going to check that.
Yeah. 'Cause it'd be nice to have you come in all clear, all crystal clear.
All right. So do we have it in us today to answer one more question?
Yeah.
All right, let's do it. And let's see what we've got. Hang on here. You know what I do? I was just refreshing the GoFundMe page to see if any additional payments come in. Share those links if you are with us. We would love to see some additional funding sent to the Racial Justice Center. You can make a gift of $25 or $25,000. We've seen some amazing heartfelt gifts come in because Catrice Jackson, who's the leader of this campaign, believes that justice is love and that we put money where our heart is. And so we've seen gifts for $5, $25, $1,500, $5,000, $250, $15. And all of those gifts are made with love. And that's what matters.
Mm-hmm.
So let's see what else we've got here. This one we actually dealt with today. So hang on. And this was an interesting one. Hang on. Oh, this was super juicy.
Okay.
I have a client. I have a client who did some work for free in order to advertise his business. Can he write off the invoice to marketing expense? Anyone want to join me in the chorus of "It depends"? 1, 2, 3. It depends.
I know what I would do.
What would you do?
I would record the income and the expenses, 2 separate transactions, and offset themselves either in another $0 expense. You can see I'm a big fan of those, or just or run them through. I mean, you could even run them through the checking account as $2 and offset them, or do them through a clearing account. But I would definitely count it as income and count it as marketing expense. That's what I would do.
That is exactly what I would do as well.
You would do? Good.
Yeah.
Yay, we win here.
So let's do it. So this question was not platform specific.
Okay.
So let's grab a demo of one. We've been in QBO for a while, and we did QuickBooks Desktop before that. So I'll take out my Xero sample file, and we can do a quick demo in Xero of exactly the technique that you were just talking about.
Well, you were actually in Xero for a while. I would suggest a desktop one.
Like I was saying, we're going to do this one in QuickBooks Desktop. All right.
Being platform agnostic here.
Right, exactly. Okay, good. And hold on, let me get back in here. Share my screen. Screen 1. Okay.
Hang on, let me prove you. Bam. There you go.
I feel approved.
I approve.
Okay. All right. So for simplicity purposes, I'm just grabbing an invoice that's already in here. And isn't there a way to duplicate it? Look, duplicate invoice.
Yep.
Okay. We just did a bunch of things for, and let's put this like year end, let's say, just so it's a different date. We have these in here. And we provided these services for someone. We decided not to charge because we're starting out our business and we want to spread the word. I would record income at the market rate, and let's save this.
You got your
And
total
then-
there?
What?
Well, your total's behind my picture, so I can't see what your grand total on the invoice was.
Oh, 13,900.
That's a big marketing expense.
Well, yeah, actually, let's remove a couple of those. We'll just change like quantity to 1.
Take that second line off. Yeah.
Like I was saying, $300. It's a $300. It's a $300 invoice. We did these things at no charge because we're starting up the business and we want to spread the word. It's important that data be captured. Because ultimately we need to know, when we look at our financial reports, we need to know what kind of dollars have we earned, regardless of how we were compensated. And on the expense side, what does it take to start and run a business? And if the numbers aren't there, then that's information that you don't have. And if you are not putting reality into your accounting system, what are you doing? You're going to, right? Like, management by gut does not get us from point A to point B. Management by data, fueled by your vision, that gets us from point A to point B.
Right.
So you can click receive payments. No, yes. Discount and credits, put in $300, and your discount account is going to be, let's see if there's a marketing, promote, what's already in here? All right, let's take a look. Something marketing related at all? If not, we'll add something.
There's no advertising in that?
I didn't see one. Odd, right? Let me go back up to the top. Automobile, bad debt, bank service charges, depreciation, dues and subscription, dues and insurance, interest, payroll, office supplies, postage. Nope. No marketing.
Wow. Okay.
Okay, let's call it marketing and promotion. There you go. Oops. I just created it as an income account. Next lesson, how to fix the chart of accounts. So I'm closing this invoice by applying a deposit against it. A discount, using the discount tool, and that goes against marketing and promotion. I'm going to click Save and Close. You can see that the invoice is now marked as paid. And I'm just going to really quick go into the chart of accounts because I know that this is a sample file, but I just can't let this stand. It's an expense account. And I'm clicking Save and Close and nothing is happening. There we go. A little delay.
And I'm trying to figure out how I would do this in QuickBooks Online, because we can't do it through the payment or discount, because everything in QuickBooks Online for the payments is product based, not account based. And so,
can you do it through that section at the bottom?
Like where you make the deposit and cash back to, let me try that.
No, not the cash back thing, but when you make the deposit.
Right, the add funds to this deposit and subtract it to marketing. Gotcha.
Yeah.
All right. Would you like to, Jen, do you want to demo it or should I?
I can, and I think I might actually be able to at this point. It was
You're much clearer than you were.
Yeah.
good. That was definitely my speed then. I was on the wrong bandwidth.
Oh. Boom, boom,
Apple
boom.
Texan Royal Eyes. Woohoo!
Yeah, thank you. All right, so are we doing QuickBooks Online or desktop?
She just did desktop, so online.
All right, what are we working on again? Hold on.
So we had making an invoice and writing it off to marketing expense instead of income as a barter, essentially.
Okay.
Let me get you approved. Hold up.
Actually, I'm really glad that you said that, Alicia.
Mm-hmm.
Because as I was hearing this issue be discussed, someone else had mentioned it as a barter transaction. but I don't think anything was received necessarily in trade for that. Like we wouldn't be issuing a 1099.
Oh, right. I'm sorry.
You
I
know?
got the scenario backwards that it's not a barter. He's just not charging
Right.
it for self
Promotion. Yeah.
promotion. Got it. Never mind the barter part.
Okay.
Okay, so well, refresh my. Let's clarify what we're trying to accomplish here.
Startup business agreed to do some work for free so that someone else, the recipient of that work, could say, wow, this is really amazing. You know what you're doing. I think I'll spread the word. So to do some work for free, essentially for marketing purposes.
Okay.
And Alicia's position, which I share, is that even though no money changed hands, not recording this transaction in the books gives us a skewed view of A, how much it takes to run a business, and B, what we've earned, regardless of how that earning was fulfilled.
Okay. So, and correct me if I've got my understanding wrong, but this is one of those scenarios that sounds like, let's say you're a photographer and somebody says, well, can't you just do it for the exposure?
Oh, I see what you did there.
Just another way of looking at the same problem here. Let's pretend like you, the photographer, have decided that this is acceptable, which as your accountant, I'm going to tell you absolutely not.
Thank you.
But aside from that, let's say you decide that, fine, I will give this person a break because they are, giving me props or something like that. You have already issued the invoice, so I'm going to edit one that I already have in existence here. There's, again, so many different ways to accomplish the same end result. The end result is, though, that the money that is on here, first of all, the total sale that's on here is $305. You'll see there is a deduction here that brings it down to this $274.50. But ultimately, we really care about this number first because this represents our sale value. So if you're discounting this entire amount and not charging them, you're actually giving away $305. It's important to know that because just like Jamie said, if you don't track this, you might get to the end of the year and wonder why on earth you didn't make very much money. Well, it might be because you gave away a lot of it. Mm-hmm. So there's a couple of options here. You can see that they've got a discount percent in here. You can use this if you've got it mapped correctly, but I'm not going to bother with this one. So I'm just going to get rid of this one. There's a couple of, again, multiple ways you can do this. One of them is you can create an inventory item called discount. Doesn't have one in here, so I'll just create one so you can see what it's going to look like. We're going to do a non-inventory service is a good one. Ultimately it doesn't matter because it matters what you're mapping it to. Okay, it matters, don't choose inventory because it's not true inventory, but whether you choose non-inventory or service has no relevance beside the fact that you have to connect it to the chart of accounts. So I'm going to say discount here, and let's see if I've got an income account for discounts. I do not, and I think we already decided that we were going to apply this to marketing and promotions, right?
Mm-hmm.
Okay. All right, in that case, I'm going to tie this not to the income account, but I'm going to go down. Do we have one in here? Let's see. Marketing, nope.
Oh, this is a different approach
You absolutely can do this.
Than what I would do. If I was to take this approach, I wouldn't just call it discount, though. I would say marketing, promo.
Oh yeah,
something
you
like
can
that.
absolutely. Yeah, we can modify those names in
Yeah.
the inventory list.
Because we wouldn't want somebody to use that discount and have it wind up in marketing later on.
True. All right, so I'm just going to say what the reason was there. Oh, hey, I need a password to continue. I actually put this in here earlier because I was going to demo and then couldn't get it to show. So I actually do know what this password is because I just said it. But normally, if you run into that issue and you don't know the password, go change your closing date, come back here, and you can continue. So this is effectively documented that we have a $305 sale and we have a $305 discount that is going to get mapped to our chart of accounts through that section. No, I don't want to send this. I just want to hit save and close. Hold on a second. Save and close. All right, let me pull up, what is the date on this? This is 9/20/2021. Let me pull up a report so you can see what's happening on the back end. Was it September, I think?
I couldn't see.
Pretty sure. Oh, let's see here. Nope, It is not, because we would have an expense here for advertising, or
Just go up to your magnifying glass. It should be right up there to look at.
yeah, I think I have it in the wrong period.
Oh, but Jen, just to see what it was super quick, click up on your
Right.
magnifying
You're
glass and you can
go
just see what it was.
10/25. That's what it is.
There you
I was
go.
in the wrong month. That's what you meant. Sorry. There we go. All right. So we have, let's scroll down here. Okay. See this 305 right here? This is your advertising expense. This has now been added as a result of that invoice having a deduction on it.
Mm-hmm.
So you've increased your expense by 305. And if you go into your income line for landscaping services, or we're just going to check total income and make sure that she's on here. But let's see, the name of that customer was Shara Barnett. So if I sort this by name, or group, excuse me, by name, let's see if I can find Sarah Barnett. Here she is. And I see that the total sale value to Sarah Barnett is still 305. So it is increasing my sales by 305, and it is also increasing my advertising costs by 305.
Okay. And I really want to emphasize to people that business done is business done, even if no money changes hands. The goal of doing business is not to see how much money, it is not about how much money you make. All the business you do is taxable revenue, even if it doesn't hit your checking account. Barters count. Discounts count. You need to see your full income and then manage the corollary expense separately. So, and when all my business owners say, yeah, but it all nets out, why does it matter? I always say, go try and get a bank loan. You're not going to be able to get a bank loan if you're missing $50,000 in revenue. You're going to wish you had that on your KPIs in order to make your indicators. It's super hard to get loans right now. And if you're not maximizing your revenue and paying your fair share of taxes on it, you need to. And it's a genuine marketing expense. You're going to get the deduction either way.
That's true. All right. I'm fading a little bit here on the East Coast, but I think I have it in me for one or two more questions.
Okay.
I know that I would get a jolt of energy if someone watching were to share this live stream. I know I would get a double jolt of energy if some money were moved into this campaign for the Racial Justice Center, sponsored by Zero and Practice Ignition, for which we are delighted and moved because they did this with their whole hearts. So if you can click on the GoFundMe link, if you're watching this Bookkeeping-a-thon, we've been going at it for 6 or 7
hours. 7
and a
hours.
half
Just
hours.
7 hours.
Yep. We're doing this to raise funds for the Racial Justice Center. It's obvious that there is still so much racial healing work that needs to be done. And even within the past week of us promoting the Bookkeeping-a-thon, we were witness to a lot of racism that was expressed by fellow white people. And this is just a bookkeeping-a-thon, right? We're sharing about QuickBooks Online and QuickBooks and Zero. This is just debits and credits. And if someone can express racism over debits and credits, that it shows up everywhere. And it shows up everywhere in the lives of people of color in this country, especially Black people and especially Black women, because that's an intersectional area of oppression. And those are exactly the people who need the healing from the daily gaslighting, the microaggressions, the macroaggressions, not to mention the violence, the physical violence that occurs, the redlining, the denial of access to opportunities that still exist every single day, that are still perpetuated and upheld every single day. It's obvious that a center like this is still needed. And that's why we're here to support Catrice Jackson, who is the leader of this campaign and the owner of the company who runs the programs for racial justice and racial healing. That needs to be moved from from a rented space into a building that is owned, from a building that is owned by the company. So if you Thank you so much, Jeff. And we're so glad that you're here today. We also appreciate you moving money into the campaign. It makes a difference, a powerful difference for racial justice. And if you can share that link, it's the GoFundMe link. The Racial Justice Center itself is located in Omaha, Nebraska, though people come from all over the country. That's how powerful these programs are. It's unfortunate that these programs are actually, these particular programs like Harriet's Dream, they're one of a kind. And that is why people, especially Black women, come from all over the country to Omaha, Nebraska, in order to benefit and be nourished by these programs. Mm-hmm. So if you can, you can call up right now and private message people right now and share this link right now and move money until, as it happens, until midnight tonight. There is someone who said, if you all can raise $5,000, I will match it. And what we're doing here in the Bookkeeping-a-thon, by serendipity, gets to be a part of that. So every dollar that comes in has got a shot at getting doubled today, which is just amazing to me, because this is a long haul. Buying a building and renovating it is not cheap. All of us are accountants. We know that. We've seen a lot of books of companies who have done that. We've done the books of house flippers, and we've seen the loans on the books for companies who have bought commercial real estate. And whether she decides to buy and renovate a building or buy land and build one, it is not cheap. This is one very, very important step in a long haul crowdfunding campaign.
Right.
So,
and one thing that I want to add to this, as far as intention goes, that when white people are helping people of color, there's a tendency to think to yourself, okay, well, what can I do, and come up with your own agenda and your own contribution. And, that's not going to be rejected, but this is coming from the people who have asked for something. Like, we are finding out what Catrice and her students and her community needs. And they've said, this is what we need and this is what we want. So we're contributing to something that was actually requested. And so
I love that you bring that up, because that's exactly right. Most of us, especially those of us who own businesses, like the three of us, we're not used to being wallflowers. We don't have a problem.
None of us are quiet.
If something bothers us. So we're also not afraid to go out there and start saying statements and words and plans and ideas that aren't needed in this arena. There's more than enough people of color that have already told us, this is the support we need from you. So us trying to reinvent that does no good whatsoever. It just elevates us and our ideas and our thoughts, and it just completely defeats the purpose.
Right.
There is no need to reinvent anything, because they've told us exactly how to help them.
yes.
And that to me is incredibly liberating. It's just, it's very freeing to know that as long as I'm willing to put my money where my heart is, that I'm helping and I'm not hurting.
Mm-hmm.
And
Right.
for a lot of us, because I cannot be alone in this, many times in my white experience, I have been hesitant to take an action or take a step or say something or speak out, because I was afraid of offending a person of color for speaking up for them. I didn't want to make it feel like they needed me for some reason. It made me feel uncomfortable that I didn't know how to advocate.
Mm-hmm.
So as someone who wants to be an ally, but also does not want to take that front and center spot because that detracts from that, this is a really great scenario for me to kind of give my effort and my energy and my contribution to, because there's no one that gets harmed in this. There's no downside to any of this. And I'm a big fan of win-win. So this was just an easy one for me.
Right. Yep.
Thank you both. What beautiful and powerful shares. So for all of you watching right now, if you can move money into this campaign, it would also be helpful, by the way, if you could tag my name with any funds that are sent in, because for two reasons. Number one, I am a member of Catrice Jackson's Socially Conscious Women's Collective, and I'm one of the campaign leaders that she has selected for this very long haul campaign. And so I am accountable to her for that. And secondly, it lets us know that you would like more bookkeeping solutions, because that is what we are here doing, sharing our professional knowledge and longer money comes in, the longer we are here. So, and we're doing it to as Alicia and Jen so beautifully and powerfully said, to follow the Black woman who has created this campaign, because she has said, this is what we need, and we're following her. Man, that was just so beautifully said. So we'd love to see more money moving. You can do so by moving money yourself, by sharing links, by private messaging people and saying, hey, can you please send in some money? And the best news is, if we can get to that 5K mark by midnight tonight, someone's going to double it. I can't even just believe that. So let's go with another solution. And oh, we did that one already. Oh, this one we did. Hang on. And by the way, if you're wondering if we will answer your questions, the answer is yes. You can post. We keep checking all the places where this is being live streamed. We're up for it. Looks like we have a question that has just come in. You want to go ahead and read it, Jen?
Yep. Veronica says, I am new to bookkeeping. I have a client which I'm doing catch up. It's a consulting business. The business started in 2020 and registered in 2021. I use QuickBooks Online for the catch up of both years, or of both of the year. So for 2020, the business was a sole prop, and for 2021, it's an S Corp. Just wondering if I did it right, recording both years in QuickBooks Online. I have a doubt behind my mind that I should not record the 2020 in QuickBooks and just start in 2021. What can you say about this? This is a phenomenal question.
There's a lot of layers to that one.
There are a ton of layers, but I mean, really the good news is that you're fine. You do not have to have two separate QuickBooks files in order to make this work, okay? There are different things that you need to do to your file though, because some of the chart of accounts changes between a sole prop and an S Corp. So there are a couple of tweaks that you can do, but as long as you have an accountant that is handling your compliance and knows that 2020 goes on a Schedule C, and that 2021 goes on an 1120S, and that they are clear on the differentiation, and that they have given you your closing entries for the year, that should not be a challenge for them to give you. So my first answer would be that is, if you're new to bookkeeping, make sure you have a tax preparer that understands that's what happened. That you have a 2020 year that needs to be a Schedule C prepared, and then a 2021 year that needs to be an S Corp preparation. Those require slight changes to the new, or slight nuance changes to the chart of accounts that your tax preparer needs to know about. And they should give you closing entries for 2020 to close out the accounts you don't need anymore, and starting entries for 2021 that gives you the accounts that you do need going forward, as well as instructions on how to use those if you're at all confused. Anybody want to add anything to that?
Only one thing comes to mind. Just confirm, like look at the paperwork with your own eyes. Confirm, and I'm so serious when I say that. Confirm with your own eyes that the entity has the same tax ID as before. That the S Corp has the same tax ID as the sole proprietorship. Because there are two ways to do this. You close down the sole proprietorship, create a new company with the same name, only now it has Inc. at the end or something, and it has a new tax ID. Or have the old company and do some things which I have forgotten since I'm out of the tax world for too long, but like make it become like a corporation and then elect S status, or maybe it was a single member LLC, maybe it wasn't. Maybe it looked like a sole prop, but maybe on a Schedule C, maybe it was a single member LLC. Maybe they elected to be taxed as an S corporation, and maybe it's the same tax ID.
Yeah, if there's a new EIN, in this case, Jeff also commented the same thing.
Yeah, and this is what I was waiting to say also.
The only reason I will. I completely agree, but especially from the perspective of payroll. If there has been any payroll run in that file and filed under that EIN, you cannot use it for the same for the next company.
Right.
However, in many cases, a sole prop is not doing payroll. They don't have anything extraordinary. So it really does depend. Like Jamie was saying, if there's an EIN change, I have seen an EIN change in a file in later years and not had to go back and redo all of these prior, because you understand, clients come to us and are often sole props and they make the change to an S Corp while they're with us. So I've never had a scenario where I had a QuickBooks file that I could not change the EIN for, and the file was already closed and filed on a tax return under the prior EIN, and I could close that, pull that archival data, and then start clean with those numbers starting. But it does require treatment from a tax accountant. They have to know that that's what happened if you're planning on using the same file.
Right.
And if you've ever had payroll in the first one, you will not be able to make that change. And if you do, it's going to be a nightmare with Intuit.
Okay. Because my perspective on this is I have done, Jen, what you are saying. It's actually usually the way that I do that, but I'm pretty sure that like a sole prop usually is under your social security number. And when you become an LLC or you incorporate, you get an EIN number, and the party line is that you're supposed to have a new file. What I have done is start a new QBO account and just transfer the data from one to the other under the new EIN, so I can prove here's the old file, here's the new file, because I still feel like that starting financial history is still relevant and necessary for business operations.
And my concern with that is when you close out an old file, you don't have access to it anymore. You have to re-up that subscription if you want to go back and get that data again.
Well,
so unless you've really pulled the whole archive and you understand that it's really at that point not truly a functional accounting file,
right?
To try to to try to do anything with that data is going to be a pain in the rear. If you want to be able to function in that file and look up the history and understand what did the sole proprietor do 3 years ago with this vendor, it really is going to help to have it in the same file. However, you are absolutely right about it being a problem. And there was one other instance. Oh, I remember what it was. An EIN that a LLC had. They obtained an EIN as a sole prop because they didn't want to use their SSN. But it was an EIN that was specifically given to the sole proprietorship. Apparently, and this, correct me if I'm wrong, but apparently this is what I was told by the IRS. Once you have an EIN assigned to a sole prop, you cannot use that same EIN for the S Corp when you make the election. Right. You have to get a new EIN, which means you have to get a new QuickBooks file if you've already had payroll running with that original EIN.
Right. Now, I think part of the operative part of this, and because that history is important, is that you can just port the data over. It's still a new file. And like you said about having your closing entries from one entity to another entity, if you've got that in there, then you can maintain it, but you have an actual separate physical file, which is kind of a technicality, but it's still right for compliance. And if you do,
an IRS agent has to say,
right.
Just curious.
But but if you are going to start a brand new file from scratch and not import the old history, the workaround for what you said about not having access to your file, there are a couple workarounds. One is that you can cancel if it's QBO, you can cancel your subscription. You still have read-only access for a year, and then you can activate it for 1 month and immediately cancel it again, and then you get another year of history. And
I have not done that before. Right? No, I didn't know that.
So as long as you do it before the 1 year before it falls off of your list, you can just reactivate it.
Good to know.
You're good. Or you could also export it to a desktop copy using Export My Books or Rewind. Then you have a copy that you can open up in QuickBooks Desktop. I mean, granted, you have to have a copy, but you could use, if you needed to get into it, you could download a trial, have access to it for 2 weeks or a month, and then you're aside again. Personally, where I stand is I want to have that company history from 2020 going into 2021 because it's still part of the operations of the whole entity. So that's why my preference is to do what you first described, where you just make sure that you've got your entity splits.
When clients are new and smaller like that, a lot of times you're having to operate with the history in the file, not their memory. Like they don't remember what happened 8 months ago. You have only the data in the file and what the bank says to go by. And usually it's just one person. So they're not sitting there with a team that can pull up all of their data and say, nope, that's exactly what that was 9 months ago, right here. That's resources. So being able to harvest information yourself, when you start taking stuff out and you start removing access, you're inhibiting yourself and being able to service the client because you can't access everything. So if you do have to do that, make absolute certain you've pulled everything you possibly need. When we do a conversion from QuickBooks Online or, from QuickBooks Desktop to QuickBooks Online, or desktop to Xero, for instance, we pull that whole history and we squirrel that away into a database that we can access at any time later on, because I just don't want to have access issues with that file. And the one time you need it is going to be the one time you didn't pull it.
Right. Exactly.
So what is it? Newton's law or whatever it is of accounting. I don't even know what it is.
Kind of vaguely related, but not really related. I'm in this weird situation myself where because I predate the Pro Advisor program, my QBO file, which I've had for free, is not part of your books. It's its own file that Intuit gave me free permanent access to. But now that their payroll is now free, I have to migrate to the new payroll, and they don't have the mechanism to upgrade my payroll and still make it free. So my choice is either keep my existing file and have to pay for payroll, or I have to start over again with a whole new QBOA account. And I'm like, do I start my QuickBooks file from scratch for 2022? Or do I import my existing file, which goes back to 2011 and has all my customers and all my history and all my sales, but it also has a whole lot of clutter because my business model has changed a lot. So part of me is like, okay, fresh start. Maybe I don't want to keep importing all of my individual sales from my students in my learning portal. Maybe I want to start doing consolidated, but then I've got this entire history of, like we support Jamie with Apple, and Jamie, we have senior citizens that we have been supporting for 10 years. And like their kids even need to know now, like some of them are in aged care facilities and memory facilities, and we need to have that history of all of our visits. Now I'm kind of stuck. Like,
well, and if you want to bring in anybody else to help you, if you're going to bring in a helper at some point, they really should have that too. Because the stuff that's in your head is not going to be in theirs. And I don't know, having that database, I've always found it to be way more useful than people think it is. Having that whole history in there of everything people did. The audit log and I, big fan, which is one of the things I miss in Xero. I'm very much a fan of the audit log and QuickBooks.
But on the flip side, Jen, I've also had clients who insisted that they had to have their data access because they needed that history. And then when I check back with them a year later, they've been in it like once. And we did not need to spend $1,000 to do all this other stuff. So they had their access because like they never bothered.
It is definitely a security blanket. That is true.
Yeah.
Oh, that's just the image that was in my mind. There's another aspect to this that I want to highlight, even though it is at odds with some of the advice that I'm hearing today. That's okay, because there are different viewers with different situations who are listening to this, and they might, someone else in a similar but different situation might hear this, and I just want to share this. I learned this back when I was working at a CPA firm and really focusing on the core compliance, tax, income tax, sales tax, payroll tax, auditing, all the compliance stuff. And I remember that on multiple occasions, what I was tasked with doing was helping to prepare information because a client was being audited. Maybe it was a sales tax audit, maybe it was an income tax audit, business or personal, maybe it was whatever, all kinds of auditing going on. And of course, the first thing that the partner would always say to the auditor, oh, come to our office, right? Because like first rule of auditing is never let the auditor go to the business owner's location. Come to our office. We'll give you everything you need. But on those occasions, that's when I learned something, from the point of view of a tax preparer or a bookkeeper. This is what I call Jamie's number 2 rule of surviving a tax audit, which is always give the auditor everything that they're asking for and not more. And when we give an auditor access to a QBO file that has, because company with EIN number 2 is being audited, and that file has data from company with EIN number 1 in it, it is now fair game.
That's a good point, because you're right. They changed that rule a couple years ago. It was more than a couple years ago, actually. I had forgotten about that. But yeah, the IRS now can demand access to your QuickBooks file.
And
They didn't used
they,
to be able to. You used to be able to print out reports and hand it to them.
yeah.
Now they can demand access. That happened a few years ago. I'd forgotten about that.
Similarly, in QuickBooks Desktop evolved their condense feature. You know how it used to be that you could condense a file, and so it would, like, say the cutoff date was 12/31/2019. It would make a journal entry to summarize everything that happened, every last thing that happened in that file on and before 12/31/19. Get rid of it, turn it into a journal entry, and only keep the data from the next day forward.
Mm-hmm.
QuickBooks Desktop, or Intuit, evolved that into a period copy, in which you can set not only that cutoff date, but a second cutoff date to get a copy of your file for only a particular period. For example, I don't know, the year under audit.
Oh my goodness. Oh my goodness.
Sorry to interrupt. This is Radar. He's been pawing my leg.
Oh, he's adorable.
Wears a bow tie. He's a proper young man.
Love it. He's been pretty quiet
Didn't mean to
too.
interrupt. Didn't mean to interrupt.
Not at all. There are, did you see the comment from Vandora, Jen?
Yeah.
Oh yes. Yeah. Well, I'm glad that she's giving you some enjoyment. But no, that's a really good point, Jamie. And you're absolutely right with especially with compliance rules changing. It's, any advice that you get really needs to be filtered through the lens of, when's the last time I heard this? And
Right.
really, I mean, everything you hear, you now need to filter it through that. Is this still true? Am I sure? Do I have the knowledge and expertise to say, absolutely, that's still true today? Because I don't know if y'all noticed, but we had a pandemic and things happened and life changed, and it's not going back to what we used to know.
Yes.
So anything that you hear on this live stream is a product of what we know currently,
Yes.
but it does not mean that holds true indefinitely.
Right. I mean, just thinking about like having to start a new QuickBooks file back in when desktop was the only option, that was easy.
Yeah.
If you have QuickBooks Online and you're buying a company, you need the data that's in that QuickBooks Online file, and you can't really make a new file. So is the whole idea outdated? Maybe you shouldn't need to, as long as your reports match your taxes, maybe you no longer need to have a full separate company.
Yeah.
Just my 2 cents.
Thank you.
That's not a compliance thing. Everybody don't hear what I just said and say, oh, Alicia said you don't need to make a new file, because Alicia thinks that you do.
And as a reminder to everyone, bookkeeping and taxes are not the same.
This is not tax advice.
They do not operate in the exact same sandbox. It is different. Okay.
Right.
There's a lot of analogies I could give you around that. The easiest one that I found is security guard versus cop. Okay. They both kind of sort of know similar stuff. They might use similar tools, but the reality is the security guard has less regulations and less compliance rules than the cop does. The cop also has a heck of a lot more power than a security guard does. So there's a lot of other analogies we could give. That's just the first one that comes to mind at the moment. But bookkeeping and taxes are not equivalents. They do not necessarily coexist in the exact same space. They're Venn diagrams that kind of maybe touch each other. But that's about
Venn
it.
diagram is exactly it.
All right, beautiful. I want to thank you so much. I don't see any other questions coming in right now, and I don't see any other money coming in, but I want to tell you that this bookkeeping-a-thon, I want to give you a total.
Yeah.
This bookkeeping-a-thon has brought in, can I get a drum roll, please? $3,284, moving money for racial justice into that campaign.
We broke $3,000. That's awesome.
That's phenomenal.
Yeah.
Absolutely.
Man, I'm thrilled. Seriously.
That's awesome.
so
Thank
great.
you all, everybody who contributed. Thank you, Zero and Practice Ignition, for those those big contributions. And some of you, it looks like you've been on all day with us, like Jeff.
Yeah,
Thanks
Jeff
for
has
spending
been
your
on
day
all
with
day.
us too.
And thank you, Jamie, for putting this whole thing together and for hosting this and for keeping us all here together. You haven't had any break at all today. I don't know how you're still handling
You didn't
this.
get up once.
This was lunch and dinner. It was a mango smoothie.
Oh, wow.
All right. Well, thank you. I appreciate everything you put in because you do go way above and beyond, and it's inspiring. I'm feeling it at this point in time because it's been 7.5 hours, and I know all of us are kind of fading a little bit, but I really appreciate that you are spearheading this effort and really pushing this along to the finish line. I love it.
My pleasure. I couldn't do this with two finer people who are both experts in the industry and so committed to racial justice in such a beautiful way. And like you each said earlier, the point isn't to center ourselves. We are here because we are following Black leaders. We're following Black leadership, Black female leadership. And oh my gosh, such a pleasure, Jeff. Such a pleasure, Veronica. Bendora, if you're still here, it was awesome to see you.
Yeah,
JP, it was great to see you today. And
Jamie Pollack is still on.
Is he?
Yeah.
I know he was like radar. Yeah. The important thing is that at no point today is racial justice a thing of the past. It is still needed today. The gaslighting continues, the redlining continues, the microaggressions continue. The race is still correlated with wealth. That artificial, as long as relationships like that still exist, as long as Black people are still being harmed economically, physically, at a rate that that does not correlate with population numbers, right? That's hard evidence that on an individual and systemic level, racism is still alive and well, and justice is love. This is something that Catrice Jackson says, and what we've done here today, and what others have participated in is under her leadership. So thank you all to the journey. The journey is going to last the rest of our lives. And it's been such a great pleasure to spend this part of the journey together with you. And to all of you out there, thank you so much. And onward to the journey.
And thank you, Catrice, for all the things that you're doing to help the community. That's awesome.
Thank you.
Seriously.
Yeah.
Night, everyone.
Bye, everyone.